margin or ELM should be raised by 3%. On the day of the expiry, SEBI says that ELM or extreme loss margin should be further raised by about 5%. SEBI has also recommended various changes, be it on the option strike price side. It has also recommended, collection of upfront premium, options premium by the option buyer, also monitoring of intraday positions when it comes to the options trading, and finally removal of calendar spread benefit on the expiry day for F&O trading. These are various steps which market regulator SEBI has suggested.
Yash, thanks a lot for that update. Now, SEBI Chief Madhavi Puri Booch has also asserted that capital market regulator is working to ensure that a Paytm type of contamination does not afflict the stock markets in the future. She was responding to a question on the need for another round of KYC in addition to the ones done by banks. Listen in to what she had to say.
We not allow a Paytm type of contamination in our market. Okay, so we all saw what happened in Paytm. Now, because in the banking system, there is no KRA type system, so a problem of Paytm stays in Paytm. It doesn't contaminate other banks. But if we allow Paytm to come into our system and then no KRA and then it contaminates the whole system, how can we allow that? So we cannot allow that. So we will always have our KRA sitting in the middle to make sure that things are validated. Otherwise, you can have any one mischievous player coming and contaminating the whole system. We'll not allow that.
Well, time for a short break here on Power Breakfast. Up next, we get you the latest on the updates from the landslide in Kerala's Wayanad. Stay tuned, back on the other side.
I like to ask the UPA government members at that time, did money not go to those 17 states? Did they stop it? Then if they stopped it, they have every business to ask this question. I presume they didn't stop money going to those 17 states because they didn't name it. So when it is one thing for them, it's all right. When the same thing happens somewhere else, no, it's not all right, you've deceived. 17 states were not named in 2004-5. 18 states were not named in 2005-6. 13 states were not named in 2006-7. 16 states were not named in 2007-8. Money didn't go to them. 2008-9, 13 states were not named. 2009-10, 26 states were not named. 26, which means only 2. Sir, oh yes, sir, if we are being blamed that only 2 states were named and the other states are not getting anything, 2009-10 budget had only 2 states, Bihar and Uttar Pradesh, and no other state. What does that mean then? It's all right when you do it. You didn't give money to those states which you didn't name. So, sir, you can't have it both the ways. You do one thing and then you blame the same thing on somebody else. What happens to the states which were not named? I'm asking now, 2009-10, 26 states of India did not have a mention. 2009-10, the full budget, 20 states. Interim budget did not have 26. The full regular budget, 20 states did not have it. So what does that mean, sir? They continue to ignore states. 2010-11, 19 states were ignored. 2011-12, 15 states were ignored, they didn't mention. 12-13, 16 states were ignored. 13-14, 10 states were ignored. So, sir, for that matter, the interim budget of 2014-15 ignored 26 states. Was there a noise? Did people say you ignored those states, you didn't give money?
Kamala.
Hello. Hi.
Hey there.
Oh, hi, you're both together. Oh, it's good to hear you both.
I can't have this phone call without saying to my girl Kamala, I am proud of you. This is going to be historic.
We called to say Michelle and I couldn't be prouder to endorse you and to do everything we can to get you through this election and into the Oval Office.
Oh my goodness. Michelle, Barack, this means so much.
Back with us here on Power Breakfast. Now, the death toll in the series of landslides in Kerala's Wayanad district has climbed up to 143, according to the state's health department, with dozens still missing. The landslides have caused massive destruction to houses and roads, uprooted trees, and led to the water bodies to swell. Efforts to rescue and locate the missing persons are still underway. CNN News 18's Neetu is joining us on the phone line with more updates. Neetu, what are the latest updates that you're picking up?
The death toll is 146 at the moment, of which 143 postmortems have been completed. Throughout the night, the health department has been conducting these postmortems. So about 143 postmortems of those people who lost their lives is over. Now, two areas which have been affected mainly in this landslide. One is the Mundakai area and the other is the Churalmala, the town and the entire area. So to Mundakai, only by about last evening, the rescue workers were able to reach there. The access to Mundakai was a major issue, and that was one of the major issues, the disadvantages that the rescue teams have been facing. The fire department, the NDRF, the army teams, the navy teams, they have all been there. The fire department, fire and rescue personnel, and the NDRF being there from early morning yesterday. But the access to Mundakai had been a major issue. But now this morning, again, the rescue operations have restarted at around 7 a.m. 4 teams, including about 150 rescue personnel, are heading to Mundakai at the moment, to that area. That is where the entire, it's more a village, the entire area has been affected. It's more like washed away. So this is the latest updates we are seeing as far as the Wayanad landslides are concerned.
Neetu, thanks a lot for that update. The death toll there continuing to increase in Wayanad, with rescue operations still underway. But in some more global news updates, Israel claims to have eliminated a senior Hezbollah commander in Beirut's southern suburbs late last evening in what the Israeli military said was a retaliation for a cross-border rocket attack 3 days before that killed 12 children and teenagers. Following the attack, the Israel military said that they would not engage in further strikes immediately. However, Israel's deadly airstrike has heightened fears of a wider conflict in West Asia. And now for some updates from the ongoing Paris Olympics in 2024. Manu Bhaker and Sarabjot Singh clinched a second bronze medal for India in the 10-meter air pistol mixed team shooting event by defeating South Korea. Manu Bhaker has now become the first Indian athlete in the history of independent India to win 2 medals in a single Olympic edition. Bhajan Kaur has also reached the round of 16 in the women's archery individual round event. In rowing, Balraj Panwar finished 5th in the men's singles sculls quarterfinal. The Indians' men hockey team defeated Ireland by 2-0 despite a few defensive lapses to qualify for the quarterfinals of the Paris Olympics. In fact, CNBCTV18's Sanjay Suri is in Paris and he spoke to Sarabjot Singh about the moments leading to the victory.
सरबजोत सिंह ओलंपिक मेडलिस्ट इन शूटिंग ਤੁਹਾਨੂੰ बहुत मुबारक बड़ा सोना निशाना लाया है। ये जो गेम चली, जो आखिरी मैच चला, उसमें कुछ ऊंच नीच आई। जब नीच का समय आए तो कुछ आप नर्वस हुए?
हाँ जी, नर्वस हुआ था बिकॉज मेरा फर्स्ट शॉट अच्छा नहीं निकला तब, एंड उसके बाद फिर थोड़ा हो गया कि हाँ फर्स्ट शॉट था, निकल गया, सेकंड शॉट की प्रिपरेशन कर एंड वो सारा कुछ, उसके बाद काफ़ी अच्छा था मैच।
तो जब आप नर्वस होते हैं, अपने आप को कैसे संभालते हैं?
फर्स्ट बेली ब्रीदिंग और थोड़ी आइज क्लोज करके, यही बस ब्रीदिंग ही करता हूँ, दैट्स इट, और कुछ नहीं है इसके अलावा।
तो शूटिंग के दौरान ही आपने ये सब कर रहे थे?
शूटिंग के दौरान, क्योंकि फर्स्ट शॉट के बाद सेकंड शॉट में टाइम बहुत ज़्यादा होता है, लाइक 1 मिनट, उसी में वो जब अनाउंस करते होते हैं स्कोर, तो उस टाइम पे मैं ब्रीदिंग करता होता हूँ।
अच्छा, ये जो आपने मेडल जीता है, मनु भाकर के साथ जीता है, तो जब आप दोनों मिलकर शूटिंग करते हैं तो इंडिविजुअली करते हैं कि आपका एक समझौता है, एक टीम वर्क है?
इंडिविजुअली, कि हमारी मतलब बात हुई थी आज भी कि दोनों ने अपना बेस्ट देना, और बस इसी में 50-50% होता है दोनों को, कि दोनों ने अपना बेस्ट दिया।
लेकिन भविष्य में आप चाहेंगे कि उनके साथ, मनु के साथ टीम अप करें?
हाँ, वैसे हमारी 2019 से बनी हुई है, नेशनल में भी थी, उसके बाद दोबारा फिर नेशनल में थी, अब इंटरनेशनल भी थी, एक जूनियर वर्ल्ड चैम्पियनशिप, पता नहीं वर्ल्ड कप था वो काफ़ी अच्छा था वो सारा कुछ।
Well, that's a title you would look forward to having next to your name. Olympic medalist for India. That was Sarabjot Singh there in conversation with Sanjay Suri. But with that, it's a wrap on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call takes the action forward.
I'm looking forward to doing this with the two of you, Doug and I both, and getting out there, being on the road. But most of all, I just want to tell you the words you have spoken and the friendship that you have given over all these years mean more than I can express. So thank you both. It means so much. And we're going to have some fun with this too, aren't we?
Hours following Biden's exit, the most for a single day in the 2024 campaign trail. Vice President Kamala Harris hit the ground running with the launch of her 2024 presidential campaign on Sunday.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not an expectation?
There are many areas where a commercial consideration could lead to privatization or disinvestment, and I'm as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening, is our both expectation and policy.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be, government endeavor would be, keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are two other imperatives come in. The other priority needs and fiscal consolidations. It has to be done. There are the trinity which has to be taken care. The other two pieces, and who else have to do the heavy lifting? Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner, that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year. That's what we are expected to do. Next year 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with a different.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBCTV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. Bang in the middle of the week, once again, overcast, rainy Wednesday morning here in Mumbai. And we're going to tell you all you need to know as far as markets go. Lots happening. I'm Prashant, with me and my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel. Well, I think the biggest headline is SEBI cracking down on, F&O trading and the kind of impact that would have on the market, the kind of impact it would have on retail investors. So we're, of course, going to talk about all of that. But apart from that, so much to track today.
Well, it's 31st of July, so make sure you pay your taxes, as well as it's salary day. It's the final day of the month. We're just having a salary discussion, and it's that bright spot of the month.
Okay, well, it's an optimistic way to begin the day, and let's sort of keep it that way, right? Because if you look at cues from overnight, etc., it's not very bright picture. The market here in India once again faced some selling pressure at high levels, and you could sort of largely blame foreigners because they were sellers once again for the last 2 days in cash markets. They've been selling, and the markets now found it a little difficult to move higher. So 25,000 broadly. Day before yesterday on Monday, of course, we got almost to 25. Yesterday fell within 30 points, and then the market corrected. So that's the psychological level, nothing more. But we are facing some resistance there. Now, levels in just a bit, but global first. Equities overnight are lower. So you got the S&P down 0.5%, the Nasdaq down about 1.25%. You had Microsoft earnings which came through. Now, that's a tech bellwether which reported mixed numbers post-market hours. I mean, the last I checked, the stock was down some 3% in after hours. It's not as if the numbers themselves, if you look at consensus, sort of top line, bottom line, they are bad. It's just that the cloud business, Azure, there is a bit of a slowdown there. And that has been the real big growth driver and signaling impact for the rest of the tech space. So keep an eye out on this one. I mean, I think tech generally in Asia, especially in markets like Taiwan, etc., which are very tech heavy, are also trading a little weakish. This is, of course, a big week for other large cap tech companies in the US. Meta will report, Amazon will report, Apple will report through the course of the week. In a couple of hours from now, and I think in the next 1.5 hours, you'll have the Bank of Japan decision. And there was Nikkei, the newspaper Nikkei, which essentially said that the Bank of Japan is likely to weigh a rate hike at today's policy meeting. So again, something which we've discussed. Remember, the yen is cheap, and the big implication of the cheap yen, a cheap currency for the rest of the globe, is essentially the carry trade. Borrow in Japan to fund sort of other sort of high-yielding currencies or high-yielding assets elsewhere in the world. But recently and lately, we've seen a big move on the other way as far as the yen is concerned. So BOJ becomes important. FOMC later today, and we'll react to it tomorrow morning. Again, nothing is expected from this meeting, but the hope is that the Fed will be clear in its signal for a cut in September because data has been weak. And oil it continues to sell off. Another near 1% cut. That makes it about 8% in the last 1 month or so. And now we're under $80, about $79 per barrel. So that's essentially the global sort of cue, which is kind of mixed if you want to take away, if you want to really sort of get the import of the message from the global markets. Now, near-term resistance for the Nifty, I'll start with the upside, is 25, the psychological level. But I think we are headed to 25,337. That's essentially broadly the zone that we've been talking about. Supports come in. You could look at the 40 hourly, but I think we're pretty close to it. The 20-day is, of course, at about 24,500. And I think that is the big one to watch out for. Nifty Bank, actually not just the Nifty Bank, but I think the Nifty as well. It was inside day because the Nifty and the Bank Nifty spent yesterday's session within Monday's range, high to low. Same for Nifty Bank as well, but it held the 40-day exponential moving average here. Monday's high on the upside is important, which needs to be taken out. 52,340, and support for the Nifty Bank comes in at 51,150 and 50,400 and 50,438 levels. These are the two supports on the downside. GIFT Nifty will give you an indication of how the opening is looking like. Flat, absolutely flat, 14, 15 points higher. but there is enough and more in terms of individual stocks, which we will talk about as we go along. Sonia.
Oh, absolutely. And I think all eyes are going to be on the SEBI crackdown on F&O trading. These measures, of course, are positive because these measures are in order to curb speculative trading, but let's see which way it goes. In terms of cues for today, I'm tracking a couple of things. One is the Nifty has been consolidating around the 24,800 mark. So in that sense, we're not getting to the 25,000 level. I guess some amount of patience is required at the moment. Apart from that, domestic institutions are pumping in money thick and fast. So in the last 6 trading sessions, we've seen DIIs buy and trade for 6 days on the trot. And now put together, DIIs have bought 20,000 crores in the month of July so far. I'm watching out for a lot of stocks because post-market hours yesterday, we did get a lot of positive earnings responses as well. Dixon Tech was good. The numbers were above street estimates. In any case, this has been a darling of the market, so expected perhaps to move higher. Torrent Power reported a strong set of numbers, a 23% revenue growth. EBITDA was up almost 60%, so I'm looking at that stock as well. GAIL reported an all-round beat this time. The margins went up 250 basis points on a quarter-on-quarter basis, so that's another stock to look at. Decent earnings from Tata Consumer from the heavyweights, so keep an eye out on that. Lots of auto stocks in focus. Today you have M&M and Maruti that will be reporting their numbers. Tomorrow you have auto sales for the month of July that will be coming through. And finally, we wrap it up on Friday with the Ola IPO that will be opening up. So there's plenty in this space to track. But for now, the GIFT Nifty is suggesting a mildly positive start. And of course, all of these curbs on speculative trading, on F&O trading is something that the street is going to watch very closely.
Well, on the SEBI's consultation paper, I would just say that, I compare it to someone going to the gym and working out hard and ultimately developing a good body. Or someone who's taking some steroids and then developing it. I think SEBI thinks that it's time maybe the person is taking too much of steroids. So ultimately the body is going to be strong. But let's curb it at the right spot. So I think that's my limited point with regard to this consultation paper. But a big day of trade coming up. Though yesterday you'll say, well, we were set for around 25,000 yet again. But we didn't get to that mark. Well, one potential reason could be the Nifty Financial Services Index, but it played out the weekly expiry yesterday. So that's why in the last hour of trade, you did see it come off the top. That could be the reason why, in fact, the Nifty couldn't make it to the 25,000 odd mark. And you saw banks as well as other financial companies that did come off because the financial services index includes some insurance companies as well as some NBFCs. Well, buy on dips is likely to continue on the Nifty itself till that 20 DMA is held out. I'll give you the level in just a bit. While on the Nifty Bank today, you expect some more volatility because it plays out the monthly expiry. So keep an eye out on that one. Second half of trade becomes extremely crucial for this one. The FIs in the F&O market didn't change much. They added some longs. In fact, they covered some shorts as well. So they didn't move the needle very, very much. And as we've been telling you, the FI net long positions holds at around 1.5 lakh contracts. The client net short positions is at around 50,000 contracts. So that's just for hygiene, which is going through those data points because there was no big change in comparison to the previous day. The options data, 24,900 call, 24,900 put, fairly active in yesterday's trade. And you put that premium between them together, it's close to around 200 rupees, which tells you if there's a strategy in place, they're looking to defend this broad level. 200 rupees added to 24,900 and deducted from 24,900, which you get the range then. 24,700 on the downside, the 25,100 odd on the upside. That seems to be the near-term range. This is for the contracts that expire tomorrow. The 20 DMA, that's the line in the sand for the Nifty, so we'll have to keep an eye out on that level as well. The Nifty Bank, yet again, it made a higher low in yesterday's trading session. So earlier it was making, lower lows on a day-to-day. So that's a little bit encouraging. But the levels you're looking at on the Nifty Bank, currently it's between the 20 as well as the 50 DMA. So the 50 DMA becomes very, very crucial on the downside. That's the support level. And you wanted to get closer to around the 20 DMA and take that out. That's at around 52,300 odds. So the Nifty Bank will be the mover today. Those are the crucial levels that you should be looking at. The stock that I'm looking at is Voltas. Yesterday, it went very close to making a fresh all-time high. It almost went there yesterday. So that's the important mark we're looking at. But I think there is a bit of an uptrend that's in the works with regard to Voltas till that 20 DMA is held out. So keep an eye out on that stock. It's been strong in the last few weeks.
Okay, thanks a lot for that. Well, let's kickstart with some opinion coming through on the equities market. We have first up Surendra Goyal of Citi, who says that earnings so far in Q1 are largely in line with estimates, excluding the OMCs. versus the significant beat trends that we saw in the 4 quarters of FY24, with EBITDA to profit after tax growth at 7% year-on-year. He says Nifty EBITDA growth stands at 1% and profit after tax growth stands at 3%. Among sectors, he says industrials have delivered an earnings beat, while energy is among the key misses so far. Surendra says the consensus EPS revision trends so far this earnings season are flat, with modestly higher number of downgrades versus upgrades. He says Citi's June 2025 Nifty target is at 24,400.
Okay, we have, this is the view coming in from Pankaj Chitlangia, First Basis, who says that fortnightly chart of the USD INR indicates a mildly bullish trend, indicating a potential attempt to break the pattern resistance line at 83.9. He says if successful, this could pave the way towards 84.25 level in the coming days, and weekly support is around 83.55, which should cushion any dips. However, he adds, considering the ongoing weakness in the US dollar index, which may persist following the FOMC meeting this week, any upward movement in the currency pair, that is USD INR, is only expected to be very gradual.
And on the bonds, Neeraj Gambhir of Access Bank says that short-term bond yields eased post-downward revision in short-term borrowings in the budget. Additionally, he says latest draft guidelines on the Basel III framework for liquidity coverage ratio further increase the short-term bond demand. He says the RBI announced that new GSEC issuances in the 14-year and 30-year tenors would not form part of par securities, causing the yield curve to steepen. He expects the 10-year benchmark bond yield to take cues from the FOMC outcome and trade in a range of 6.87 to 6.97% for the coming week.
Well, we've got a lot of stock-specific action to track for you in our special top 10 segment. So let's run you through the list. We'll look at Tata Consumer, GAIL, Indus Towers, Macrotech Developers, Jindal Stainless, Torrent Power and Dixon Technologies. All of them will be reacting to positive news flow, while we have 3 of them that will be reacting to negative news. Navin Fluorine, RR Kabel, as well as Star Health. Well, for the time being, we slip into a short break. You come back, we'll continue our focus on markets and the global markets in particular. Chetan Seth, equity strategist at Nomura, will be joining us.
If we are talking about 3% plus to go to capital expenditure, we are still, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also government of India provides.
Okay, well, let's get some global perspective in. We have Chetan Sheth, equity strategist at Nomura, who's joining in. Chetan, great to have you with us here. Good morning. Thanks for your time. Now, it looks like maybe except the market here in India, sentiment around the world, even in some of the better performing markets, is cracking a little bit, or lately has been a bit fragile. No such problems here in India, Chetan. Your thoughts on sort of the sentiment out there in some of these better performing markets?
Yeah, actually, that's absolutely correct. Actually, if you look at since 10th of July, when we got the US soft CPI, I mean, there's been a bit of a rotation in the markets, and what's happened at least in the global markets front, especially in the US, we've seen tech stocks actually underperforming, some of the small cap stocks actually outperforming, and overall net market is actually down because the weakness in the tech stocks has been a bigger force than the outperformance of the small cap indices in the US. And similar thing we've also noticed in some of the large tech heavy markets in Asia, such as Korea and Taiwan. And as you rightly said, India has been, I would say, what I say is very well behaved that way. So remains to be seen whether some of the domestic flows and foreign flows start getting impacted in the next few days, which leads to some bit of softness in Indian equity markets as well.
Chetan, hi, good morning, and thanks for joining in. So what is the approach now as we head into perhaps a period when most global central banks and our own central bank may begin the rate cutting cycle? How does one approach Indian markets, especially with the markets at record highs?
Yeah, so our multi-month view, at least towards beginning of November, which is when we have the US elections, our view is that, look, maybe you'll see a little bit of more positive momentum, over the course of next few weeks. Once some of these big events that we have this week are out of the way, But as we approach US elections, I think volatility will likely pick up because there's huge uncertainty as far as what the US elections will hold out for markets. And I think that may also weigh on India markets. So if you just look at our index target from Nomura's India team for Nifty, it's 24,860, which is precisely where the index is. So which means that from here, from now until end of this year, I mean, returns are likely to be muted, probably flat. But remember, that's a point in time estimate. You know, we could potentially overshoot. But this week is huge. I mean, in the next couple of hours, we'll have the BOJ. Normally for Asia, ex-Japan markets, it's not a big event, but there's been a lot of focus on the unwinding of some of these crowded yen shorts, which potentially are also weighing on stocks. So that's huge. Then we have FOMC midnight our time or like early morning tomorrow Asia, and then we have the all-important non-farm payrolls. So these are the three key events which we need to keep an eye on. And you know, once these events are out, assumingly there's no big surprises here, maybe the market can move back to some of the earlier themes.
Okay, all right. Hi, Chetan. Good morning. So India is at fair levels as per your, as per Nomura. But let's talk about the big events, the central bankers. What are you expecting from the Bank of Japan? You know, there are reports that indicate they'll tinker around with the rates. And also with regard to the Fed, how many rate cuts are you all pricing in from September onwards?
Yeah. So as far as BOJ is concerned, I think it's going to be a very close call. As you may have noticed overnight, there has been some news reports, or you could call it leaks from Japanese media suggesting that the BOJ may actually look at hiking. Now, Nomura economists are not actually expecting a hike, at least in the base case. But there are, you know, we're not ruling out a potential hike today. I mean, the most important question is what happens to the yen. Let's say if the BOJ comes out hawkish relative to expectations, and then there's further appreciation of the yen, i.e., some of the unwinding of crowded shorts. I mean, that may put potentially more downward pressure on stocks. I think so. The yen moves are quite important. As far as FOMC is concerned, our baseline view is it's not going to be a very eventful FOMC, but you always have to keep an eye on what the Fed has to say. Our baseline view is that this year we'll potentially see 2 rate cuts, once in September and the other one in December. If you look at the market odds or the market probability, I think pretty much the market is already pricing in September. I mean, the key question is whether Chair Powell gives us a clear signal on the September rate cut, and our sense is probably will not get clear signals. I think they'll just keep it open and, you know, continue to reiterate that, look, we're going to be data dependent and it all depends on forthcoming data. But baseline view for us is September is when we can potentially see a rate cut from the Fed.
Okay, September is when we can potentially see a rate cut from the Fed. I think that seems to be the consensus view right now. Thanks a lot, Chetan. Appreciate your time here on CNBC TV18. Well, let's step into a quick commercial break. On the other side of the break, our list of top 10 stocks is lined up with our entire research team. Keep it with CNBC TV18.
Others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal investing.
Welcome back to Bazaar Morning Call. Plenty of stocks to talk about. Our entire team is joining in to give us that list. First up, Tata Consumers came out with their numbers. Mangalam is here to tell us how the numbers looked. Mangalam, good morning.
Good morning. So these numbers were not very different from what the street was anticipating, at least on the top line as well as the EBITDA. So revenue came in at around 4350 crores. The street was working with a number of 4370 crores. The EBITDA as well, 667 crores, a little above street expectations of 655 crores as well. The net profit, that came in at 290 crores versus expectations of 326 crores. Anyway, there was a moderation expected because of higher finance costs and depreciation, and that's exactly what happened. So finance costs came in at around 94 crores, depreciation higher, and that is because, one, they raised some debt to fund the acquisitions of Capital Foods and Organic India, And secondly, because of these assets coming into the balance sheet, the depreciation increased as well. In key geographies, the India beverages business grew 6% with 1% volume growth. Again, Street was anticipating that. Foods business grew 14% on an organic basis. The expected range was 13 to 15%. And international business too grew 10% versus expectations of 10 to 11% as well. Strong performance coming in from Sampann and salt business. However, Narishco was a weak point in the numbers with a 7% growth impacted by harsh summer. So that's something that we'll be monitoring. On Capital Foods and Organic India, the business did close to around 235 crores in the first full quarter versus expectations of around 210, 220 crores as well. So commentary is that everything is online going forward as far as the expansion is concerned. See some green on Tata Consumer today.
Okay, green on Tata Consumer. Thanks for that, Mangalam. Sonal, what about GAIL? Good set of numbers?
Oh yes, it was a strong set, much better than what the street was working with. It's the fourth consecutive quarter of beat that the company has reported. Revenues were up 4% sequentially, EBITDA up 27%. There was a margin expansion to the tune of 240 basis points, leading to a profit uptick of 25%. Across the board, there was good performance, but major outperformance came in from the transmission and the natural gas marketing segment. The EBIT will come up for you on the screen. EBIT for transmission of natural gas was came in at 1,500 crore rupees. Petchem, however, disappointed this time, where EBIT was a loss this time of 41 crore rupees versus an expectation of a profit. But overall, it was a good set. Expect green on the stock today.
All right, Sonal, thanks very much for that. Indus Towers is going to be in focus as well. Rima is here to tell us why. The buyback numbers. Rima, take it away.
Well, let's start with the numbers then. There is a beat on the company's margins. Margins have positively surprised because the company has reversed provisions linked to Vodafone Idea, and that reversal boosted their margins by 760 crore rupees. That explains why we've seen the margins jump up to levels of 61.6%. However, if you remove the adjustment because of the provisions, then the margins would be on the lower side, and even the tower addition that you typically see on a quarter-on-quarter basis has slowed down compared to the average of the last 4 quarters. But the buyback could support. The board has approved a buyback of 2,640 crore at a price of 465 rupees per share. That's 2.1% of the equity. The release states clearly that the promoter Bharti Airtel is not going to participate in the buyback, which means if it's fully tendered, if the buyback is successful, then Bharti Airtel's stake consolidates above 50%. So that's a positive for Bharti Airtel because they get to consolidate Indus Towers without having to spend any money to acquire that stake. Back to you.
Okay, thanks a lot for that. Well, moving on, Macrotech Developers and Navin Fluorine will also be in focus this morning. Sonal is here to tell us why. Sonal, over to you. Well, let me start with Navin Fluorine. It was expected to be better sequentially, but that hasn't happened. So it was a weak set. On a YOY basis, revenues are up 6.5%, but EBITDA has declined 12%. Margins have come in at 19.2% versus 23%, and profits have declined by 17% as well. It was the specialty chemicals business where we saw a decline this time. So while for HPP, the revenues were up 66%, it did well. Specialty chemicals revenues were down 30%, and CDMO revenues were down 13% as well. So going with red on this one, for Macrotech, we did already know a lot of the operational numbers because of their operational update. If we look at the debt, it has increased on a quarter-on-quarter basis to 4,320 crore rupees. Company says it is because of higher investments that they've been making in growth projects. The price growth has come at 2% sequentially. They've also given their guidance where they expect pre-sales of 17,500 crore rupees, cash flows of 6,500 crore rupees, and new project additions of 21,000 crore rupees in FY25.
Okay, thanks for that, Sonal. Well, Vivek, tell us about Torrent Power.
Well, a good set of numbers by Torrent Power, also aided by the fact that the company ran all of its gas power plants under Section 11. So strong merchant sales was something that the company saw, aided by running plants under Section 11, and also strong power demand actually aided the growth. On a year-on-year basis, the numbers are quite strong. Revenues higher by 23.3%, coming in over the 9,030 crore mark. EBITDA higher by 57%, margins to expanding almost 400 basis points, and profitability higher by 87%. Now, talking about the PLF, thermal PLFs coming in very strong, 60.4 versus 39.6, but you're talking about wind as well as solar PLF, both of them dipped on a year-on-year basis. Segment revenues, generation revenues actually went higher by 65%, and the company said that increased contribution from merchant power sales is something in the gas-based power plants that enabled a strong growth as far as that particular segment was concerned, and also increased contribution from the licensed distributing businesses. Overall, a strong set of numbers aided by running plants under Section 11.
Okay, that's from Torrent Power. A strong set of numbers coming through. Power generation revenues gone up 65%. as Vivek was pointing out. Well, Upasana is with us to talk about Dixon Tech and RR Kabel. Upasana, over to you.
Good morning. Thanks so much for that. First up, let me start with Dixon Technologies. The company reported a strong set of numbers, and the beat was largely driven by company's strong performance in its mobile and EMS segment. Coming to revenues of the company, they stood at 6,580 crores, which was above our poll estimate of 5,325 crores. Company's EBITDA margin stood at 3.8%, which was in line with our poll estimate of 3.9%. Company's PAT stood at 140 crores, which was above our poll estimate of 115 crores. Now, coming to company's key growth driver segment, that is mobile and EMS segment, the revenue saw an uptick of 189% on a YoY basis, and margins also expanded sharply from 2.9% to 3.3% on a YoY basis. Next up is RR Kabel. The company reported a weak set of numbers. The revenue saw an uptick of almost 13% on a YoY basis, while the margins dipped sharply from 7.1% to 5.3%. Now, company's main segment, that is wires and cables, margins dipped by 160 basis points at 7.2%, leading to an overall dip in the margins. Now, margins were under pressure mainly due to volatility in the raw material prices. Coming to company's profit, it stood at 64 crores with a downtick of almost 14% on a YoY basis.
All right. Thanks very much for that. We have the management of Dixon joining us a little later at 9:30. Saurabh Gupta, CFO of the company, will shed light on the numbers and the outlook forward. I mean, of course, their FY25 guidance numbers are very strong, and the Q1 numbers lend support to that overall big view. Well, that's Dixon later, but Star Health also reported numbers, largest standalone private health insurer. Yash is here with details. Yash.
Well, Prashant, I'm going with red for Star Health Insurance because there's a little bit of negative bias when it comes to the numbers for the first quarter. The total net earned premium for the company has grown at 16%, came in at about 3,500 crore rupees. Underwriting profits are down by about 4%. That came in at about 140 crore rupees. And there's not much that has happened on operating profit also, which grew just at about 7%, despite the total income growing as much as 16%. Now, what I'm particularly concerned about here is the combined ratio, which was up 134 basis points, came in at a 97.8% versus 99.14%. And the trend over the last 2-3 years is also concerning. FY23, 95.3, FY24, 96.7, and again now at 99 levels. That's what's concerning, and that's why I'm going with red on Star Health Insurance.
Okay, thanks for that, Yash. Well, I'm focusing on Jindal Stainless. The numbers actually were good, given that pricing is weak. That's why they delivered a degrowth on the top line. But the operating profit came in higher. That's telling you that margins, in fact, did see some bit of expansion. The net profit, though, was lower because finance cost has gone up because they're taking various expansion plans. The positive is the standalone EBITDA per ton in Q4 FY24 got hit because a couple of one-offs with regard to their raw material costs. Now it's bounced back closer to around that 17,400 rupee odd mark. It remains to be seen whether it can get back to around 20,000. So that's a positive, though. And the net debt has moved up, both at JUSL, which is the wholly owned subsidiary, as well as the standalone entity. But as I said, because of the capex they're taking underway, we'll have the management with us exclusively here on CNBCTV18 at around 10:30 a.m. So you stay tuned to that conversation as well. Well, let's do a quick recap of all the top stocks that we covered. The ones with positive news flow to Tata Consumer, GAIL, Indus Towers, Macrotech Developers, Jindal Stainless, Torrent Power, as well as Dixon Tech. The ones with negative news flow, Navin Fluorine, RR Kabel, and Star Health. Time to take a snappy break. We come back. Devin Choksi is waiting for us on the other side to get some fundamental analysis going.
That can be maintained, that will be a good achievement.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your returns. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you have earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
Welcome back. Well, Devin Choksi, Managing Director at DR Choksi, joins us on the show. Hi, Devin. Good morning and good to see you. And as always, Devin, let's get some fundamental analysis going. And I wanted to ask you about Indus Towers. You know, people were debating whether or not Vodafone will survive or not. Probably the better way to play it would be Indus Towers, you know, because that one, in fact, has given a smooth 50% in the similar duration. Now the numbers have come out and also they are showing some faith by announcing a buyback, which could support the stock. What's your view on the stock at these prices of around 440, 450 levels?
Good morning, Nigel. Well, on one side, I think the fundamental story is intact. On the other side, I think there was a balance sheet issue in form of, I think, the receivables. Now, if this issue is getting addressed, then probably I think the valuation is not expensive at current levels. And that could be, I think, a possibility of investors re-looking at this particular company afresh into the portfolio. As I mentioned, I think from the business perspective, I think the business model, I think, remains intact as far as the company is concerned. Sooner they address this balance sheet issue on the receivable side, I think that would be probably the game changer as far as I think the new investment opportunity goes in this company. Valuation-wise, very comfortable at this level.
Okay. Well, there are so many stocks that I want to talk to you about, Devin. But, you know, first, a couple of these good set of numbers that came through, right? Whether it was Dixon Tech, whether it was Torrent Power, Gale, Tata Consumer, all reported good set of numbers this time. Which one would be your pick of the pack now in terms of long-term investment?
Hi, Sonia. Good morning. Well, I believe, I think the Tata Consumer remains one of the favorites, I think, as far as the value pick is concerned. However, I think valuation-wise, this stock is fully priced currently, as I see it. Though we continue to hold, that may be a disclaimer too. But the fact remains that I think this company looks relatively more stable from the visibility point of view, as far as I think the business is concerned. Be it a beverage business or be it, I think, the new food packaging business or the food business, which they are basically trying to grow in a systematic manner. I believe that I think this company has a significantly high level of, I think, visibility at this point of time. So maybe I think any price correction, meaningful price correction, if at all, then it would be a good buy opportunity into this company.
Okay, so that is on Tata Consumer. Got it. We also have a lot of auto companies that will be in focus. There's Maruti, M&M numbers today. There's Tata Motors numbers tomorrow. The auto sales as well. What would your pick be from this entire space now, Devin?
So I think continues to remain very positive about the commercial vehicle and the prospects therein. So companies like Tata Motors, Ashok Leyland, they remain relatively more comfortable in our portfolio. All this while I think we have been, I think, extremely convinced about the commercial vehicle story unfolding. And possibly I think that is getting validated now in the marketplace. We believe that I think the story is, I think, having a long way to go, probably another 2-3 years time. And you will see, I think, some of the larger game plans emerging from companies like Tata Motors. So we are comfortable holding on to the company. Of course, I think today the market is probably valuing the company better than what it was yesterday. So from that point of view, I believe that I think one will have to buy when the market gives correction. Otherwise, I think the story is convincing in Tata Motors and likes of Bajaj Auto in two-wheeler space.
Okay, all right. David, the other number that actually stood out was GAIL. Sonal was just telling us that those numbers looked quite good. What's your view on the stock?
Nigel, haven't looked into the numbers, I think, in a while for some time now, I think, in this company. So maybe I think we'll study it and then probably make a view on the company.
Devin, shorter conversation today, but appreciate you coming in as always here. Thank you very much for joining us. We'll take a break here and we focus on the big story, which is, of course, SEBI's proposed curbs on F&O trading action. Rajesh Baheti, Managing Director at Crosseys Capital Services, will discuss this in some detail in just a bit.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived.
2050.
Welcome back. Well, let's welcome our technical experts onto the show. We have Sudarshan Shukani, who joins us on the show, and with him, we also have Mitesh Thakkar. Good morning, gentlemen. Thanks a lot for joining in. Well, Mitesh, you go first. Yesterday, we were discussing on closing bell as well. 25,000 was almost there, but the Nifty Financial Services Index played out weekly expiry, which pulled us back a little bit. What's your view on the Nifty first up? Mitesh, you're on mute. We would like to hear you.
Apologies for that. Good morning. My idea is that, we have now seen the test of 25,000 on 2-3 occasions and failed to register breakout. So fresh longs should be invited only above 25,000. So wait for the markets to get past, show some strength, or else buy and declines. I think that's the idea to trade in a market which is uptrending, but, slightly facing some supply at a pivot level. So either you buy around 24,700 or you buy on a breakout of 25,000 and then trade the index. Avoid the bank nifty, as you are rightly highlighting that the financial services index, the entire financial space does seem like slightly shaky. A couple of charts are good, but overall I think the feel of the indices is marginally on the negative side. So I would avoid the banking index and focus on IT stocks or FMCG stocks, etc.
Sudarshan Sukhani is also with us. Sudarshan, hi, good morning. What is your view on the index itself? Because we've seen this market, sort of see higher tops and higher bottoms for a while now. What's the expectation today and what are the individual stocks you're looking at?
Sure, good morning. See, the expectation is that the market is entering into a trading range finally, and that's going to be a wide trading range. So every dip in the market is a buying opportunity, and a rally towards 25,000 would be an exit. So this 100-150 point trade is possible probably on a day or an alternate day basis, depending on where you get the dip. So for today also, if you get an intraday dip, go and buy the Nifty. The Bank Nifty can be left alone, and then look for an exit if you see a decent rally on the upside to around 25,000. That's around 25,000. I also have my 2 bits on that F&O issue that's going on. 25 years ago, when the Badla system was stopped, the BSE said that the whole world is coming to an end. It did not. The markets doubled and then increased 100 times. So this doomsday scenario doesn't impress me. There are good reasons, I'm sure, that SEBI is doing it. I don't think anything will happen.
Okay, all right. Thanks for that, Sudarshan. Let's get to the stocks then. Sudarshan, tell us what are the stocks you're tracking?
All right. Bajaj Finserv is a buy with a stop under 1566. Overall Reality is a buy with a stop under 1692. There is a buy list. There is nothing too short. Tata Chemicals is a buy with a stop under 1050, and UPL is a buy with a stop under 530.
All right, Mitesh, what about you? Fill us in with your picks.
I have a mix of buys and sells today. Adani Enterprises, after a long time, comes on the buy side. Stop at 3070, a target of 3250. And good breakout was seen in the charts of GNFC yesterday. So buy here. Keep a stop at 694. Look for targets of 755. Excite looks like to be giving some profits off, and there's some setup when the stock is overbought and now suggesting a pullback. So sell here with a stop at 540 for targets of 510, and Grasim is a sell with a stop at 2830 for targets of 2720.
Okay, let's take a quick commercial break on that note. On the other side of the break, we'll come back with the pre-opening rates. We will also connect with Venkatraman Srinivasan, chairman of E-Mudhra, to discuss their Q1 earnings. Stay tuned.
With new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
I would like to humbly state this. I'm sure all the members know that in a budget speech, if a state is not named, it doesn't mean that no money goes to them. And therefore, that was a misleading campaign, which, being in the opposition, unfortunately, a lot of members did speak about. It pains me to know. It pains me to know that they could say that if you're not mentioned in the budget speech, your state gets nothing at all. I'm picking up on the budget speeches since 2004-5, 5-6, 6-7, 2007-8, and so on, sir. 2004-5 budget did not take the name of 17 states. I like to ask the UPA government members at that time, did money not go to those 17 states? Did they stop it? Then if they stopped it, they have every business to ask this question. I presume they didn't stop money going to those 17 states because they didn't name it. So when it is one thing for them, it's all right. When the same thing happens somewhere else, no, it's not all right, you've deceived. 17 states were not named in 2004-5.
Welcome back. This is Open Exchange. We're coming to you live from the CNBC TV18 Motilal Oswal studio. Well, we're almost getting into market open, so it's a good time to get you some derivative strategies. Rajesh Palvia, Vice President Technical and Derivative Research at Access Securities, joins us. Hi, Rajesh. Good morning. Good to see you. Run us through your strategy both on the index as well as individual stocks.
Good morning, Nigel. So Nifty is struggling to cross the 25,000 level. We have attempted to almost around those level, but still call writers are there for 25,000 strike at this juncture. So looking at the data setup, 25,000 may act as a immediate supply zone for at least for this weekly expiry. Overall structure is bullish, and we do believe that, yes, sooner or later we are able to take out about 25,000 level also, and possible rally can extend to 25,300 also, as the put base has already shifted up. 24,800 has attracted a major put writing activity at this juncture. So 24,700 to 800 is a important support area for this near-term trend for the market. So we do believe that, if you get any opportunity around 24,800, 24,750 zone is a buying opportunity in the market to hold long position. Keep your stop loss around 24,700 to hold position on the long side. To play this up move, we believe that, one can look to buy 24,800 strike price call option at 146 rupees. And we are projecting target for this call option towards 210 to 215. Your stop loss should be placed at around 105. Bank Nifty is still struggling to cross 52,000 mark, which is very important call concentration area for Bank Nifty. Until the Bank Nifty not crosses those level, we may see some consolidation in range of 51,000 to 52,000 would be the possible range for next couple of trading session. Either side breakout or breakdown will decide the major direction for Bank Nifty from here onwards. But overall structure for Bank Nifty is also on the bullish side. So buy on dips is the strategy. Your stop loss should be placed at around 50,900 to hold long position in the Bank Nifty also. On the stocks front, from chemical basket, Aarti Industry is looking very promising. The way stock managed to give breakout of falling trend line on a daily chart, long built up is there on the derivative data. So we believe that, Aarti Industry can continue furthermore upside. Possible target for the stock we can see towards 770 to 780. Your stop loss should be placed at around 718. The second stock we like from the oil and gas sector, that is BPCL. Stock managed to break out of its previous multiple supply zone. The way stock has formed a long built-up setup on the derivative data, we believe that BPCL may exhibit good amount of rally from here onward. Possible target we can see towards 370 to 375. Your stop loss should be placed at around 338. And the third stock that we like is GMR Airport. Stock again, managed to breakout almost above 100 rupees on a derivative side. The way stock has shown buying interest in the previous day, we believe that here we can see a continuation of up move. Possible target for GMR Airport we can see towards 108 to 110. Your stop loss should be placed at around 96 rupees.
Okay, all right. Rajesh, thank you very much for joining us. Good to get those ideas from you. I just want to quickly take note of the pre-open session and a few stocks, and then we'll go across to our management. The Nifty will come up. I think there was a really wild higher start, which was showing, but that settled down now, rightly so. 15 points down in the Nifty. But let's straight away look at the BSE, Bombay Stock Exchange. The exchange which is perhaps going to be impacted. MCX, I don't think there is any impact at all. But BSE, because of the consultation paper, stock starting about 4% lower. But this is just the first couple of minutes of trade. And then we'll also look at maybe, other Angel, which is a very highly liquid broking name, and maybe Motilal, MK, IIFL. There are a bunch of these which are listed out there, but not very. Angel is the only one, and Motilal maybe. Just two which are actively and are liquid as well. Motilal is flattish, slightly higher. Angel is down, and BSE is the other one which is taking a bit of a hit. This is a consultation paper, remember, and feedback till the 20th of August, and final rules only after that. But you heard from Rajesh Baheti earlier on the implications here for the market overall, market volumes overall, if some of this were to go through. But as promised, let's focus on the management. E-Mudhra is with us today.
Yes, E-Mudhra is the company. It is a licensed certifying authority involved in issuing digital signature certificates in India. Their Q1 performance has been quite slow, with a decline in revenues and profits, while the margins also contracted. To discuss more about the company's performance, we have Venkatraman Srinivasan, the chairman at E-Mudhra, who joins in. Mr. Srinivasan, good morning, and thanks a lot for joining in. It's good to speak to you. The start of the year has been very slow if you look at what your past growth rates have been, right? Q1, your revenue growth was at just 16% versus a growth of almost 50% in FY24. So there's a marked slowdown. Can you tell us what was the reason for that? And about the way forward in Q2, Q3, what kind of reasonable growth rates can we expect on the top line?
Yeah, if you see this first quarter, around April middle, the Controller of Certifying Authority came with a guideline that effective from July, no DSE stocks should be sold. So it should be sold directly to the end consumer, and every single DSE they have to pay directly, and then we have to invoice to them. So that was the rule that was passed in April. So with the result, what happened?
All right, Mr. Srinivasan, we'll just fix that audio, and we want to hear out what you're saying. For the time being, we just take stock of what's going on with the markets. A mild positive tick is what we're seeing early this morning. A few stocks that are in focus. You have Vedanta, that's a little bit higher because that path towards the demerger is taking shape. So that's one of the stocks that's up close to 100%. Tata Steel comes out with its set of numbers, so that stock as well is holding higher. ITC tomorrow will be coming out with its set of numbers, so that stock is well in focus. And Suzlon, now a 70 rupee stock with massive volumes in pre-open. What a dream run that stock has had as well. So those are the few big movers. For the time being, we're still getting very, very initial rates. Moil is up more than 5%. Last quarter's numbers were good. The problem is this quarter may not be that good because they've taken some price cuts as well. So that's another one we're looking at.
Okay, so in pre-opening, I think there are plenty of stocks which are looking really good, right? I mean, I just want to take a look at GAIL. It's the fourth straight quarter of an earnings beat for GAIL. So that one is up almost 3% right now. Torrent Power is the other one. Very good set of numbers, 23% revenue growth. EBITDA is up 56% for Torrent Power. And that one has been a favorite of the market for a while. So Torrent Power, let's just get that up on board. And of course, then you have, okay, look at that, 6% higher on Torrent Power this morning. And then you have Dixon Tech, the mobile and the EMS segment earnings have been very strong. It's been almost a 68, I think 70% growth quarter on quarter that they've seen in this particular segment. And on the flip side, something like a Navin Fluorine saw a big miss this time. There was a big decline in margins and profitability for the company. So that one perhaps could be under a bit of pressure. But we have Mr. Srinivasan, who is the chairman at E-Mudhra, who joins us now. Mr. Srinivasan, apologies, there was some issue with the audio, but just getting back to the business, growth has been very slow, as we were just discussing. Going forward, can you expect 20%, 25% growth in Q2 and Q3? Or do you think that it could continue to be in the range that you've seen in the first quarter?
No, the first quarter was mainly affected due to the change in guideline by the Controller of Certifying Authority, where they said the stock should not be sold from effective July only. Individually it has to be sold. So with the result, all the partners stopped buying the stock, and then they were trying to exhaust their stock, and only for need they bought. So that's why the digital signature itself, that segment itself almost came down by 6 to 7 crore in that quarter. Then the other thing is also because of the elections, some of the government projects and all that, they could not come to any decision and all that. So that's why, especially this first quarter, got a little affected. But we continue to feel that whatever guidance we gave earlier of around achieving this 25 to 30% growth with a net profit margin of around 18 to 20%, that will still hold good, and we should be able to achieve. Because we have a good order book position and all that. Now that from July 15th, the new guideline has come, the customer has started buying, and the prices have also increased. So with all these things, we should be able to do that. So whatever guidance we gave earlier, we should be able to continue to do.
Okay, 25 to 30% growth for the year, right, sir?
Yes.
Okay, and margins will hold steady at around 30%?
What is it?
Margins, the profitability, EBITDA margins?
Yeah, right. 30% and PAT margin around. Because now even in Dubai, which was our key market, the tax hasn't been introduced. So with the result, the net profit could go to 18-19%. But otherwise, EBITDA will be definitely 30%.
Okay, got it. And could you tell us the cash in your books? What is it at? And you've done some inorganic growth as well. So how do you expect that to scale up?
Almost we have some 190 crores of cash is there. So on that, the inorganic growth, what we have to pursue is about 80-85 crore, which was in the QAP that was budgeted. So even after that, 100 crore cash definitely will be there. And then the collection also, once it improves, so there will be further cash.
All right. Thanks a lot for joining in. Appreciate your time here. Well, let's get back to the markets now. It's 9:10. So Sudarshan Sukhani is back with us. Sudarshan, what's the 9:10 call?
Consider buying Bajaj Finserv with a stop under 1566.
Okay. And Mitesh, what about you?
I'll go with a buy on, a sell on Grasim stop at 28.30 for targets of 27.20.
Okay, let's also talk about some of the big movers in trade. GAIL definitely is one of them. Navin Fluorine, though, is on the downside. Sonal is here to tell us more about both these stocks. Sonal, over to you.
Well, yes, let me start with GAIL. It was a top-down beat, the fourth consecutive quarter of beat that we've seen versus our poll. Margins up 240 basis points on a quarter-on-quarter basis to come in at 13.4%, and this compares with an estimate of 11.1%. The profits also have come in at 2,723 crore rupees versus a poll of 2,334 crore rupees. Beat was led by the natural gas transmission and gas marketing segment this time around. So the transmission natural gas EBIT came in at 1447 crore rupees versus 982 crore rupees, and natural gas marketing segment came in at 2032 crore rupees versus 1389 crore rupees. Citi has a buy call on the same. They have a target price of 250 rupees a share. They say company reported a solid quarter one and it was 33% ahead of estimates. Petchem and LPG were weaker than expectations. For Navin Fluorine, it was a weak set. The revenues were down this time around. Margins were down 410 basis points at 19.2%. Quarter-on-quarter revenues were down 13%, EBITDA was down 9%, and profits were down 27% as well. The specialty chemicals segment, that did not do so well. Their revenues were down 30% on a YOY basis, and company said sales were impacted by inventory rationalization. CDMO saw a revenue decline of 13%, and the company says order visibility here is improving. Morgan Stanley has an underweight with a target price of 2,633. They say it's another subdued quarter, and it implies more recalibration of recovery glide path. Jefferies has downgraded the stock to an underperform. They say the new agrochem plant, which could add 20% to FY25 revenues, has been further delayed, and that could be negative for the stock.
All right. Thanks very much, Sonal, for that. So that's Navin Fluorine for you. But let's go back to the impact on market volumes and consequently exchanges and market intermediaries because of the proposed consultation, the proposals on F&O trading. Vamakshi is here with details. Vamakshi.
Well, absolutely. Jeffrey believes that SEBI's new rule directly impacts nearly 35% of F&O premiums. And in fact, they believe that spillover of trading activity from these contracts into some of the remaining products could, however, limit the impact to 20 to 25%. Phased hikes in lot sizes by almost 3 to 4 times and margin hike near expiry could impact retail tailors. They believe that the impact on players could be divergent. Exchanges and retail-focused brokers will be most impacted from the proposed changes. This includes the likes of Angel One, BSE, MCX, MOFSL, IIFL Securities as well as ICICI Securities. For BSE especially, they believe that the removal of the BankX weekly contract can impact EPS by almost 79% from FY25 to 27. The impact is expected to be low for depositories like CDSL as well as NSDL. Clearing members like Novama, which cater to institutional players, which are less impacted but could see some second order impact as well. No impact is expected for wealth managers, EMCs as well as RTS. So keep an eye out on all of these counters.
All right. Vamakshi, thank you very much for that. Market opening coming up in a couple of seconds from now. We'll take stock of what the indices are looking like. And of course, we'll drill down to individual names as well. So, a flattish start is what is I think expected. A 30-point higher start is the gift on the pre-open session is where we've left off at. Some of the big names, of course, will be on the market intermediary side. Navin Fluorine perhaps is a big one that Sonal just outlined earlier for us. And of course, there is a fair bit of spillover, right? Because, I mean, we've had strong runs in many pockets and there could be continuation as well. We'll pick those out right at the word go. As we get the first rates up. So we are at 24,886, first 6 coming through on the Nifty, which is about 30-40 points higher. You've got the Sensex, which is starting at about 81,566. That is in the green as well. The Bank Nifty is absolutely flat. So 51,536 on the Nifty Bank, almost unchanged. Market breadth is solid, 3:1 in favor of advances, as it has been for the last 3 days now. So no problems there. And sectorally, we'll pick out some names. IT is there. I mean, the Nifty IT index is starting about 0.25% in the green. But these are indices, but let's get to stocks. Sonia.
Okay, so let's get straight to individual stocks. First, the ones that are in the news, right? Tata Consumer, good set of earnings coming through. Revenue growth of 16%. Margins have improved. The stock, though, is coming in for a little bit of profit taking right now. GAIL is the one that I'm looking at this morning. It was up 3% in pre-opening. Right now, GAIL is up 4.5% post a good set of numbers. UBS has a buy with a target price of 250 on GAIL. So keep an eye out on that. Torrent Power is the other one. Good set of numbers. 8% higher on Torrent Power this morning. So clearly kicking it out of the park, this one. Torrent Power, its power generation revenues went up 65%. So its core business is doing very well. And that's what the street has liked. Dixon Tech also, that's been a favorite of the market lately. Good up move in the mobile and the EMS segment. On the downside, you have Navin Fluorine that is not looking that good. Big decline in margins and profitability for Navin Fluorine. So that stock is down almost about 2%. Otherwise, for the market, a lot of other stocks in the broader markets that are doing well. The mid-cap index itself is up about 200 odd points. MOIL is up about 5%. You have a couple of other names. Zaggle Prepaid is up in the green. Yes Bank is trending higher as well. ICICI Bank is up 1%. So looking pretty good.
Well, that's right, Sonia. Even Granules India, that stock ended higher in yesterday's trading session. Today, it's building onto those gains. So good move out there. Talking about exchanges, MCX actually is higher with a gain of closer to around 2%. More commodity focus, so that one, in fact, is doing pretty well in this morning's trading session. India Mart, Rima at Wanda said yesterday, yes, the margin picture looked quite good. And that's why the stock ended at the high point of the day. But the details that followed post that weren't very impressive in terms of subscribers as well as guidance going ahead. That's why the entire 5% that India Mart put on in the final hour of trade yesterday, it's given all of that back. That stock, in fact, is down 5.5%. Indus Towers, the stock has seen a big run. It made a low of around 430 rupees. It's bounced back actually of the low point of the day. So good move on that one as well. A few more notable movers. RR Cable, well, that stock has come for a bit of a knock.
down 3% as we speak. So that stock is a little bit lower. Titagarh Rail Systems as well is taking a bit of a knock in today's trading session. So a lot of action we can see from the broader markets. The breadth of the market is very, very good. 4 stocks advancing for 1 stock that's declining. The bulls will take that data point.
Absolutely. And, so it's at least on the indices, it's a bit of a quieter start. But it's not a bad start by any yardstick. So we'll have more stocks, more individual names, etc., which are moving, coming up in just a bit from now. So let's look at a few other names where there is activity and action. Torrent Power, Gale, Dixon, of course, are the 3 biggest volume-led gainers as well. We mentioned the price change, but these have got the largest volumes. There is Granules as well, which has got very large volumes. I just want to look at what 361 is doing. 361 reported numbers. Remember, Nuvama reported a stellar Q1. Wealth management. 361 has also reported a stellar number. Stock's done very well. So that one is up about 1.5%. Jamna Auto is up 4%. Stocks at about 145. HCC is a big performer this year, but another 3% this morning, 56 plus on HCC. Skipper was up 10% yesterday. Skipper is up about 4.5 right now. Balchand Nagar, defense name, 5% higher, 418 on Balchand Nagar Industries. Volumes right out of the gates, things are picking and things will pick up, I'm assuming. But for now, it's a little quiet. Away from the names that I mentioned, not very much going on down the list here. Jyoti Structures and Suvain Pharma, these are all 4-5% kind of movers. Himmasinka Seed is up about 3%. But beyond that, not very much by way of volumes. On the downside, India Mart, I think we did mention it. India Mart numbers came during the last hour of trade yesterday, and numbers looked good. Stocks down 5 though this morning, and look at volumes. It's the top traded loser across the board. Titagarh is the second largest loser on the NSE, volume-led loser. It's down 5%, and you'll hear from the Titagarh management in a bit from now. Power Grid is down about 1.75%. Sonal mentioned Navin Fluorine, which is down 2%. There is Cochin Shipyard. Angel One is down about 2.5%, nothing large. Castrol is another company you'll hear from a little later on the program. Stocks down about 1.82%, 2% actually. And Idea Forge sold off dramatically yesterday. And Idea Forge is down another 2% this morning. Of course, continued reaction to numbers. Star Health is another sort of earnings set, which we highlighted with Yash earlier. Star Health is starting down 1.6%. So actually, there is more volume on the downside, even though in terms of just numerically, there are 2 stocks gaining for every one, which is actually going down at this point in time. Let's assess price action and momentum and underlying strength in the markets with Gautam Shah. He's a market master of the day, founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Thanks very much for your time. We had a global sort of guest with us in the morning, looks at Asia Pac, and I was made a comment, and he agreed that if you look at markets around the globe, right, some of the better performing markets, there are signs that momentum is flagging a little bit. Here in India, no real such sort of sense still. We are in a very strong up move, on the market, broader markets and on the Nifty as well. What is your sense, Gautam, and the phase that we are in, and what should we expect in the near to medium term?
Well, good morning, Prashant. I think as we always discuss, domestic liquidity is a revolution. And I think that's decoupled our markets to a lot of things around the world. It started off with decoupling with the Asian markets like China and Hong Kong, which we used to closely track, I think, a decade and a half back. Then it got us decoupled with the Indian rupee, and then pretty much with oil as well, with what has happened in the last 6 to 8 months. And now you had this weakness in the US markets, and despite that, our markets were stubbornly resilient. So I think we are in a good space. I think we remain absolutely solid on the charts. And I do believe how markets handled difficult situations and difficult events is an indication of internal strength. And I think the 2 major local events that we witnessed, the elections and the budget, and the global events in the form of the 2 geopolitical events that we saw, and the fact that the Fed delayed its rate cuts, I think all of these factors and how Indian markets handled it was a clear indication that we are still very, very strong on the charts. Had it been a decade back on the budget day, we would have lost about 10%. And I think that's what the domestic liquidity liquidity has really done, because it's really become a way of life for a lot of market participants. So a small change in tax, I don't think will have a very great impact on what markets participants do from a longer term perspective. So having said all of that, I think the trajectory is still up. We still see amazing rotation at the marketplace in terms of sectors and in terms of segments. And I do see further upside taking the market towards 25,500. I'm not so keen on where the markets head higher. I think support levels are very important. Until we are safe above support levels, which is the view, I think there is more to go. So pretty much the way the charts are right now, the best is yet to come, and we don't see any major signs of topping out.
Okay, no major signs of topping out. Bullish as always. It's good to see you that way, Gautam. And of course, this has been a market, right? I mean, the kitchen sink has been thrown in the market and it's still sort of emerged on top. But tell me, from here on, if you had to decide on sectors or stocks, right, where do you see any kind of value? I'm asking because it's very hard to find companies with sort of where there's any kind of valuation headroom. What are you looking at on the charts?
Yeah, I think value is a tough word to find in today's market. I think value has moved higher a few notches pretty much with what has happened in the last 6 to 8 months. But so be it. I think what you've seen in the last 2 months is the phenomenal comeback of FMCG and pharma and IT. I think these three sectors are considered defensives, and they have pretty much been the poster boys, of the recent past, and they continue to look rock solid on the charts. So we are actually banking on these three sectors, and I feel that these three sectors should continue to run up significantly, along with metals and chemicals, which I think are at the verge of the next phase of the bull rally. I would also want to add financial services as a basket. I know we keep looking at the bank Nifty, but if you look at the financial services index, which has banks, NBFCs, and insurance companies, I think that's one sector that can do significantly well over the next 1 year. So, these 5, 6, 7 sectors which I just highlighted are not the poster boys names. It's not the typical railway, defense, real estate, capital goods, where I think we have been recommending profit booking and switching to some of these sectors which are more defensive in nature.
Okay, all right. Hi, Gautam. Good morning. Good to see you, Win. Just give us the the level on the Nifty then. You've given us spoken a lot about sectors. By the end of this year, what are the charts indicating? Where are we headed?
See, I think the last bull market has taught me that you don't discuss too much about the magnitude, because this market can just continue to move higher, or rather grind higher, and I still don't think we have seen a blowout in some sense. But in terms of a short-term number, I think 25,500 is a number that we have been working with, and I think we will get there gradually. In terms of a more longer-term number, I think 28,400 on the Nifty is possible. It's not going to happen in a straight line, but gradually we will get there with some corrections along the way. But in terms of support levels, which I think are more important, 24,600 and 24,100 are extremely important. Until the Nifty is above these numbers, I think the market is okay. And I do believe that the Bank Nifty from here will play a very key role. And if the Bank Nifty manages to sustain above levels of 50,000, there is still a very high probability of that index moving about 12 to 15% from here.
In terms of global markets, what are you noticing on the charts? I'm asking because, this has been such an uninterrupted bull market. Ever since COVID played out, we haven't seen any major sell-off, even across the globe, not even a 10% correction. Is that looming around somewhere?
Well, that's the beauty of it. I see a lot of people talking about references of history and references of the past. I don't think you can use anything in history in the last 30 years to say or discuss or to forecast what's happening right now. Having said that, 2003, 2007 bull market saw multiple 10, 12, 15% corrections. But the fact of the matter is, 3-4% is the new 10%. And that's probably the reason in the last 1.5 years, you've had these 3-4-5% sweet corrections. They come, they scare you, they make the market healthy, and the markets are back on track. So I think this will continue. India continues to be the poster boy in the global basket. If you look at the top 40, 50 markets in the world, we are still one of the best performing markets. And that's probably the reason FIs cannot ignore India anymore. And that's why the large caps have made a comeback post the election results. And I think that's going to continue. So definitely there are risks in the mid caps and small caps. So you can't go out there and buy anything and everything in mid caps. But I think the top 100 is still looking quite lucrative on the charts.
Okay, all right. Let's talk about a couple of heavier names then. Reliance Industries as well as HDFC Bank. One has been a big outperformer, the other one has been lagging. Well, what are the charts indicating on both these two? Because you put it together, well, it's more than 20% of the index.
Yeah, I think a couple of months back at lower levels, we put out a very bold call on SDFC Bank, and we said that, it was available near the COVID highs. So it was a very clear buy when we looked at the ratio charts. And I do believe that SDFC Bank can do something special over the next 6 to 12 months. In fact, our working target is as high as 2,000. And if that were to happen, the Nifty and Bank Nifty will be up. In fact, if you look at the contribution of ITC or Dr. Reddy's or Bharti, I think many of these index heavyweights have shaped up really well. And I do see a big opportunity in SDFC Bank, even from these levels. On the other hand, in some sense, Reliance has been an underperformer. It's not a favored stock. It's not a path that I'm going. It might do well, but I don't think it's going to create serious alpha. I would still bet on an ITC, which we discussed in our last interaction. And I think there is more juice left there. But within the banks, I think SBI, ICICI, and HDFC, I think these three big banks could potentially lead the market higher from these levels.
Okay, one final question then on the auto stocks. Any thoughts there? Because, they're in the news right now. We have a big IPO coming up on Friday as well, the Ola IPO. Then the two-wheeler companies will once again be in focus. Anything on the charts there?
Not really, Sonia. I think the auto index is looking quite toppish at this point of time. It's just that the market momentum is so strong and therefore they are up. However, I would look at the auto ancillary companies. I think that's a space which I'm betting on for the next 3 years. And I think that's a big opportunity. But talking about opportunity, I think chemicals is one space which we are very seriously looking for the last 1 month. And I think a lot of these top quality chemical stocks could be the serious winners over the next 6 to 12 months. And we've actually recommended some at Goldilocks recently.
Gautam, the Bank of Japan decision is out. There is a finally, they've raised policy rate to 0.25%. I don't know after, I think how many years, but they've finally effected a hike. I mean, it's Japan going one way, the world going the other, right? I mean, you've got the rest of the world waiting for rate cuts to start. I mean, the US and Europe, here in India, other emerging markets, but in Japan, I mean, there has been this wait that they will actually start to increase interest rates because inflation after 25, 30 years is finally, it did finally cross that 2-3% kind of levels. Any thoughts at all, Gautam, if you track this stuff or you've been watching the USD JPY big moves lately?
Well, not closely enough, but I do believe that every country has its own dynamics, and I don't think it impacts Indian markets so much. And I think the Japanese market also went to lifetime highs after almost 25 years of staying in a grind. So in that sense, I think it's great for that country. But I think Indian markets will be looking at what the Fed does. And I think in the September-October meeting, pretty much the consensus is that the rate cuts are coming. And I think on account of that, you could have financial services trying to discount that. So that's probably the reason I keep saying that financial services could be a theme to watch for the next 3 to 6 months.
Okay. And we don't have sort of exact figures, and it'll be interesting to get that. One of the ways why Japan is important is because so much of Japanese pension money, local money, retail money, has essentially gone out of Japan in other markets around the world looking for yield. And that is essentially what is sort of known as, one sort of representation of the carry trade. It typically is referred to foreigners buying in Japan and buying assets around higher yielding assets around the world. But it's also true that Japanese sort of money, local retail money in Japan is flooded across the world. And in India as well, I remember a Citi report, a global Citi report saying that Japanese money is a big part of the foreign inflow which has been coming to India through various structures, etc. But that has been happening over a period of time. And I think the return differentials are still very, very high compared to, especially now with the sharp outperformance that India, etc. has seen. But we'll track this one, get you some reactions over the next couple of hours. I think first rate hike after some time, policy rate increase at 0.25%. The newspaper Nikkei had reported that a hike is coming, and it has really indeed come through. Sonia.
Okay, well, let's do one thing. Let's talk about Dixon Technologies, because that really is the stock of the moment right now. I mean, the company has reported a very strong performance yet again in Q1 with the earnings coming above street estimates. It's their mobile and EMS division revenue contribution which has seen a very big surge, but their consumer electronics and appliances revenue contribution has decreased. To discuss more on this, we have Saurabh Gupta, the CFO of Dixon Technologies, who joins us now. Saurabh, thanks a lot for joining in. You know, it was a very strong performance in the mobile segment, and because of which your numbers are well above the street estimates. I just wanted to understand, in the mobile and EMS division, your revenue contribution is now 79%. Do you hope to take it up further, and what kind of sustainable growth rate do you see in this business on the top line?
Yeah, thank you, Sonia. Thank you for having me. So as mentioned multiple times, Sonia, I think so mobile is the largest trigger for our growth because that is the largest opportunity pool as compared to all the other verticals that we have. I think so in the next couple of years, I think so IT will start playing a bigger role. They will be, of course, they will be the next growth engine for us after mobiles, but it will take us another 12 to 15 months for that. But clearly, I see mobile contributing a larger portion. But even the other verticals like telecom, IT hardware going forward will start contributing a meaningful number.
Okay. So in terms of a growth rate, for the mobile business, I just want to understand in FY25 and FY26, what kind of, do you have any kind of targets, particularly for this segment?
So last year we did almost 6.7 million smartphones. This year, we are targeting almost 28 to 30 million smartphones. Our acquisition of iSmartU is also in the final stages of getting completed. We got the CCI approval, and in the next 1 week or so, we will complete all other formalities and start consolidating those financials. So 25 million is what we expect outside of iSmartU, which is for brands like ITEL, Techno, and Infinix, and 5 million we expect through ITEL brands. So clearly, we will have the largest capacity in India of almost 45 million smartphones, and then 10 million gets added through iSmartU. So we'll have one of the largest capacity, and almost we have 55 to 60% of the opportunity pool which is available in India. So clearly, we have created a large capacity. Now the idea is to go deep into more manufacturing, deepen the level of manufacturing, get into components, precision components, mechanicals. Also, we have already finalized a technology partner on the display. So the idea is to create more technical skill set around that, create more competitive moat, and acquire that competitive strength by getting deep into components.
Okay. Hi, Saurabh. Good morning. Good to see you, Ben. So 28 to 30 million for this year, and I think next year you're talking about 40 million in the mobiles business, right?
Yeah, broadly it should be somewhere around 40 odd million, yeah.
Okay, so mobile's the one that's going to be driving, but as you mentioned briefly, that the IT components of products, that's going to be the next driver of growth. But I think majority of it will come in FY26. In the past, you've hinted that the TAM, the target market, could be approximately 50,000 crores as well. How do you see revenue shape up, say in FY26? What kind of a revenue number can IT products report for you?
Yeah, so Nigel, clearly IT hardware is a 10 billion opportunity in India. And of course, the production value should be somewhere around 50 to 55,000 odd crores. And clearly, like the way we have always captured a large market share in other categories, our aim is always to take a 20-25% market share over a period of time. So what we have committed to the government is revenues of almost 48,000 crores over a period of 6 years. Now, if you look at, we have already closed contracts with Lenovo and Acer. Acer, we are already manufacturing. And Lenovo, we start manufacturing by Q3. Also, we are also in the final stages of closing with 2 large brands. In fact, those brands are already on board. We are just concluding the final agreements with them. And those brands we start manufacturing by next financial year in our campus in Chennai. So practically, we have now all the 4 large global brands out of the 5 global brands. So it will be a large revenue driver for us going forward. And clearly next year, we can hope to do our revenues of anywhere between 2.5 to 4,000 odd crores, depending on what time we are able to start in our Chennai campus.
I think the street is working with a number closer to around 4,000 crores. You think that's gettable for FY26?
Yeah, broadly it should be in the range of, I think, to 3,500. That we're slightly more confident on that. But yeah, if we stretch ourselves and if we are able to roll out our campus slightly early, we can stretch it to 4,000.
Got it. Saurabh, so 2 more brands you've almost have got signed up, right? Something you'd hinted earlier as well. So we should have an announcement soon, this quarter?
Yeah, you should have an announcement soon on that, yeah.
Okay. Got it. What about something we've sort of discussed earlier, industrial sort of EMS segment on the automotive side, etc. Where are plans there, and by when can we see things being fructified?
Yeah, so if you look at our strategy of setting up campus in Chennai, it's mainly aligned towards getting into PCBAs for industrial and automotives, because that's where the large hub for electronics is, hub for automotive sector is. So we are in discussion with a large brand, and also we are in some kind of discussions on the automotive side. So my sense, by next financial year, we should have some numbers coming in from this segment as well. So we have already, as I mentioned, we have created infrastructure. We are building on a team for that, and we think it's a core for us, and we'll definitely have a big crack on it.
When do you start? When do you start production, Saurabh?
Hopefully in the next 12 months, and anywhere with 9 to 12 months, hopefully.
And that tie-up with a major brand, that should happen this quarter?
It will take some time, but the discussions are going on very well, yeah.
Okay, I got it. So just talk to us a little bit about overall margins as well. How's the environment on the sort of cost side, pricing, etc. looking? And what should we expect for FY25 overall?
Yes, broadly, I think so. Our numbers will only get better from here on account of that acquisition, which will now start getting consolidated. And also, if you look at Q2, is always seasonally a better quarter as compared to Q1. And a lot of our customers in mobiles have now ramped up, and the numbers will only increase from here ahead of the festive season. So we expect better margins in Q2. Overall, I think so we should be somewhere around 4% kind of levels. And then the strategy to get into more backward integration will only help us improve our margins year on year, because all this component play is very highly accretive on margins, even though they may have a low asset turns, but yeah, they're very positive. They'll have positively have an impact on the margins here.
Okay, so sort of just one question before we let you go. Any plans to exit the lighting segment, or do you believe that will grow? Because currently it's quite small.
No, Nigel, I think so the worst is behind us. We had a tough last 12, 15 months. There was a lot of pricing erosion which has happened in this industry. But now I think so we are getting our whole thing back on this. So we are expanding into new product categories of floodlights, street lights, professional lighting. We're getting into some premium product categories. We're getting into backward integration. And if you look at the revenues for Q1, it has actually grown by 15% as against Q4. And we are also working on some export orders. So clearly, my sense is the worst is behind us. The pricing has kind of stabilized now. And it's an important play for us. It's an ODM business for us with 7 to 7.5% kind of margin. And so we'll continue to, there's no plan to exit out of that business here.
Thanks for clarifying that, and wish you well for the remainder of this quarter. Congratulations on a rather good showing. The stock has seen a big run, but it continues to move up because of the positive commentary that you'll have given on the con call as well as on this interview. Well, let's focus on the next company, Titagarh Rail Systems. The stock is a little bit under pressure. First quarter was a little bit weakish. Lower execution of passenger wagons impacted the overall numbers. Mr. Umesh Chaudhary, the Vice Chairman as well as the MD of the company, joins us on the show. Hi, Mr. Chaudhary. Good having you on the show. Thanks a lot for joining in. Well, what went on in the first quarter? What was the execution run rate? I recall you were talking about around 1,000 wagons per month. What was it in the first quarter, and how do you see it shaping up?
You see, as far as the first quarter is concerned, we did about a lesser number of wagons. We did close to 2,100 wagons. That's an average of 700 wagons. If you compare it to the year-on-year quarter, we were at about, we were better than that, about 10%, 12% more than that. But the first quarter was adversely impacted because of the severe heat wave, the elections, and, there was huge absenteeism. And normally the first quarter is traditionally in our industry, you can see in years, is a slower quarter compared to the pickup that happens in the further quarters. So we are very confident that we'll be able to make up this in the coming 3 quarters and reach our target. We've always projected that we'll do about 10 to 11,000 wagons this year, and we should be in target to do that.
Okay, 10 to 11,000 wagons this year. That's in FY25?
Yeah.
Okay, and in terms of, those are the passenger deliveries that you're talking about?
No, these are the freight wagons. As far as the passenger, the passenger trains are concerned, which is the PRS segment, we had told in March also If you see really that the revenue that we had on a year-on-year comparison is about 100 crore less in passenger, that is primarily because the Pune metro contract was completed, the execution was completed, and the Bangalore and the Surat, Ahmedabad and the Vande Bharat actually is. So Bangalore, for example, the production started last month, and we'll start the first train of the Bangalore metro will be delivered in Q2. So, this is going to ramp up really from Q2 onwards. I would say more than Q2, Q3 onwards. And, we are going to get to capacity as far as the passenger rail segment in FY26 when Vande Bharat also starts. So this is a business which is new, which is picking up. And I think we are very well on track to pick up this business.
So, in the passenger business, your margins currently are at around 6.1% to be precise. But earlier you had targeted for an exit margin of 10% in FY25. Are you on track to doing that? And will that be largely from the passenger segment?
Absolutely. So, it's all a question of operating leverage. So the fixed cost in a passenger business is quite substantial. We have design centers and we have like a very, very large scale infrastructure. So obviously with a 60 crore revenue, the margins come under pressure. But going forward, even for the year, we would be, for the PRS alone, the targeted margin should not be a challenge for us to achieve.
Okay, the start of the year has been a little bit soft, as you said, because of severe heat wave, elections and the likes. But for the year, what kind of a revenue number are you looking at? And the consolidated margins as well will be at around 10%, right, for the year? That's FY25. In FY26, I think you've hinted it goes to 12-13%.
So as far as the passenger segment is concerned, you're right. As far as the freight segment is concerned, what we had always said is that the margins are likely to be around 12%. That is what we have always guided. As far as the revenue is concerned, I just mentioned we have a strong order book. We have an order book of 20,000 wagons in the freight. We have very strong order books in the passenger. So we'll be able to ramp up the freight in these next 3 quarters. And the passenger is a much more, I would say, gradual ramp up. It will continue from Q2 onwards. But we'll really see the big impact of the passenger in FY26.
Okay, all right. There's a 55,000 crores worth of ordering pipeline. I think we have discussed this in the past. How much can you garner, sir?
So these are tender-oriented business. For me to give a number to that is going to be very
okay. What's your normal hit rate?
Yeah, so that's what I was saying. We normally in the freight side, we've always had about a 25% market share. So we will continue to keep our market share on the freight side. As far as the passenger is concerned, so if you really look at FY24, we did an average of maybe 3 cars per month. We will reach close to 15 cars per month by end of FY25. And the capacity that we are building, that FY26, FY27, 28, the ultimate target is to reach 72 cars per month. So that is the kind of delta that we are talking about, from 3 cars per month on an average to 70 cars per month in maybe 3-4 years.
Okay, all right, Mr. Chaudhary, appreciate you joining in and giving us a fair sense of why the past quarter was weak and why you're optimistic about the future from here on as well. Wish you well for the second quarter and for the remainder of this year as well. For the time being, though, we'll slip into a short break. You come back, we'll get a chat going with Castrol. A lot of focus on that particular company. We'll try to get in more out of the management. Stay with us.
Welcome back. You've got the market, which is up 30 points, and 24,890 is where we're at right now. Market breadth, overall market breadth is positive. 1,400 stocks are up, 900 stocks are lower. That's, the overall picture out there. And there is a lot happening as far as the broader market goes. I mean, the big gainers are, volume-led gainers are GAIL, there is Torrent Power, Suvain Pharma, Skipper, there is Stanley, which is the furniture maker, with recent listing, 6% higher. Thyrocare is up 6%. Honasa is up 5%. So things have really picked up with lots of new names in the mix as compared to when we started early on. I just want to highlight what's happening on the Bombay Stock Exchange, BSE, the stock. It's up 6% right now. Rajesh Baheti alluded to this, not directly with regards to what stocks may do, but the fact is that, essentially, SEBI is telling exchanges that you have to choose one weekly option contract on one index. NSE has got 4. BSE has got 2. BSE has got the BankX and the Sensex. The NSE has got the Nifty, Nifty Bank, Midcap, Fin Nifty. And they got to choose one, let go of the other 3. BSE has got to keep one. The point is, volumes, without going into the exact numbers, NSE, in terms of weekly options, will have the overwhelming majority of the volume share. And, you're essentially now telling NSE that you can only have one. So naturally, the leader's got more to lose. And because both will only have one weekly option contract, some of this volume which was happening on the NSE and some of the other weekly option contracts as well, should move on to the BSE as well. That is essentially the bet that markets are making. What remains to be seen, what we don't know yet, is that will there be a big impact on overall market volumes? Because if that is the case, some of the benefit, BSE-specific benefit, may be muted. But this is, of course, all in the realm of thinking and expectation, because we don't even have the final rules right now. This is based off the consultation paper which SEBI put out yesterday. More on this story with the exchange themselves, hopefully, through the course of the day. Castrol India is the next company that we are speaking with. Stock's done phenomenally well this year. But the performance in the second quarter was a bit muted. Low single-digit growth in revenue and profit margins were also kind of flattish. We have Mr. Sandeep Sangwan, Managing Director at Castrol India, to talk more about this. Mr. Sangwan, great to have you with us here. Good morning. Thanks very much for your time. Prashant this side. So Q1 has been, this quarter has been muted. Even H1 overall has not been all that great. Could you give us an indication of what we should expect for the full year in terms of volume and value growth, sir, FY25?
Yeah, first of all, I think thanks for having me on your channel, Prashant. And let me give you a perspective. I think we've delivered a 5% growth in revenue in the second quarter and a 3% rise in PBT on the back of continued investments in our brands. We launched the Shah Rukh Khan campaign on Castrol Edge. And if I also compare it to what we've done historically, is our top line growth used to be in the region of 2-3%. And I think what we're trying to do is balance out top line growth and bottom line growth. And we're very happy with the top line growth, volume and revenue profile that we're building now. Okay, and our volumes have been pretty much in the same level as revenue growth. And the other thing is we continue to invest behind our brands, launch new products. For example, in second quarter, we launched Castrol Edge portfolio for SUVs, for hybrids and European cars. And this is the top performance product in our cars portfolio globally. So muted depends on which perspective you see it from. I think what we are focused on is now driving top line growth balanced with maintaining our margins. That's where we are.
So can you give us the exact number, Sandeep? What was the volume growth that you did in Q1? And for the rest of the fiscal, what is the kind of average volume growth that you are expecting?
So I think our volume has grown in the level of 5-6%. That's the core business, lubricants. And I think as far as the full year is concerned, we want to grow a couple of points ahead of the market. Okay, and this market grows at about 4-5%. And I don't know where the volume will end at the year end, but our intent is to drive top line growth through volume growth.
So you're saying that there is no scope of double-digit growth in the lubricants industry, not just for your own company, but even for the industry overall this year?
I think depends on where we play and where our competitors or other colleagues in the industry play. And I think we can get to double-digit growth levels, but a lot will depend on diversification also. But the core lubricants business will continue growing at about 5-6%. That's our outlook. And if we can beat that category growth and then add on some revenues on top from playing in adjacencies, I think that can get us to a much higher volume growth profile. Just to share an example, we've launched auto care range of products last year, which are now available in 45,000 outlets. We're trying to scale that business. We've got good response. We have a portfolio of 5-6 products in that auto care range now, which will continue building. So there are additional levers of growth which will come in as we look at the future.
Okay, all right. Hi, Sandeep. You briefly mentioned that Shah Rukh Khan's on board as well. That would mean higher advertising spends. So as a percentage of sales, what was it? And where does it settle at for the coming year? And, putting that into context, what does it do to margins? 22 to 25% is what you've been talking about. Will you be closer to the lower or the higher end of it?
So let me start with margins first. We've maintained our margins at about 23% in the second quarter also. And what we said is in some quarters it's been 22 in 23. But we are able to maintain those margins at 23-24% levels. Okay, that's one thing. Yes, advertisement expenses will be higher, and they've been higher by about 16% in the first half of this year. But that's a part of the strategy. It's not something that we want to give up. Typically, we invest about 4 to 5% of our revenue in our brand investments, and that will continue going forward. If anything, we may continue investing more. But Castrol has been built. It's a brand which is loved by Indian consumers and customers for more than 115 years in the country. And we have all the intent to continue building that brand, supported with innovation by bringing new products for our customers and consumers.
Okay, all right. Sandeep, the street got very, very excited about the data center opportunity. We had the management of Gulf Oil who said, given the entire matrix and the entire pie, it's not such a big opportunity. Though the stock market is quite bullish that Castrol has a big opportunity out there. Could you give us your reading of this? How big is the data center opportunity for a company like Castrol, and how do you look at scaling that up?
Yeah, so I think let me touch on that. First of all, we've called out globally, data center thermal management is a big play for Castrol. And globally, we're investing about 500 crores. That was announced in R&D facilities in our parent company in UK, to which we have access. The way we see it is data center market is going to grow, okay, in India and globally also. It's a function of what cooling technologies data centers adopt. Okay, right now, most of the data centers use something called air cooling or HVAC systems, traditional systems. But I think as the computing part demand grows and we need faster processors, cooling requirements will grow. And Castrol as R&D, we are investing in technologies like immersion cooling, which can give us opportunities in that space. So that's where I think it's still in development stages. We have certain tests running with customers. We've tied up with global players in data centers who design and develop data centers. So we see this as an opportunity area, and that's the perspective we're coming from.
Mr. Sangwan, so you're saying that the parent already has a product, is it?
Yeah, we have liquid cooling products for data centers, which are already available. Yeah, for immersion.
And this is already being used, immersion cooling? Your product is already in use?
So we're working with some of the big data center players in terms of testing and piloting these. I cannot say anything more than that, but we have a data center cooling product which is available.
Because in India, the market is about only 1,000 megawatt, right? I mean, it's expected to grow rapidly because a lot of capacity, etc., is coming. A lot of big players, conglomerates, etc., are coming in very fast. But this is are you saying this is in testing stage or this is a settled technology now? I mean, it's much more efficient than air cooling.
Yeah, it is much more efficient because the energy consumption is much lower and is far more efficient in terms of space utilization also. But as I said, we're doing testing with some of the big customers, and we want to continue developing this further.
By when can we see the technology? You said you have access to this. By when can you get that technology here in Castrol? I mean, for Castrol? Yeah.
So I think as we kind of further proof of concepts get verified, depending on customer requirements and customer businesses, we will be able to bring it in. I think to say which time is very difficult for me. I think it again depends on how the tests and various programs that we have with customers develop over the next few months and years.
You know, we had the Gulf Oil management and they gave us the total, I mean, in terms of volumes, right? If you project data center capacity, it's at 2,000 megawatt. I mean, you say all of it becomes this immersion technology. Even then, as a percentage of total volume sold, it is minuscule. But I don't know if that is the right way to look at it. I just wanted your perspective. Could it be a high margin product? So it's in terms of share of volume, it could be low, but share of profit could be high. I don't know what the internal thinking is, Mr. Sangwan.
So, first of all, I think you keep referring to Gulf. It's their view, and I wouldn't like to comment on that. It's for them to judge. As far as we are concerned, we've called it out globally as one of our plays for the future, and we believe in this and will continue working on this as an opportunity area.
Okay, we'd love to get more details as you're not ready to share those with us. So maybe next time, and we'll have more updates on this one. Really appreciate it, answering and taking all those questions. Thank you very much for joining us, Mr. Sangwan. And good luck for the underlying business as well as you go through the rest of the financial year. We'll take a quick commercial break here. Okay, I think what we'll do is we'll look at trades, individual trades. Mitesh is with us. Mitesh, your thoughts on what we're seeing in terms of price action, 50 points higher, but actually start with BSE and what the stock is seeing. Big 7-8% move right now.
So, Prashant, I think, BSE, in fact, has done a big correction and is now reversing. My sense is starting an uptrend with a minimum target of 2770 to about 2860, and in a good case, 3000. So, I think the stock is a good bet for people who are getting, wanting to get into a swing trade. I think this looks good to me.
Okay, well, what about individual stocks?
I have a buy on NCC with a stop at about 340. Target of 380 can be looked at. Good breakout. It's a cash stock, though, I think, but it's giving a good breakout. So I would recommend a buy here. And the other one is a buy on, a buy on Bajaj Auto with a stop at about 95.75 and a target of 97.60.
Okay, let's do one thing. Let's take a quick commercial break. A spotlight on the top stocks on the move on the other side. Stay with us.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not an expectation?
There are many areas where a commercial consideration could lead to privatization or disinvestment, and I'm as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening, is our both expectation and policy.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support our endeavor would be, government endeavor would be, keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are two other imperatives come in. The other priority needs and fiscal consolidations. It has to be done. There are
so you're
now
saying
the trinity which has to be taken care. The other two pieces, and who else have to do the heavy lifting? Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner, that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year.
Yeah.
That's what we are expected to do. Next year 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio. If we are talking about 3% plus to go to capital expenditure, we are still, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of...
All right, Torrent Power is one stock in focus today. So Vivek is here to tell us why you need to watch out for that one. Vivek, over to you.
Well, that's right. So Torrent Power, like we highlighted earlier, very strong year-on-year growth as far as, company was concerned. Generation volumes are picked up quite significantly. Along with that, remember, the gas power plants that the company has, both, Sujin, is something, that actually operated under Section 11. Aided by strong summer, you actually saw significant offtake coming in over there as well. So strong merchant sales spread, aided by Section 11 and strong power demand, actually led to a very good quarter as far as Torrent Power is concerned for Q1. Revenues higher by 23.5% on a year-on-year basis. EBITDA jumped up 57%. Margins 400 basis points expansion. Profitability on the back of that higher by 87%. Thermal PLF, something that has jumped up quite significantly on a year-on-year basis, 60.4%, versus last year it was just around 39.6%. Now, generation revenues up 65% on a year-on-year basis. On the back of that, company sales increased contribution from merchant power sales and also increased contribution from licensed distribution business. Along with that, the company also gave the capex guidance, for the distribution business, for thermal capacity addition, and also, they're quite confident in terms of scaling up the pump storage plant as far as hydrogen is concerned. All of that keeping the stock active in the session today.
Okay, all right, Vivek, thank you very much for that. India Mart reported numbers in the last hour yesterday. Let's revisit that. Stock's down today. Rima's got more. Rima.
Thanks so much for that. So yesterday, in the last 1 hour, when India Mart reported numbers, the stock rallied on the back of a very strong margin expansion. But the details which have come out post-market close are a bit concerning. One, the paid subscriber growth has been muted. In the current quarter, it stands at 1,500 roughly paid subscriber addition versus about 2,700 in the prior quarter. Secondly, collections growth at 14% is lower than analyst estimates. Nomura was at 19%. Third, the traffic has dipped to 267 million, lower than what we had in the prior quarter. And fourth, this sharp margin expansion to levels of 36.1% was aided by a near 300 basis points cut in the company's sales and marketing expense. And the company clarified that some of this is going to reverse because the company has hired people in June and July. According to them, EBITDA margins, they're targeting close to about 33%. Nomura has come out with a note. They're saying they're also concerned about the weak increase in business inquiries over the last 5 years. So from FY19 to FY24, business inquiries have gone up only 5%, and therefore getting back, increasing your subscriber addition is going to be a challenge. They're neutral on the stock with a target price of 25.20, but Ambit believes that the current weakness is transient. It's the top pick in the online classified space because remember, India Mart is also, the market leader when it comes to B2B, SMB. It's like a B2B platform for SMBs as well as, small to medium-sized businesses. And therefore, Ambit is very bullish still on India Mart. Back to you.
Okay, thanks a lot, Reema, for that. Let's take a short commercial break. On the other side, Lata will connect with Nitin Agarwal of Motilal Oswal Financial Services and Santanu Chakrabarti of BNP Paribas to decode the banking and the NBFC sector in Q1.
Crore plus, though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis that can be maintained, that will be a good achievement.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you have earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as Hello and welcome. It's The Economy. Today is earnings analysis time, especially of the banking and financial sector. Most of the results are in, except the big one, SBI, BOB is due today. But among the banks that have come, clearly there is a scar because of the fight for deposits. We have seen a reduction in deposit growth trailing advances growth, a fall in CASA and problems of credit being far ahead of deposits and therefore a credit-deposit mismatch, something the Reserve Bank has been pointing out. There are also small problems of asset quality emerging. It's usually a first quarter phenomenon, but perhaps some of it could prevail, could continue. Let's ask the experts. Joining me now to discuss the banking results so far, Santanu Chakrabarti, the India analyst, banking and finance at BNP Paribas, and Nitin Agarwal, the head of banking and finance analysis, institutional equities at MOFSL, Motilal Oswal. Gentlemen, thank you very much indeed for your time. Shantanu, I'll begin with the predictable one, ICICI and HDFC Bank. ICICI Bank, obviously, excellent results. But now, would you say price-wise, the advantage that it has shown in its results is kind of covered? Would you rate them equally, ICICI and HDFC Bank?
We have a higher upside and a higher preference for HDFC Bank. But we just put out a very detailed deep dive report on ICICI Bank a couple of weeks back, where we argued that it's time that now we start thinking of this as a 3 times price to book bank at the core level. Because what I tried to demonstrate out there, and something that we have been seeing in action, is currently ICICI Bank has what can be considered the greatest privilege in Indian banking, which is essentially adjusted for the size of the retail franchise and the overall operating cost and scale, the benefit of cheapest raw material. We tend to often think of raw material only in terms of cost of funds, but we have to load what yield is possible on the portfolio and, essentially what kind of operating costs are loaded onto it. And once you figure that out, you'll see that ICICI Bank has the privilege of not having to take any major risks, still maintain and gain market share, which is perhaps the biggest edge. So as far as upside goes, therefore, we have a small re-rating still due, nearly not as dramatic as what we perhaps have for HDFC. But in some sense, it is the most worry-free bank to own and less susceptible to quarterly volatility than any of the other names. Okay. So to that extent, it remains our
1 minute. Shantanu, ICICI is trading at 2.86 and you're saying we should start looking at it as a 3 times to book stock. Yeah. One more question before I get to Nitin. What's your sense about when HDFC Bank will be able to get over its merger pain? Do you think it gets back to 3, say, in 2 years' time? What's the expectation from that stock?
HDFC's recovery trajectory has become highly dependent on what happens to overall system CASA. So in some sense, the monetary and liquidity conditions out there. So, if rate cuts are delayed, things like HDFC and Access suffer a lot more than ICICI. If rate cuts happen early and there's a pickup in liquidity and monetary conditions and therefore current account, savings account money within the system coming off the low base that it is, its optimization of the entire liability side and therefore margins and ROA plays out earlier. So, we have very little doubt that, over a period of time, this normalization to about 2% ROA and 17% ROE at the core level will happen for HDFC Bank. But it's the timing is exquisitely dependent on the timing of rate cuts, how easily net durable liquidity goes into a surplus, and of course, at what point the gap between FD and SAR rates reduced to the point that savings account money can start picking up again.
Okay. Fair point. I mean, those are all extremely extraneous factors when you're going to see liquidity adequate. Depends on how fast the government spends money. And as if we were all thinking that the Fed is going to cut and therefore there is a cut on the corner, BOJ has now raised. So we really don't know which way the Reserve Bank will go or how long it will take. Nitin Agarwal, thank you very much for your patience. Let me come to the next 2 set of banks. We did ICICI and HDFC Bank. You can quickly tell me your position there. But more importantly, when it comes to Access and Kotak, do you think that it's in buy zone?
Yeah, so see, both Access and Kotak, there are one of the other things that is limiting their performance. If you look at Access, this quarter, the business numbers were slightly more modest, and wherein the deposit growth was like marginally negative. And that led to a slight rise in the CD ratio. And that's something wherein the bank is engaging with the RBI and has submitted a plan to improve things over the year. So that is an overhang on how the growth rate overall will be. And I think Street is factoring that in, and slight moderation in growth estimates have happened for Access. So that resulted in the subdued reaction or some decline in the stock after the results. And Kotak, I will say, on the other hand, business numbers were relatively better, especially on the loan side, wherein the new management has delivered well. On the lending side, they have shown some bit of aggression and tried to compensate for the limitation that they have on the consumer side, especially after the RBI restrictions. So for the full year, we are still expecting loan growth to be higher for Kotak vis-a-vis Axis. And gradually, as you see, some limitations going away, which is going to take time. But in the interim, bank anyway is making pretty healthy ROA. Our estimates are like well above 2, beyond 2. Like bank is already making close to 2.4 ROA. So if it sustains that level of profitability, which we expect by and large to be the case, then I think you can look at some moderate returns to come through from Kotak Bank.
Certainly outstanding.
We anyway have neutral rating on both the stocks.
Okay, what's your pecking order in the Nifty, in the banks, in the Nifty itself, Nitin?
We have been more positive on ICICI, SBI, HDFC Bank amongst the large names. And amongst the mid-size, we have been picking Federal Bank, which is outside Nifty, of course.
Okay, got it. Shantanu, to come back to you, what would your mid-cap bank preferences be? At least banks like AU Finance seem to have stood out.
Right, and that is our preferred mid-cap play. Now, having said that, Lata, I'm probably a little less constructive on the name that I used to be earlier. It's still, on a relative basis, amongst our mid-cap bank coverage, the best play. But I'm somewhat less than pleased about their margin defense and growth in core segments in the last 2 years. First quarter has shown on margin defense and as well as
on AU Finance. You're speaking about AU Finance? Okay.
Right. That's been a little weak. I mean, typically people buy this bank because they essentially get almost an NBFC-esque franchise within those core segments with a low penetration argument to go in their geography. Right, that's one of the key reasons to own that bank, and that should have given it greater pricing power in an admittedly competitive environment. But perhaps the fact that the yields on either of those segments or their growth has kind of been a little lackluster in the last 2 years. I mean, sure, there's some improvement in the current quarter, has reduced my enthusiasm in the near term a little bit, especially given that it's not a cheap bank in that context, right? So, the performance standards remain a little higher than the typical mid-sized bank, which trades at 1.3, 1.4 times.
Okay, fair point. Nitin, to you, the public sector banks. I mean, Punjab National Bank stunned us yesterday when they said that they had guided for a credit cost of 100 bips, and now they're reducing it to 50 bips. I mean, that's dramatic. What in the PSU banks impresses you? Do you still think that they have this high provisioning base, which might give them an advantage on credit cost, on lowering credit cost and increasing profit?
Yeah, clearly, like PNB numbers were pretty strong across all the fronts. Even on the business growth side, like we did see a 5% sequential growth on advances from the bank. And specific to your question on the asset quality and provisioning, I think PSUs comparatively are doing a lot better. If you see, like all the banks, private banks have all come through with their results. And in general, we have seen either a status quo or a rise in credit cost across banks. And PSUs, on the other hand, is either a status quo or an improvement. And more likely it is an improvement rather than a status quo across banks. And which is where PSUs over the year are relatively better placed to deliver a stronger earnings for FY25. If I look at our estimates also, we have did some moderation across many private banks, and even the loan growth has seen a cut. While PSUs, because their credit cost is holding up very nicely, and in fact it is moderating down. Like all the three banks which have come so far, Canara, Indian Bank, PNB, they've all reported a lower provisioning number than what we estimated. And if this trend goes through, and most of these banks are indicating a sustained trajectory on this front, while ECL provisioning is something that one will need to watch out as RBI comes up with the filing guidelines. But more or less, like these banks are well placed to deliver a high teens earning growth for FY25.
Okay. Yeah, I agree. Expected credit loss will take it out on PSU banks more. The private banks seem to be more prepared for it. But you still have only a neutral on PNB, Nitin. You were not impressed by the higher than expected, credit cost, or rather lower than expected credit cost guidance?
No, yes, we have, in terms of rating, yes, we have a neutral, but we raised target to 135 on the bank. Okay. We were at 130 earlier, which we raised after these results.
Okay. Shantanu, now to come to the NBFCs, even the mighty Bajaj Finance showed some trouble of bad loans. And, it trades at very expensive valuation. So will you take away something from it because of that, or do you think that it is seasonal?
Right. So in Bajaj Finance, what is quite interesting is now the narrative has moved along to margins and credit costs from 165 going to something like 185, 190 basis points. And of course, that means that even with 30% kind of loan growth for the full year, you end up with earnings growth, which is high teens, nearing 20%, if not touching it. And on that, we are making an argument, essentially, the street is, that a 24p for this is high. Now, if we put things in context, we'll realize that once rates start to come down, the margin mean reversion is nearly automatic. So the only meaningful thing to worry about from these results is essentially credit quality. Now, on credit quality, we need to drill down a little further. If we see, we'll see that the most challenges seem to be coming from B2C rural. And there, frankly, Lata, my sense is that Bajaj Finance doesn't have the kind of right to win within B2C rural, our research opinion, as it does within, say, B2C urban, which has been, the data-heavy specialization area of Bajaj Finance. And therefore, I mean, if I look at the history of Bajaj Finance has made the most number of experiments in terms of products. At points of time, it has done things like equipment financing. And everything that has not worked, they have been very nimble to kind of rationalize. And that's what makes it the powerhouse that it is today. Perhaps the B2C rural side of the business, large parts of it may not turn out to be a very successful experiment. But if you put in context what the rest of the business is growing at, it dwindles into a very small problem very soon. And again, the long-term earnings growth should track whatever long-term asset growth is going to be in this business. And in that context, the PE is about 30% lower than what the sustainable earnings growth probably is for the next 3 to 5 years.
Okay, so you're betting really on the corporate governance and the intelligence of the company to move out of what's not working. Very quickly, absolutely out of time, Nitin, but what are your mid-cap bets in the NBFC space?
So we continue to prefer vehicle financiers in NBFC space, wherein we believe that growth rates are going to sustain at a healthy level, asset quality, performance is on track. And as the rate cut cycle comes through, these banks, these NBFCs will see some recovery in margins also. So which is where we like Chola, Shriram, PNB Housing. And so these are the three NBFC plays like we like.
Okay. Well, we do need a much longer segment to discuss the entire NBFC space as well. Gentlemen, thank you very much for whetting our appetite. We will touch base with you when the entire result season is over. We have to wrap up on Bazaar on a fairly positive note, actually. They will all benefit once the rate cutting cycle starts. So even if the BFSI space is a bit of an underperformer, it's good to keep waiting there. Wrap up on Bazaar. Shortcast is coming up. 2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic
CNBC TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Back with us here on Halftime Report. On to some big earnings for the day. M&M will be reporting its results anytime now. Sonia is here with what to expect from the numbers. Sonia.
Well, thanks a lot for that. So as you rightly pointed out, big numbers coming through from the auto sector. M&M is one of them. I'm expecting a good set of numbers. A revenue growth of 16% is what the poll is throwing up at almost 30,000 crores in terms of a top line. The EBITDA growth will be 20%. The margins will be largely stable at around 13.8%. And the profits expected to come in at 2,683 crores. Now, the volume growth for M&M has been decent this time around. It's an 11% volume growth that we've seen. This is largely because of the good 13% growth in the auto sector and a 6% growth in the tractor sector. That will lead to an overall volume growth of 11%. We're also expecting a favorable product mix, and hence there's a 40 bips year-on-year gain in the EBITDA margin that we're looking at. The auto division PBIT, or the margins, are expected to improve 130 basis points year-on-year to 8.8%. Remember, M&M has been one of the big movers. In fact, if you look at the stock price, the stock is up 70% in 2024 already. Decent set of numbers expected today. Back to you.
Okay, all right, Sonia, thanks very much for that. So that's on M&M. We do have Maruti, which will be releasing its numbers today as well. So that'll be important to track. Just want to point out that there are lots of buzzing stocks today within the pharmaceutical space. So we have stocks such as Dishman, which is up around 9.5% odd. In fact, the stock has rallied around 10% odd this week. We have GPT Healthcare, which is up around 8.5% odd. Granules, which is doing well as well, and Suven Pharma, which is up around 6% odd. Suven, no news out. In fact, their Q2 numbers, the date is not out as yet either. That stock is up around 6% odd. But nonetheless, we have Tata Steel, which will be reporting its Q1 numbers as well. Nigel is here to tell us what to expect.
Well, that's right. Later this evening, we'll have Tata Steel's numbers. And on the revenue parameter, the consolidated revenues could be lower by close to around 4% because steel prices have been more or less lower. The EBITDA number, though, that will move up by close to around 20%. And for Tata Steel, we look at the operational performance. We look at the revenues as well as the EBITDA number. Not so much the profitability number because that's all over the place. A couple of one-offs, sometimes as an exceptional item as well. But what we look at is, in fact, the geographic breakup. India business and Europe. Now, if you look at the India business, we already have the provisional numbers with us. both in India as well as in Europe, that's Netherlands as well as UK put it together. The factors at play. For the India business, well, we're working with the EBITDA per ton at around 13,450 rupees per ton. So that's the crucial number you should be looking at. There'll be some benefit of lower coking coal cost, but pricing has been under pressure. For the Europe business, well, watch out for an EBITDA loss, but the losses will be sharply lower in comparison to the previous quarters. So the number we're working with is negative $36 per ton. That's going to be important. How is that? Netherlands business turns profitable, while the UK business continues to struggle. As always for Tata Steel, commentary and debt is something that we'll track.
What about Coal India as well, Nigel? That's also coming out with numbers later this evening. What's expected from there?
Well, that's right. For Coal India as well, it's going to be a busy evening with Tata Steel and Coal India as well. For Coal India, top line as flat as can be. EBITDA number could see a bit of a decline by close to around 2%, and profit number should be in the vicinity of around 8,000 crores. The operational numbers are already in, and the top line, well, it's flat because we have seen already that the volumes are up by close to around 5.5%. But then why is the top line flat? Because realizations will be down, predominantly because the e-auction pricing has been under pressure, and the street is prepared for that. So blended realizations will be lower. That offsets any kind of good work done on the top line on the volumes. The margins as well will see a compression because pricing is weak, and Nuvama, they have put out some estimates. The e-auction prices, they are working with a decline of around 30 to 35%. The volumes, though, will be a little bit higher. So that will partly offset the pain that will be seen on the realizations front. Low realizations from e-auction, that offsets any kind of operational operating leverage that we see as well. So around the 28.5% is the margin number. The commentary to track will be how is pricing shaping up, particularly on the e-auction side of things, how is power demand, and what do they plan on doing with the cash in its books. Also watch out in case there's a price hike. That's something that we'll have to track very, very closely. Back to you.
Okay, all right, Nigel. Thanks very much for that. So that's on Coal India and Tata Steel. But before we take a break, we're thrilled to announce the College Connect program under our ongoing season of HSBC presents CNBCTV18 Future Female Forward, the Women's Collective. Recognizing college students as the leaders, opinion makers and change makers of tomorrow, this unique initiative encourages the youth to foster inclusive and diverse workplaces, drive gender parity and tackle societal and business challenges when they join the workforce. We're kicking off at IIT Delhi on 3rd of August from 3 p.m. onwards with some of the biggest leaders and voices joining in. Stay tuned.
I would like to humbly state this. I'm sure all the members know that in a budget speech, if a state is not named, it doesn't mean that no money goes to them. And therefore, that was a misleading campaign, which, being in the opposition, unfortunately, a lot of members did speak about. It pains me to know. It pains me to know that they could say that if you're not mentioned in the budget speech, your state gets nothing at all. I'm picking up on the budget speeches since 2004-5, 5-6, 6-7, 2007-8.
Welcome back. Well, Godrej Properties is in focus. It just reported its numbers a while back. Stock is reacting to its numbers. Sonal joins in to tell us about the real estate major and what the numbers look like.
Well, yes, it was a good set reported by Godrej Properties. In fact, the company has gone ahead to say that they will meet or maybe exceed their guidance for FY25 as well. There is a quarter-on-quarter decline that we are seeing in terms of volumes on a high base. However, it's a very strong growth on a YOY basis. Company has booked most of its volumes in Bangalore this time around, which has not been the major market previously. But if you look at the numbers, area sold is up almost 300% on a YOY basis, up 10% sequentially. Bookings are up to 83% on a YOY basis, down 9% sequentially. Collections are up 54% on a YOY basis. They are down 36% on a sequential basis. If we talk about the city-wise breakdown, NCR used to be the biggest market. That's where the bookings are highest as well at 3,400 crore rupees. Volumes at 2.32 million square feet, but Bangalore has seen the highest volumes at 3.32 million square feet, Mumbai metropolitan region with volumes of 1.97 million square feet, and Pune at 0.5 million square feet. They have reiterated FY25 guidance and they say might exceed it as well. Bookings at 27,000 crore rupees, which was liked by the street when they announced it at the end of FY24. Deliveries at 15 million square feet and business development at 3,000 crore rupees as well. Their balance sheet in terms of net debt, that's where the number has been increasing of late. Net debt has increased to 7,432 crore rupees versus 6,200 crore rupees on a quarter-on-quarter basis. The cost of borrowing has also gone up, but the company says this is for business development and they have enough cash flows to support that. But yes, good set this time around.
Showing up in the stock price as well. Sonal, thanks a lot for that. Godrej Properties trading with gains of around 2% after the earnings announcement. But the other stock that's done well, as Ekta just mentioned a few minutes ago, is Granules India, and that is building on the gains from yesterday after the earnings announcement. What's working for them?
Well, yes, I'll take you through the numbers first. That came out yesterday. Revenue up around 20-odd%, margins 22% versus 14%, profit of around 134 crores. North America did well. It was up 45% on a year-on-year basis to 870 crores. Finished dosages did well. It was up 66% year-on-year. Net debt to EBITDA reduced to 0.77 versus 0.98 times year-on-year. Now, in terms of the conference call, they are expecting an improving trajectory in the financial performance driven by oncology products. They expect significant impact from the dominance that they have in metformin, which is a diabetes drug, in the diabetes segment. Employee expenses are expected to increase at double digits in FY25 and then reduce in FY26. Margins should improve from the current 22% and be much above 20% according to them. And price erosion has stabilized at mid to high single digits. So overall, seems as though they are expecting this operational performance to continue for Granules, and that's primarily what the street likes at this point.
The street likes it indeed. The stock is up for the 8th day in a row today, is Granules India, and has gained 25% in these last 8 trading sessions that the stock has been on an upward trajectory. Now 7% higher at 630 is Granules, and the stock on the 19th of July had closed at just above levels of 500 rupees. So good going there for Granules India. Time for a short break. More on the markets and other specific stocks on the other side. Stay tuned. We'll be right back.
So on, sir. 2004-5 budget did not take the name of 17 states. I like to ask the UPA government members at that time, did money not go to those 17 states? Did they stop it? Then if they stopped it, they have every business to ask this question. I presume they didn't stop money going to those 17 states because they didn't name it. So when it is one thing for them, it's all right. When the same thing happens somewhere else, no, it's not all right, you've deceived. 17 states were not named in 2004-5. 18 states were not named in 2005-6. 13 states were not named in 2006-7. 16 states were not named in 2007-8. Money didn't go to them. 2008-9, 13 states were not named. 2009-10, 26 states were not named. 26, which means only 2. Sir, oh yes, sir, if we are being blamed that only 2 states were named and the other states are not getting anything, 2009-10 budget had only 2 states, Bihar and Uttar Pradesh, and no other state. What does that mean then? It's all right when you do it. You didn't give money to those states which you didn't name. So, sir, you can't have it both the ways. You do one thing and then you blame the same thing on somebody else. What happens to the states which were not named? I'm asking now, 2009-10, 26 states of India did not have a mention. 2009-10, the full budget, 20 states. Interim budget did not have 26. The full regular budget, 20 states did not have it. So what does that mean, sir? They continue to ignore states. 2010-11, 19 states were ignored. 2011-12, 15 states were ignored, they didn't mention. 12-13, 16 states were ignored. 13-14, 10 states were ignored. So, sir, for that matter, the interim budget of 2014-15 ignored 26 states. Was there a noise? Did people say you ignored those states, you didn't give money?
Early this morning, Wayanad was hit by several devastating landslides. More than 70 people have been killed. Mundakai village has been cut off, and the devastating loss of lives and extensive damage is yet to be assessed due to the scale of the tragedy. I have spoken to the Honourable Defence Minister and the Chief Minister of Kerala. I request the Union Government to extend all possible support for rescue and medical care, immediate release of the compensation to deceased people, if that compensation can be increased as well, restore vital transport and communication lines, set up relief at the earliest, and prepare a roadmap for the rehabilitation of the affected families.
Okay.
Even as I speak, the threat of landslides looms over many areas in Wayanad and the Western Ghats. Our country has witnessed an alarming rise in the landslides in the last few years. There is an urgent need for mapping of landslide-prone areas and to take up mitigation measures and an action plan to address the growing frequency of natural.
Welcome back. Well, let's talk about a couple of stocks now. Ajanta Pharma, in fact, is in focus, reacting to its conference call takeaways from yesterday, from last evening. They've raised their EBITDA margin guidance to 29% plus or minus 1% for FY25. They've lowered their consolidated tax guidance to 24%. Their US business in Q1 was around $27 million, down by around 4 million Q on Q. And they expect that the US business will record a single-digit growth in FY25, but they expect the launch momentum to pick up in the second half, as well as in FY26. So Africa business also did well. It was up 44% on a low base. FY25 should see a very good growth in the Africa branded business, up to around 20%. But medium term, it should probably moderate to low double digits. Elara has upgraded the stock to accumulate versus reduce. Their target price is higher. Nirmal Bang downgraded the stock to accumulate versus buy. That is because of the valuations raising concerns. And Equirus has retained its short on Ajanta Pharma. The stock is holding up quite well, up around 3% at this point in time. Well, on that note, we need to also wrap up on halftime report. Business Lunch will take all of the action forward. Stay tuned.
In the ecologically fragile region. Thank you, sir.
where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not an expectation?
There are many areas where a commercial consideration could lead to privatization or disinvestment, and I'm as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say, this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening, is our both expectation and policy.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be, government endeavor would be, keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are two other imperatives come in. The other priority needs and fiscal consolidations. It has to be done. There are the trinity which has to be taken care. The other two pieces, and who else have to do the heavy lifting? Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner, that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year. That's what we expect to do. Next year 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio. If we are talking about 3% plus to go to capital expenditure, we are still, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus.
See small gains ahead of the important US Fed meet that's today. Utilities as well as the metals are the bright spots in the market, even as real estate and capital goods lose sheen.
SEBI's consultation paper proposes steps to curb excess speculation in the F&O segment by restricting weekly expiry to a benchmark index contract, increasing ticket values and raising margins on pre-expiry and expiry days, among other measures. Market experts foresee a significant impact on volumes and are likely to offer their feedback by the 20th of August.
RBI proposes strong action against willful defaulters, rules out any debt restructuring and allows lenders to swiftly proceed against the guarantors of such loans. Now, the rules will apply to all the loans above 25 lakh rupees.
GAIL rallies on widely surpassing income and profit estimates. Torrent Power jumps on an electrifying performance, riding on strong demand, and Dixon Technologies spikes on beating estimates on traction in the mobile segment.
The Bank of Japan raises its short-term policy rate to 0.25% from 0 to 0.1%, its highest since 2008, following a rise in wage and service inflation. And the central bank also aims to trim its bond buying as per a liquidity tightening plan. Hello and welcome. You tuned into Business Lunch. I am Nisha Podar, and with me as always is Sonia Shenoy. So Sonia, minor gains today, but that 25,000 level for Nifty 50 is still elusive. Let's take stock of the market at this point. 24,932 level, 0.3% gain on Nifty 50, and Sensex is gaining about 220 odd points at this particular moment. Now take a look at Bank Nifty. That is flattish with a red bias, so really not participating over there. But mid caps are the spot which are resilient and gaining momentum. 0.8% up on the wider, broader market mid cap index, and that's also impacting the overall market strength, with the advance decline ratio being in favor of the advances. On my screen, some of the discretionary spend as well as consumption companies like Asian Paints doing well, JSW Steel from the metal pack, and some of the PSUs like NTPC is doing well in trade. And on the flip side, it's Tata Consumer and Divi's Labs which are the downward draggers in trade. Sonia.
Well, you know, it is a really good day as per, my lens, because I think we're just 70 points away from the 25,000 mark on the index.
We've been in this state for a while.
Yes, we have been in this state for a while. I guess, you need to be patient for everything good, right, in life. So I guess some amount of patience is being tested in the market right now. But it's just a matter of when and not if the market hits that 25,000 mark. And today looks like maybe, you never know, never say never. Just about, I think, 70 points left for the Nifty to hit that mark. But interesting day up ahead. It is the mid-cap index where all the action is really. So let's begin Business Lunch by focusing on one of the larger pieces of news that came out in the last 24 hours, which is SEBI releasing a consultation paper which proposes tighter derivatives trading rules to boost market stability and protect small investors. The move comes as part of the market regulators' attempts to create a stable and transparent trading ecosystem. My colleague Yash Jain joins in to tell us more. Yash.
Well, Sonia, this is a very important consultation paper on essentially intending to cool down or bring down the excessive exuberance or excitement when it comes to F&O trading volumes or futures and options trading volumes. There are multiple important points suggested by market regulator SEBI in that direction. I'll take you through some of the most important ones, and the biggest out of them would be around the minimum contract size. What market regulator SEBI has done is it's significantly increased the minimum contract size. It has said that the minimum value of derivatives contract on the futures and options side will be about 15 to 20 lakhs for a new contract for the first 6 months. Once that contract completes about 6 months, then it will be raised to about 20 to 30 lakhs. This is the minimum value of the contract size. This currently is just at about 5 to 10 lakhs. So you can see a significant increase there. The second one is with respect to rationalization of weekly index products. SEBI has said that weekly options contracts will be provided on a single benchmark index of an exchange. Now, today there are weekly expiries on Nifty Midcap, Bank Nifty, Fin Nifty. BSE has 2 contracts on BankX and Sensex. SEBI said that any exchange can only provide weekly expiry on one contract. Others can be monthly expiry. SEBI has also increased margins when it comes to trading on days closer to the expiry. On the day of the expiry, it can be increased further by about 5% a day before the expiry. The margins, ELM, extreme loss margins, can be increased by about 3%.
Okay, thanks a lot for that. Well, those are Mahindra and Mahindra's numbers that have come up on your screens. Now, the numbers are actually marginally lower than estimated, both on the revenues as well as on the profitability front. But it is the EBITDA margins, the core EBITDA margin number, which is perhaps better than what the street was estimating. So no major surprises in this quarter's numbers. Just going through a couple of the key internals. Remember, the auto segment for M&M has been doing very well because of the strong growth that we've seen in the SUV segment, right? So I'm going through the auto segment numbers. The margins for autos are almost at double digits now. 9.5% EBIT margin is what the company has clocked in on the auto segment. And this is on a base of almost 19,000 crores of revenues. This is purely for the auto segment I'm talking about. The farm equipment segment as well, more details are out. Now, the farm equipment margins this time around have come in at 18.5%, which is a very healthy growth coming in the farm equipment segment. So, good operational performance is what the company has seen. Margins at 14.9% versus a poll of 13.8%. In the auto segment as well, you have, a lot of things that are working in favor of the company. Of course, the SUV segment is picking up at a big pace. Raw material prices have cooled off. They've in fact managed to pass on higher raw material prices as well to consumers. Ashwin Patel is joining in. He's a senior research analyst at LKP Securities. Ashwin, thanks a lot for joining in. These look like a decent set of numbers from M&M. Your thoughts first up on the numbers, and what would your view be on the stock now?
Well, the numbers have come quite, slightly better than our expectations, because the margins, they have like outperformed themselves what they had reported earlier, especially on the farm equipment segment. And on the auto segment, I would say that, 9.5 is a decent set of numbers, decent margins, but I would say that, still that double digit is not yet reached, but definitely, I think that with good volume performance going forward, that can also be reached in Q2 or Q3. But on the farm segment, I would say that good monsoon has, we have seen a good monsoon performance till date. And going forward also, if it remains so, then farm equipment numbers can also, better their earlier performance. And on the margin front also, we can even better margins on that segment. So going forward, see, the numbers were quite decent on the profitability front. But going forward, I think we need to wait and watch how the raw material pricing goes going forward, and how the margins perform. And definitely, I would say that the volumes will be better than now, considering good monsoons and also the festive season coming up. But the profitability needs to be monitored, considering slightly inching up raw material prices.
Okay, got that. If you look at the segment-wise performance, right, both autos and the tractor segment have seen an improvement in margins. So, auto segment margins have actually gone up 130 basis points year on year at 9.5%. And the tractor segment margins have also improved 100 basis points year on year, coming in at 18.4% versus 17.4%. So, both segments have seen a very good growth in terms of their operational performance. Prakash Diwan is also joining in. Prakash, decent set of numbers. The stock has had a phenomenal run this year. It's up 70% in 2024 already. Based on these numbers, do you think the stock can build on to its gains further?
So I doubt, Sonia, whether there's any more salience that hasn't translated into the stock. I'll tell you why. You haven't had any dramatic launches except for the XUV 300 in recent months, which could get it to up its market share in the SUV segment, which is its bread and butter auto segment. But it's the farm equipment thing where I expect a lot of positivity to happen. This has happened because of restocking. Last year, there's a huge slowdown in sales on tractors, and they've actually been able to do that restocking. If you speak to the dealers, you'll realize that everybody's gearing up for a good monsoon phase. So that's anticipation. So that will only translate into numbers maybe by September. And on the, recently this hybrid vehicle thing has kind of started impacting some of these companies in a way where they had to rationalize pricing, especially the high-end vehicles. So there will be a few of those things which will take time to stabilize. So I would believe this current quarter is going to be a quarter of consolidation for them. So the stock might not react very positively, but probably hold on to where it is. So as I said, it's done so well. The triggers to move it here from here further might be still, having to be waited upon. I mean, I don't think there's anything in these numbers which will take it forward.
Okay, there's nothing in these numbers that can take it forward, you're saying. In fact, there is not just the operational performance, right? Both the auto and the tractor segment margins have improved. But even if you look at the top line growth, tractors are still struggling a bit, not got to double digit just yet. But the auto segment, which consists largely of the SUV segment, there's double-digit top-line growth as well. So looking pretty decent over there. Ashwin, I wanted your thoughts on the stock itself, because yes, these numbers are good, but as Prakash was saying, going forward, given the kind of returns that the stock has already given, it looks a bit tough for it to build on to its gains further. Would you concur with that view? And at this price, 29.20, how does the risk-reward look, Ashwin?
Yes, even I think that there will be some sort of consolidation in the stock price, given that such a fabulous rally that the stock has over the past 1 year. So from these levels, I mean, we need to see whether there is a serious upside from here. But you never know. I mean, the stock has been surprising us over the past few quarters as well. And going forward, maybe the stock can give us maybe like a 5 to 7% kind of upside from these levels. So maybe, putting a buy at these levels will be challenging.
Okay, putting a buy at these levels is challenging. I just wanted some thoughts on the auto segment. You were talking about how they haven't managed to get to double-digit margins just yet in the auto segment. 9.5%, but that's still a 130 basis points year-on-year jump in their auto segment margins. Ashwin, any levers to improve their margins further, and what are you looking at? What are you penciling in terms of full-year margins for the company? Currently, they exited Q1 at about 15% margins in both the segments cumulatively. At the end of the full year, what are you looking at? Would you change your estimates at all?
The levels for the margin would be, the product mix, which would be in favor of the farm equipment segment going forward. As I said earlier also that the monsoons are expected to be, more than expected or, higher than average of last year, etc. Maybe like 106%, that's what the Met Department is predicting. If that happens, the tractor sales would definitely go up, and with that, I think there will be some levers on the FES side. But for the auto side, I think, reaching 10-10.5% kind of margins this year will be slightly difficult, considering, the RM prices, which may move up going forward. Because we don't have a clear view on that, but that can be one of the headwinds for the auto segment margins going forward.
Okay, and Prakash Diwan, any final thoughts from your end? Looks like a decent set of numbers. Strong operational performance, both autos and tractor margins have improved, and double-digit growth in the auto segment on the top line as well. Any final thoughts on the earnings?
No, so I think very good set of numbers justifies where the stock is, which has risen so smartly. So from here on, we'll have to, as I said, wait for some consolidation, and any new product launches that they start building a pipeline on will be the reason where the margins could start improving, because that's where it gives them some pricing power, which right now could be difficult. So it's that miss on the pricing power for higher end vehicles, which is only concern. Otherwise, I think very good set of numbers, and the stock probably remains in this zone and justified so.
Okay, just a couple of more details that have come in from the press release, which look pretty good at the moment. The tractor segment market share has actually gone up. So if you look at it, the market share in the tractor segment has gone up 180 basis points in Q1 at 44.7%. They are also the number one in the electric three-wheeler segment with market share at 43.4%. And in the SUV segment, the market share has gone up by 130 basis points year on year at 21.6%. So across both the tractor as well as the SUV segment, the market share of M&M has increased, which is another positive for the company. And hence, that's the reason why you're seeing the stock move up to the high point of trade as well. So thanks a lot, gentlemen, for joining in and helping us analyze these numbers. Decent set of numbers. Strong operational performance continues. Market share has improved across key segments like tractors and the SUV space. And the top line growth as well, double digits coming in for key segments like the auto space. Hence, at the high point of trade currently.
That's right, Sonia. In fact, the market has really taken cognizance of the profitability and the beat that it has shown in EBITDA and EBITDA margins. With that, we'll slip into a short breather. But remember, up next, Hamas chief was killed in Iran and heightening the tensions between Israel as well as Hamas. And we'll get you more details on this conflict right after this very short break. Stay tuned to Business Lunch.
Moving forward, if on a nominal basis that can be maintained, that will be a good achievement.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you have earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly been.
Welcome back. You're watching Business Lunch, and let's get you an important global update today. And the Bank of Japan has raised the benchmark interest rate to around 0.25% from the previous range of 0 to 0.1%. Now, this marks the central bank's highest interest rate in 14 years. Remember that US Fed also meets today for taking decision on interest rates.
Okay, well, on to some important international updates. Hamas chief Ismail Haniyeh was killed in Iran just hours after attending Iran president's swearing-in ceremony. Hamas has accused Israel of killing and calling it a severe escalation, while Israel has denied any responsibility. Iran's Revolutionary Guards has also confirmed the death, saying the leader's residence in Tehran was hit and he was killed along with a bodyguard. Iran has started investigation in this matter.
All right, and in updates back home in the national news, well, the death toll in the series of landslides in the state of Kerala's Wayanad district has climbed to 158, according to the state's health department, with dozens still missing. In fact, CNN News 18's Neetu joins us with more details coming in straight from the affected region of Wayanad.
The terrible tragedy in Wayanad, at least 158 people have lost their lives so far. The rescue operations in Mundakai area is going on even as we speak. The bridge to that area, there is a reconstruction of that bridge will be happening. Only after that, more heavy machinery can be brought into that area. But now the rescue personnel, the teams have reached there through hammers, through those kinds of small equipments. They are trying to recover as many people as possible. The postmortems of almost 143 people have been conducted. Many have been identified and handed over to the families. There has been a review meeting called by the Chief Minister today. Tomorrow there is an all-party meeting in Wayanad. Chief Minister is also expected to be in Wayanad tomorrow, where this all-party meeting will be taken. 5 ministers has already got there in Wayanad coordinating the efforts, and Health Minister Veena George is also there. It's a tragedy that on a scale that we have not witnessed in Kerala in one particular place. Even in 2018, though there were deaths, it was across the state, but this in one area, in one district, 2 landslides which has caused this.
Okay, well, that's all the time we have on Business Lunch, but don't go anywhere. Mid-Cap Radar comes up next.
More expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have
today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Welcome back to Midcap Radar. The midcap end of the market continues to hold up very steady, 0.8% higher as far as the midcap index is concerned. The next corporate on our radar is Capital Small Finance Bank. Q1 was a good quarter for them with healthy growth in business momentum. Their asset quality has been stable while slippages have declined. To discuss more on the Q1 performance, Sarvajit Singh Samra, MD and CEO at the bank, joins us now. Good afternoon, sir. Thank you so much for joining us. First up, congrats on a good quarter. While the rest of the banking sector has been struggling to get deposits, both on a year-on-year as well as on a sequential basis, you have managed to increase your deposit base. Could you give us a sense whether this particular trend can continue going into the rest of FY25 as well? And what is the target that you have for advances?
Good afternoon, Vivek, and thank you for this connect. Actually, the growth in advances and deposits is very much in line with the bank's estimates. Normally, if we see Q1 with regard to advances, is normally a stable quarter, where if historically we have seen not much growth in that, and even a slightly decline if we dig into the previous Q1s of previous years. But for this year, the growth both for advances and deposit has been very healthy. We have made a disbursement of 754 crores in this Q1 itself, which is a 62% growth on year-to-year basis and a 12% growth on Q and Q. So we are very much aligned with our business guidance that we have given at the beginning of the year, that this year we'll grow our advances by 22 to 24%. And actually, if you see, if we slightly dig a bit back, like say during the last 2 quarters, I'm saying the quarter Q1 and the last quarter of the last year, because we got listed in February 24. So after the listing, the growth capital was there. If we dig into that 14 crores of disbursement has happened after our listing, which is a growth of 12%. So I'm very confident that
And what is the deposit growth you're targeting? You spoke about the advances growth.
Actually, the thing is, we are a retail deposit franchise, and to fuel our advance growth, we are very much aligned. So we take this call since there's a leg room available to increase our CD ratio. Levers are available in the balance sheet. So deposit has never been a problem for us. We are a retail franchise for last more than 24 years. So we'll be pushing our deposit growth to align and to fuel our advance growth.
So when you say you'll be pushing it, Mr. Samra, YOY this time around the growth has been 10%. Do you think that is a number that will continue? Just trying to understand, because deposit is at the end of the day the raw material for loan growth as well, right? So what is the guidance you have here?
So absolutely, say to fuel a growth of 22 to 24% of advance target that is there for us during the year, we need a lesser, say slightly lesser growth in deposits, and we are very much aligned with regard to for that deposit growth. And you would appreciate even in this Q1, even we have improved our CASA ratio as well. Yeah.
Right, sir. So before we move on, there's been a significant development as far as, regulator is concerned. RBI has come out with norms. These are draft norms, of course. As far as liquidity coverage ratio is concerned, prima facie, what will be the impact you will face on the back of, adhering to these norms?
Vivek, like, otherwise, of course, we have been pushing, say, mobile banking and all to our customers and all. Impact is going to be there on the industry if these guidelines are, say, implemented in toto. Still, they are draft guidelines. Industry is estimating something around, say, varying between 12 to 18%. But what estimate we have now, if the same guidelines remain, the estimate that we have is that it will impact us by 13 to 15%. But our LCR, you must have seen, is quite high. We are far above the prescribed limit. So it's not going to be a challenge for us, but impact is going to be there. Yeah.
Okay, so you've not been able to quantify the impact yet, but of course this is something which is
yeah, the impact will be around 13 to 15%. Yeah.
13 to 15%. Okay. Last question before we let you go, Mr. Samra. You do have around 68% of the total loan book coming in from rural and semi-urban areas. We've been talking about higher inflation, rural recovery, which is of course improving according to some industries, but just wanted your take on that. Is that something which is working well?
Yeah, it's working well for us, and the type of the customer segment that even we cater to in rural and semi-urban areas. We cater to middle income group segment. Even if we are in agri, we cater to middle income group farmers. We are not there in small and marginal, and we are not there for high net worth farmers as well, very big landlords. So the type of segment into which we are, say both in rural and semi-urban. Semi-urban, we are seeing a growth in small units, MSMEs, traders, where we are very much into that. Even for Q1, we have the focus has been more on MSME, where like MSME have contributed 25% of our growth in Q1, and similarly mortgages 25% and agri 22%, and the rest being others. Yeah.
Thank you so much for joining us. We have to cut short our discussion today due to paucity of time. Thank you for joining us. Let's now cut across to the management of M&M, which is addressing the media after the Q1 FY20 fund results performance.
And there, and you will see continued results on that as we go quarter by quarter. Overall, consolidated profits are up 20%. This does exclude the impact of one-timers that we had last year in the profits, which was a gain on KG Mobility and a gain on the sale of Mahindra CIE shares. So excluding that, PAT from a consolidated standpoint is up 20%. ROE is at 19.4%. And as we look at the overall consolidated picture, revenue up 10%, profits are at 3,283 crores, as I said earlier, up 20%, excluding the one-time gain last year. The key drivers of our profits, auto and farm combined up 18% for the quarter. Beyond the market share gains, SUV capacity continues to increase. We have tripled capacity in the last 4 years. And that tripling of capacity now helps us in terms of being able to meet the backlog of demand and be more aggressive in the market as well. And despite being more aggressive in the market, we've been able to deliver a very strong margin performance. Tech Mahindra is up 23% off a lower base, and therefore we continue to maintain a high bar for the business to get back fully from a turnaround standpoint. Mahindra Finance is up 37% off a pretty strong base. And on the growth gems, where we've got a 5x challenge, they're again on a strong path, up 34% year over year. But more than profits in growth gems, what we look at is the underlying businesses and are they being set up for that 5x growth, because we're looking for long-term growth of that business, not short-term profit. So while it's up 34%, this is not a number that I look at very closely to say it should be up in high numbers. More important is the underlying businesses, and they're at this point doing very well. So let's focus a little deeper into each of these. Auto continues to be the number one SUV player. Volume is up 24%. We had talked about mid to high teen volume growth when we talked about F25 a few months ago. And in the first quarter, at least, we have exceeded that by growing 24%. Capacity I spoke about, and the margin expansion is 180 basis points. Again, a very healthy margin expansion on the auto front. Market share we spoke about, resulting profit is 1,330 crores from an auto standpoint, which is now inched ahead of the farm profit, which is 1,238 crores. And farm has seen some improvement in domestic outlook, but industry has been relatively flat. Hemant will share the details for the first quarter. And despite that, due to the market share gain, we've seen good progress in this business. International markets have moderated, but due to strong execution, margins gone up 100 basis points here, which again, in an industry like farm, is a pretty tough act, and a lot of kudos to the team to drive that margin expansion. Mahindra Finance, in addition to the asset quality and growth, technology is a key part of our turnaround. And we have 100% of branches now under a central processing system with a much better tech system. A lot of work has been done on technology. We aim to be the best in class in the industry, and we are well on our way. That's the remaining year and a half or so of turnaround that Mahindra Finance will undergo, is largely from a tech standpoint. And here you see almost 500 crores of profit for the quarter for Mahindra Finance. This is a pretty remarkable number. We're at 497 right now, just shy of that 500 crore number. Tech Mahindra, the new organization's focused on service delivery. The demand signals are still mixed. You see good numbers from a previous year comparison standpoint, but again, to be very transparent, previous year was a low point, and therefore we look more at, are we on track with the turnaround plan as compared to the numbers of the previous year. Logistics is on a better track now. though not completely out of the woods as yet. It's executing far better, and the express business now, despite showing losses this quarter, is on a very good track. And as committed by the management team there, we expect that business to turn around by the end of the current quarter that we are in. Revenue is up 10%, but EBITDA has been hit by the express business and therefore is down as compared to the previous year.
I would like to humbly state this. I'm sure all the members know that in a budget speech, if a state is not named, it doesn't mean that no money goes to them. And therefore, that was a misleading campaign, which, being in the opposition, unfortunately, a lot of members did speak about. It pains me to know. It pains me to know that they could say that if you're not mentioned in the budget speech, your state gets nothing at all. I'm picking up on the budget speeches since 2004-5, 5-6, 6-7, 2007-8, and so on, sir. 2004-5 budget did not take the name of 17 states. I like to ask the UPA government members at that time, did money not go to those 17 states? Did they stop it? Then if they stopped it, they have every business to ask this question. I presume they didn't stop money going to those 17 states because they didn't name it. So when it is one thing for them, it's all right. When the same thing happens somewhere else, no, it's not all right, you've deceived. 17 states were not named in 2004-5. 18 states were not named in 2005-6. 13 states were not named in 2006-7. 16 states were not named in 2007-8. Money didn't go to them. 2008-9, 13 states were not named. 2009-10, 26 states were not named. 26, which means only 2. Sir, oh yes, sir, if we are being blamed that only 2 states were named and the other states are not getting anything, 2009-10 budget had only 2 states, Bihar and Uttar Pradesh, and no other state. What does that mean then? It's all right when you do it. You didn't give money to those states which you didn't name. So, sir, you can't have it both the ways. You do one thing and then you blame the same thing on somebody else. What happens to the states which were not named? I'm asking now, 2009-10, 26 states of India did not have a mention. 2009-10, the full budget, 20 states. Interim budget did not have 26. The full regular budget, 20 states did not have it. So what does that mean, sir? They continue to ignore states. 2010-11, 19 states were ignored. 2011-12, 15 states were ignored, they didn't mention. 12-13, 16 states were ignored. 13-14, 10 states were ignored. So, sir, for that matter, the interim budget of 2014-15 ignored 26 states. Was there a noise? Did people say you ignored those states, you didn't give money?
Early this morning, Wayanad was hit by several devastating landslides. More than 70 people have been killed. Mundakai village has been cut off, and the devastating loss of lives and extensive damage is yet to be assessed due to the scale of the tragedy. I have spoken to the Honourable Defence Minister and the Chief Minister of Kerala. I request the Union Government to extend all possible support for rescue and medical care, immediate release of the compensation to deceased people, if that compensation can be increased as well, restore vital transport and communication lines, set up relief at the earliest, and prepare a roadmap for the rehabilitation of the affected families.
Okay.
Even as I speak, the threat of landslides looms over many areas in Wayanad and the Western Ghats. Our country has witnessed an alarming rise in the landslides in the last few years. There is an urgent need for mapping of landslide-prone areas and to take up mitigation measures and an action plan to address the growing frequency of natural calamities in the ecological.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are seeing rates unchanged, you'd have to say, for the markets. So the Bank Nifty is still showing a downtake of around 65 odd points. We have the Nifty, which is up around 0.3%, and the mid-cap index, which is doing better with a gain of around 0.7%. Overall, advanced decline ratio is on the advancing side, so around 2,200 stocks advancing to around 1,800 stocks declining on the Bombay Stock Exchange. Well, joining us today, we have Rajat Bose and Parthiv Shah to answer all of your stock queries. Rajat as well as Parthiv, welcome to the show. Well, before we kick off the show, that mandatory technical check. Rajat, today maybe there is a little bit of wait and watch ahead of the Fed meet, but 25,000, do you think that's probably going to be round the corner, or is it going to take some time?
Well, 25,000 is a major landmark level. The earlier high had been 24,998. Now, even if you go beyond 25,000, 25,111 is a Fibonacci level. So I take it this way, that 25,000 to about 25,150, this is the supply zone, this is the resistance. Once it is taken out, then you can see long road ahead, meaning that beyond 25, before 25,600, there is no such resistance as such, even if you do some projections. And it could even go beyond 26,000. But 25,150, I need to see that it is taken out. There is a crucial meet. Let's see how things pan out. But as of now, we have to say that all dips are likely to be bought.
Okay, all right. All dips are likely to be bought. Well, that's the word coming in for the technicals of the market. Any word on M&M, Parthiv, before we kick off the show? Just came out with its numbers, holding with a gain of around 1% odd.
Good afternoon, Ekta, Rajata. Yes, Ekta, I think very fine set of numbers, and more importantly, I think they've held on to their market share in the SUV segment, and they have very interesting pipeline going ahead. We are very upbeat on their farm equipment segment, and the management has reiterated that, and probably hoping that H2 for this year should bode very well for their high profitable farm equipment segment, which brings in better EBIT margins. And overall, I think the management is doing all the right things. The capital allocation policy has really worked well for them, improving the ROE trajectory for the company and for the shareholders. Going ahead, I think after the recent correction, we are upbeat on this company for the long term.
Okay, you're upbeat on the stock. Any target price on that?
I think 3,200 seems to be on the card for this year.
Okay. All right. Well, we have Jayant Kumar, who writes to us from Karnataka. He holds 243 shares of Canara Bank, which he's bought at around close to 120 odd rupees. He's sitting on a loss there. Wants to know what to do, whether he should hold or sell this particular counter. Well, I'm going to toss it over to you, Rajat, on this one. On the technicals, does it look promising first to start with, Canara Bank?
It had been promising when it started its journey from around say 60 or even say 100. But now at current prices, I see a distribution both on the weekly chart as well as on the daily chart. So my suggestion is that get out of this, book profits. That would be a better idea, because from here, unless it takes out 130 decisively, it is unlikely to go further up. Probability has it that it would actually come down. At least it will come down to levels around 100 to about 95. And after that, a fresh move can happen. If the investor is willing to see such downsides and carry on, definitely no problem.
Okay, all right. So that's on Canara Bank. Fundamentally, how would you approach the stock, Parthiv, Canara Bank?
Fundamentally, I think Canara Bank is one of the finest PSUs, and more importantly, I think what we like is that in their corporate book, I think which is almost 6 lakh crores, I think the division in terms of the different verticals is very good, and they've improved their underwriting standards. And since many quarters that we've been tracking Canara Bank, I think we see that the net slippage ratios have come down and the asset quality has consistently improved. And I think it's a very good cycle for a lot of such PSU banks. And going ahead, I think even the retail assets, especially where 60% of the book is in the housing segment, I think that is also quite stable and growing well. So our sense is that, yes, after the massive run-up and a massive re-rating from its very low price to book multiples of 0.7, it's now quoting at around 1.4 times forward FY26 price to book multiple, which is a little expensive on historical standards. But I think the quality of the book has not looked as good as before. And more importantly, I think if you see the fundraising ability of the bank, I think that is fantastic. They might even monetize some of their subsidiary stakes in their in their IPO holding in their asset management company, which is the Canara Robeco, and I think that should also garner them good capital for future growth.
Okay, all right. Well, we now have Samir, who writes to us from Mumbai. He holds 60 shares of Indus Towers, which he's bought at 210. He wants to know the short-term view of this particular holding. He's ready, I think, to hold it for 6 months. So in that context, he's sitting on a profit at this point in time. So his entry price was 210. So that's a good price to enter at. But fundamentally, what would you recommend, considering that Indus Towers is reacting negatively to the buyback announcement as well as a possible margin expansion which came through as well? That was because of a write back on provisions. But nonetheless, your view on Indus Towers fundamentally?
See, fundamentally, I think the results were kind of in line. Nothing so exciting as to re-rate the stock further, because we realize that this has done extremely well over the last 2 years, especially with the fortunes of Vodafone Idea changing and them exiting, along with the fact that Bharti has continuously upped its stake. And now I think it's called as a Bharti Group company, which is, I think, giving a lot of confidence to the market. And also the buyback at around $465, I think that's not something that really excited the street. Generally, a lot of these buybacks tend to happen at a lot more premium, and that's the key reason why the stock has not really done well post the results and also the buyback announcement. But fundamentally, I think we are upbeat on this space, because I think they are going to do a capex of almost 9,000 crore for the new age 5G towers, and which will bring them better rentals. And I think it is India's one of the largest tower renting companies. And I think the way ARPUs are going up, that should incrementally benefit such tower companies. But yes, currently I think it's priced to perfection. So might consolidate for some time before the next leg of rally starts.
Okay, all right. Well, now we have Dheeraj, who writes to us from Hyderabad, holds 90 shares of Credit Access Gramine, which he's bought at around 1,409. So he's sitting on a loss. He wants to know what to do, whether he should book his losses or stay invested in this particular counter. Well, Rajat, over to you on Credit Access Gramine. What would you recommend on the technicals of this particular stock? He's sitting on a loss. Is it possibly going to get back to its buy price, to the buy price at least of 1,400?
At least at the moment, what I see is that on the weekly chart, there is a 20-week and 50-week moving average bearish crossover. This suggests that there would be further fall, but unless it falls below 1,200, I would suggest that consider that as the Lakshman Rekha or your stop loss. you continue to hold it, because there could possibly be a bounce when it may test 1400, and at that point of time he can get out of it.
Okay, all right. At that point, he can probably exit. That stock has not done much in terms of a one-month chart. It just came out with its Q1 FY25 numbers recently itself. The near-term outlook, according to a couple of analysts, was a little pessimistic. But in any case, that's on credit Access Gramine. Let's stay with the entire financial space. Reserve Bank of India has issued master directions on treatment of willful defaulters, asking lenders to consider borrowers' intent before taking action, even as it prescribes stringent penal measures for such defaults. It also directed banks to examine all bad loans above the threshold of 25 lakhs for evidence of willful default. Ritu Singh has the key highlights from these new guidelines.
Well, the Reserve Bank of India has issued final guidelines on the classification of willful defaulters that comes into effect in 3 months. First, who is a willful defaulter? RBI says a borrower is going to be classified as a willful defaulter if they default on loans despite having the capacity to repay and the outstanding loan amount is at least 25 lakh rupees. The tag is also going to apply to those that have diverted funds, siphoned money and so on. But the identification has to be on the basis of the borrower's track record and not one isolated incident. In fact, banks have been directed by the RBI to check all NPAs of more than 25 lakh rupees for any signs of willful default. And if banks in their internal preliminary screenings find that a borrower has willfully defaulted, they'll have to complete the entire process of classification as a willful defaulter within 6 months of the account turning an NPA. Now, following the Supreme Court's ruling last year as well, RBI has now mandated that an identification committee first examine the case, allow a borrower 21 days time to respond to the show cause notice, then refer the matter to a review committee which will take the final call only after allowing borrowers time for personal hearings and written submissions. So what happens if the account or a borrower is tagged a willful defaulter? Well, as penal measures, there will be no additional credit that will be granted to the borrower or associated entities for at least 1 year after the name has been removed from the list of willful defaulters, and there will be no credit to start new ventures until after 5 years from the removal from the list. No restructuring is going to be allowed, and RBI goes on to say lenders can even proceed against the guarantor of the loan even without having exhausted remedies against the principal debtor. So tighter rules for classification of willful defaulters, and these are going to be applicable to all of the regulated entities.
Okay, all right, Ritu. Thanks very much for getting us that update. Well, some more updates coming in from M&M with regards to the industry and the EV penetration, which is at around 20% with new players. They expect the category to grow. Critical markets have been impacted positively with the monsoon. So we take a break, but on the other side, more queries. Stay tuned.
Thank you, sir.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not an expectation?
There are many areas where a commercial consideration could lead to privatization or disinvestment, and I'm as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening, is our both expectation and policy.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be, government endeavor would be, keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are two other imperatives come in. The other priority needs and fiscal consolidations. It has to be done. There are
so you're
now
saying
the trinity which has to be taken care. The other two pieces, and who else have to do the heavy lifting? Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner, that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year. That's what we are expected to do. Next year 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio. If we are talking about 3% plus to go to capital expenditure, we are still, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis.
Welcome back. Well, we still have Rajat Bose and Parthiv Shah to answer all of your queries. Well, let's get going on a couple of more questions that we have. We have Shamal Chatterjee, who writes to us from Dehradun, holds 500 shares of Bharat Electronics at 276. He can hold the shares for 3 to 6 months and needs advice on the same. Where Bharat Electronics 276 sitting on a good profit. And I think a lot of people have this query with regards to stocks such as Bharat Electronics. And Rajat, we've spoken about this many times before, that maybe it could be prudent to take some profits off the table. But for this stock, what would you recommend?
Well, unless you are planning to go for the top whenever that happens, if I were in his or her position, I would have booked profits, because it has been on a tear and it has been moving up. Barring this week, the last 2 weeks prior to the current one, it showed quite a bit of weakness, but it bounced back. Yet I would suggest that one should actually take the profits and go home.
Okay, you would take the profit and go home. And what about you, Parthiv, on this particular counter?
I think my sense is that, yes, I agree that book some partial profits. One has got a stellar return, and hold on to the remaining position. If you look into the current valuations, the stock is quoting at around 50 times next year earnings. But I think if you look at the order book, consistently it's going up. Currently, the company is sitting at an order book of almost 70,000 crores. Previously, I think 3-4 years back, this was a company which used to manage order book of around 25,000 crores. And they've upped their execution. They're doing extremely well. They have a lot of technology tie-ups with different defense players. As a result of which, this is not a company which will be restricted to any one vertical of the defense space. But I think they are really diversifying their order book and their execution capabilities. What we also like is that this company is also looking at a lot of space-related technology development, a lot of products in that segment. That can also be huge going ahead. Also, I think if you see, they have got some orders in that segment, but that is something that we have upbeat on. Maybe there's a possibility, and the government did hint that companies like BEL could be heading into chip designing and chip manufacturing. If something of that were to happen, the company has the balance sheet strength to execute the same. So I think for a very long-term view, we are very, very upbeat on this company, but short to medium term, because of the massive run-up, do take partial profits.
Okay, so you would recommend taking partial profits. That stock has run up around 140% just in the past 1 year. So joining the list of a lot of the other PSUs which have gained. But Srinivas now writes to us from Chennai, holds 500 shares of M&M Finance, which he's bought at 292. Wants to know what to do, whether to hold or sell this particular counter. So M&M Finance, it's sitting on a good, reasonable amount of gains there. 500 shares is what he's bought. Would you recommend this rural play on a longer term basis, Parthiv?
Yeah, as you're also aware that M&M Financial has not really done great for its shareholders over the last 5 years. And one of the key concerns being, I think, a lot of delinquencies in its rural segment loan. And more importantly, I think the management has put in a lot of efforts to turn this around. And going ahead, I think one of the reasons why the stock has done reasonably well of late is because I think there's a confidence coming back that, now the book is looking better. A lot of loans that were bad were written off. And now the capital adequacy is also coming to the normalized levels. And going ahead, thanks to the fact that so far the monsoon has been reasonably good, the rural economy should pick up. There's been a decent budgetary allocation coming from the budget as well, which should help companies like M&M Financials for better recoveries. So I would suggest, I think, because the valuations are not very demanding, quoting at 1.6 times forward multiples, I think hold on for the next 6 months, review your position after that.
Okay, review your position after a few months. And technically, M&M Finance, how does it look to you, Rajat?
I would concur with Parthiv, and I would say that the 200-week moving average is around 239. I also believe that going forward, this company might do well. So use that stop loss because that's a major support. It's not 200-day moving average, it's the 200-week moving average, roughly translated 1,000-day moving average. So if that gets taken out, then definitely get out. Otherwise, you should stay put. Probably you will see a good move if it crosses 325.
Okay, a good move if it crosses 325. So that's the target coming in on the technicals of M&M Finance. Well, for the other counters which are doing a little bit today, Dishman has really stood out today. So that stock is up around 15% It's gained around 13% this year. So it's surpassed that gain just on a daily basis. Doing very well, Dishman. There's no specific news. Numbers have still not come out. So that stock continues to gain. Wockhardt is at around 922 odd rupees. That stock has been a complete rank outperformer this year. It's gained around 117% year to date. Z Entertainment reacting to its numbers that just came out some time ago. That stock is up around 4.5% as we speak. But this is what's taking place in the markets. The Bank Nifty is just about marginally lower at this point. Mid-cap index holding up well. That's all the time that we have on the show, but do remember to email us your queries. We'll address them with our experts. Stay tuned. Closing bell to take you through the last hour of trade.
Can we maintain, that will be a good achievement.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you've earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Slightly mixed picture emerging from the Asia Pacific.
Reducing the excitement which the regulator was observing in terms of volumes of futures and options contracts.
The Fed will be clear in its signal for a cut in September.
We were opposing this. I think this is a very retrograde move.
The Nifty, which is about 30-40 points higher.
Domestic liquidity is a revolution.
Rate cuts are delayed. Things like HDFC and Access suffer a lot more than ICICI.
Couple of heavyweights that are still dragging, keeping a lid on the momentum.
Core EBITDA margin number, which is perhaps better than what the street was estimating. Last couple of minutes, the market has picked up pace.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBCTV18 Motilal Oswal studios in Mumbai.
Okay, well, the wait for 25,000 continues even now, and we are not very far away, 40-50 points away. This is Closing Bell. We are coming to you from the CNBCTV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Nigel. And Surabhi will be with us in just a bit as well. Guys, hi, good afternoon.
Hi, afternoon. This has been one of the quietest low volatility sessions that we've had in a while. Pull up that intraday chart in the Nifty or even the mid-cap index. Steady state. The Nifty's moved in less than a 100-point band, and that is about 0.4%. So very, very steady. Just in the last few minutes, you are seeing a little bit of a pickup. So now it's what, 45 points away, Nigel, from that 25,000 mark.
Well, that's right. And we have the swing factor, right? We have the Nifty Bank that will play out its monthly expiry today. So expect some volatility to pick up out there. I'll tell you what, the Nifty Bank is now down close to around 80 points. If it can move up by close to around 100 points, there's a swing factor of around 180 points. we'll be there at around 25,000 odd. But the heartening aspect today is actually you have plenty of winners in the broader markets. So portfolios will be feeling good. Though if you pull up an advanced decline ratio, at the start of trade, you had more than 4 stocks that were advancing for 1 stock that was declining. Now those 2 lines are very, very close to each other. So telling you that on the losing side as well, there are quite a few names today. But I think the winners are easily outweighing the losers today. Prashant?
Absolutely. So yeah, the 25,000 very much in sight. We almost were there on Monday for all practical purposes. But in any case, Bank Nifty in the red, PSU banks are the ones which are actually leading the losses. So if you look at the Nifty PSU Bank Index, you'd see what I'm talking about. Private banks are not doing all that bad. And if you want to look at gains and pockets of gains, it is pharma. As a pack, metals are doing quite okay. And you've got the auto space. So these are the 3 areas where there is gains sectorally speaking. Advanced decline is positive. So it's not a bad looking screen either, but it is less vibrant in the broader market. I mean, if you just look, yesterday was a really long list of volume-led gainers. Today, it is, it's not as long, the list is not as long, and advances and declines are also more evenly matched, as you can see, as compared to the session that we had yesterday. Lots of earnings are coming through. They have been through the course of the day, and we're expecting a few more, which we will track as we go along. Rima.
Well, the gains pale in comparison to what the global markets have done today. So pull up the Asian markets where Shanghai, Hang Seng up more than about 2%. Nikkei closed up with a gain of 1.5%. Europe is carrying forward the positive momentum. So the CAC is up 1.2%. If you pull up the DAX, that's up close to about 0.6%. So it's green across the Asian market screen. We are awaiting the Fed decision. So in that context, the Indian markets have got a lid kept on themselves below the 25,000 mark. But lots of action in the broader market. The mid-cap index is outperforming today, as we've been pointing out. Names like Torrent Power, Inox Wind, Z Entertainment post their numbers. That's a big mover, 5.5% up. And even on the way down, earnings misses in the form of Indus Towers, Birla Soft catch your attention.
Okay, all right. Well, got that, Rima. Let's get in a view then on how do you trade the index. We're just 30 points away from 25,000 odd. Mitesh is back with us. Mitesh, in the last few minutes, the Nifty Bank from being down by 80 points, it's almost flattish now. On the verge of moving to the green, which is taking the Nifty higher. Levels on the Nifty Bank?
I think that is the index, which is actually worrying me, and it's not participating on the upside. Last 4 days or 5 days, if you look at the, the last 2 weeks, if you look at the Nifty, it's up by about 460 points from a weekly closing to closing basis, while the Bank Nifty actually is down by about 800 points. Very clearly, there's some underperformance happening in the Bank Nifty. The levels which I'm watching are, 52,000 or so, 5190 to 52,000 bank. Until we get an hourly or 2 hourly close about that, the overall structure will remain weak, and even post that, I think we have significant supply pivots around 52,600, 750 zone. So difficult for the Bank Nifty to participate, and let's see if any other sector can stand up and help the Nifty get past 25,000. Though the structure for the Nifty remains very, very positive. So in that sense, Nifty is good, but unfortunately, I think the Bank Nifty is not participating. So maybe it will take some time. On the stock side, I have a buy on Steel Authority. Keep a stop at about 148.5. Look for targets of 160. And Inox Wind, that's a stock which has just made a fresh high. So buy here with a stop at about 180 for targets of 200.
Thank you very much for that. Let's talk about Mahindra & Mahindra. Reported their Q1 numbers. Sonia joins us with the analysis. Sonia.
Well, thanks a lot for that. So, if you look at M&M's numbers, they actually have been a mixed bag this time around. So just want to take you through the key numbers. Decent set of earnings. It was a strong operational performance for M&M. Both the auto as well as the tractor segment margins have improved this time around. In fact, if you look at the auto segment margins, they are up 130 basis points year on year at 9.5%. Tractor segment margins are up 100 basis points year on year at 18.4%. The company has also seen an improvement in their market share. So both in the SUV as well as in the tractor segment, the market share has gone up. Tractor market share has gone up by 180 basis points year on year. SUV market share has gone up by 130 basis points year on year. If you look at the numbers, right, the core numbers have come in with a revenue growth of 12% year on year. EBITDA is up 22%. The margins have come in at 14.9% versus 13.6%, while the net profits are down about 5%. So it's a mixed bag, but largely you'd have to say the operational performance of the company is quite good this time around. Back to you.
Prakash tracks M&M very closely, and he's joining us on the show to talk about the auto numbers and plus the market texture and individual stocks. Prakash, first up on M&M.
So I do agree, the numbers are good. Operationally, we've seen a lot of those things which were not adding up actually improve, especially the farm equipment side. The margins have improved. But, look at where the stock is, Rima, and that's where I want to bring your attention to. It's moved 70% plus already in this year, calendar year. And there's a lot that's happened in the last 6 months which has led to this phenomenal move. Beyond this, the earnings will have to now depend on some more triggers which have to be significant, whether it's new launches, whether it's, they've improved market share in SUVs and farm equipment and all those fronts, including three-wheelers where they've become quite dominant. So these are definitely very promising areas to kind of watch out for, but the stock will need some consolidation and the business will need some consolidation. Once that is done, you'll probably get ready for a new move. But till then, it'll probably be a bit range bound. But it does give the opportunity to make the stock more resilient after these numbers are out.
What about something like a Titagarh Rail, Prakash? Investor favorite, retail shareholders favorite. Stock is up 50% plus year to date. Earnings missed expectations, so perhaps some execution challenges, but revenues were down 1% year on year. What would you do with the stock now?
So that's an interesting pocket that you allude to, because some of these stock names where, the businesses are undergoing a very significant change and expansion of their order books and all, will find this to be the common thread. You will find execution lapses in some quarters. But the way to look at most of these stocks would be from a 3-year, 2 or 3-year kind of a secular trend. And if that is something which you're willing to kind of bet your money on, you'll probably see some of them go into multiples of revenue growth. So it's not going to be incremental 30, 40, 60% kind of revenue growth, but you'll see some multiples happen over the next couple of years, given the huge order book that most of these guys are facing. So I would believe, unless your horizon is that kind of, long tenor thing, it's going to be extremely difficult to be finding more salience in these stocks. In fact, they will go through some profit booking, which can be very significant because they've run up in anticipation of a lot of improvement. But these execution lapses remind people that there is a reality check you need to put to the P multiple expansion that they've undergone. So I would, on this particular name, I would be a bit cautious. I wouldn't want to add at all. But in fact, I would recommend people book profits in this stock and some of these similar ones. Jupiter Wagons. There's so many of them which have done so well, but then the stocks have done far better. They've expanded far better than the business has. So there is some profit booking which makes it very prudent.
Okay, all right. Hi Prakash, good afternoon, good to see you. And Prakash, I wanted your view on a couple of these names, and I'm going to throw a few names, and I'm not sure which ones you track, but IMFA, they came out with a set of numbers, and the street clearly is looking ahead. Margins have improved, but the ferrochrome prices are strong. I think you tracked that one as well. And Jamna Auto, that one's making a fresh 52-week high in today's trading session, the CV play. Any view on either of these names? Both of them are up 5 to 7%.
No, so let me take IMFA first, because that's something which we really don't get to talk much about. But this entire ferrochrome segment is actually had a belated comeback of sorts in this participation in this leg of the rally. We've seen how Sandur and all also kind of, morph themselves into focusing more on margin growth and not just talking about revenue. IMFA also stands to gain tremendously from there. It's a very strong balance sheet. They can probably, continue to do well in spite of ups and downs in that segment. Right now, we're talking about them participating in an upcycle. But, it's a stock which will always have very lumpy moves, Nigel. And you know why? Because of the nature of the capital holding structure, the float and all of that. But from a segment perspective, I think if you are so positive on steel players in any case, whether it's a graphite players which are coming back into reckoning, I don't see any reason why ferrochrome players will not benefit. There is huge appetite, and I am very positive on the steel sector going forward, at least for the next couple of quarters in terms of a reset. So cement has gone through a reset, is undergoing a reset. Probably steel will also, and most of these players like Impa and Sandur and all will definitely participate.
By the way, flashes at the bottom of the screen. RBI fit and proper nod for IDBI Bank privatization has been received. This is source-based information coming in from our colleague Sapna in Delhi, and she'll join us shortly on the phone line to tell us more. So this is something which markets have been waiting for. Stock starting to move higher, and the entire process in terms of inviting bids, etc., is likely to begin shortly. Of course, I mean, it'll take its time, due diligence, etc. But from a regulatory standpoint, the RBI go-ahead in terms of fit and proper status has come through. So that's the latest on IDBI. Stock was in the negative, and that is moving up as we speak, about a little over 0.5% on the day now in terms of gains. More on this one with Sapna in just a bit, and we'll get Prakash to comment as well. But let's talk about BSE as well. The stock's higher. Actually, BSE, of course, has been higher from the word go. And we've been talking about this, and Vamakshi is joining us. She'll explain. But look at something like an Angel as well. Angel has also recovered from the day's lowest point. Vamakshi, but take it away. Tell us more.
Well, absolutely. As the SEBI cracks down on F&O activity in the market, we have BSE trading higher as against our own expectations earlier this morning. And in fact, here's why. One of the proposal is to allow weekly options only on one benchmark index of the exchange. Now, this could impact NSE more, and that is because NSE option volumes, NSE in fact has 4 weekly index expiries, and the impact on BSE is expected to be limited given that it has only 2 contracts. BSE may see in fact higher volume traction, faster market share gains, and this in turn could limit the volume impact for BSE. So for NSE, the volume impact is pegged at almost 30 to 35% as per IIFL Securities estimates, while for BSE, the impact could be at 20%. The earnings impact is also expected to be higher for NSE because options as a percentage of revenue accounts for 60%, while for BSE it is at almost 40%. The impact on FY26 earnings is also expected to be higher for NSE. IIFL Securities expects an impact of almost 25 to 30% for NSE, while for BSE it is much lower at 15 to 18%. Other than that, we also have a take coming in from Jefferies, and they believe that for BSE, the removal of the BankX weekly contract can impact the EPS by 7 to 9% over FY25 to 27. But the gains for spillover of trading activity from discontinued products could actually offset the EPS impact, and in fact they have highlighted that in the event of moderate industry-wide impact of SEBI measures, there could actually be an EPS upgrade for BSE. Apart from that, lastly, the redirection of funds is an important factor that could also play out. Funds looking at participating in the capital markets theme could actually redirect funds towards BSE, as this is a player that is relatively less impacted as compared to other participants. So overall, those are the reasons why BSE is up and away in the trading session today.
Okay, Vamakshi, got it. Yeah, that makes sense. Explains the kind of 6-7% up move we've had on the BSE stock, despite the fact that the headline last evening looked really negative. In fact, we spoke with quite a few other experts as well to get to the bottom of this. And one view that's emerging is that actually, if anything, it might push up volumes in the option segment as the lot sizes become bigger and bigger on the futures side. I'm not sure. Prakash, comment on this. Hi, good afternoon. I don't know if that explains the up move on an Angel, Motilal, IIFL Securities. None of the brokers have been scathed at all today. What is your thought?
So good afternoon, Sudhvi. So I'm not too sure whether it's going to be so simplistic in terms of inference in terms of what's going to happen, what's going to benefit, what segments will get impacted. But if you really ask me, this is something which we don't know of, and the market has a very strange way of behaving to some of these changes. We've seen what happened when margins that were imposed were hiked. Everybody thought this would impact volumes, but the contrary happened, right? So we really, it's too early to guess all that. But one thing I can tell you is that the BSE has a huge smattering of some of these micro caps, small caps, which are thinly traded or low float kind of names. That's where a lot of money could possibly shift for people who want that speculative element in their trading. It's not about just options and futures. somebody could start sensing a huge opportunity in some of these names as well. And when that happens, you'll probably see more brokerage accrual happen rather than what you get in the F&O side. So, there's lots of things, as I said, which could happen. Reason for most of these broking houses to do well is the impact on the derivative side, whatever restrictions happen, is not going to be so difficult for them to not continue growing at the pace because the number of accounts, number of players is growing. So I think that's where, market had given them a little bit of a negative listing look, but now that's kind of playing up against, to the contrary, and that's where the catch-up is happening. But on the BSE, I really don't know how to justify more earnings growth if NSE gets impacted. So it's a little bit of a vexatious issue, but let's wait for the regulations to completely be out.
Okay, all right. Yeah, that could be interesting. I think those who want to speculate will speculate. That's what they say, right? Whether it's horse racing or casinos, and Prakash is saying that if not options, we'll go back to micro caps and in the cash market. Who knows?
One of the best written Jurassic movies, if you remember, there was a line, right? Life will find a way. Money and speculation will find a way. If you want to take off that. The regulators' intentions are, of course, noble and honorable, and they want to, of course, protect retail investors.
Correct.
But adat jab lag gayi hai, it is very difficult. It is extremely difficult. And to sort of, control it in its entirety, and of course, it will have an impact. I think it's also, as Prakash said, it's too early to assess and say, well, nothing will happen. Impact would have been much lesser if they'd kept all the weekly contracts. But you said, well, everything will expire on one day. Say, all BSE contracts expire on, say, Wednesday, NSE contracts expire on Thursday. That's not what's happening. It's now going to be, there can't be 4 NSE weekly option contracts. There can be only 1. And similarly for the BSE as well. So in terms of impact, the latter is, what they're proposing is much more, from a market volume perspective, much more impactful as compared to had it been the former. So, the reaction, the stock reactions notwithstanding. In any case, for BSE, yeah, there is, as Vamakshi explained, maybe a little bit of a shift because it was, in a way, a growing player, but still marginal player, with NSE having the lion's share of volumes there. So, more on this, but even broking stocks, everything has corrected quite a bit. So that also perhaps is a function. IDBI Bank is what we want to focus on. As we said earlier, sources telling CNBCTV18 that the RBI's sort of fit and proper nod for privatization has come through. Sapna is picking this up. She's joining in with quick details. Sapna.
Hi, Prashant. So, absolutely. A few days back, the update was that the RBI's exercise was at a very, very advanced stage, and the Defense Secretary had indicated so, in our panel interviews on the day of the budget. Well, sources are now indicating that the nod has actually come in, and accordingly, the government will now be, initiating the due diligence process for the potential bidders for IDBI Bank. Sometime early August is when the virtual data room will be opened for the IDBI Bank bidders, wherein they'll have access to the draft share purchase agreement that the government will put up for their scrutiny. That's an important document because that will carry all the terms and conditions for the deal to actually go forward. Generally, it so happens that around 3 to 4 odd months is the time taken for the due diligence process to be over, within which, Prashant, a lot of queries do unfold between the potential bidders and the transaction advisor because, the entire deal is done through the TA. The GOI maintains an arm's length. So all of those queries, discussions are likely to be settled. So, keeping a tentative timeline in mind, 100% before the financial year closes, the government will be in a position to, basically call for financial bids. And, that's the update that we have as of now. In case the transaction moves quicker than expected, then it may just be possible that some kind of a closing deal may be feasible by March this year. But as of now, banking on the conservative side, financial bids 100% before the financial year closes. And early August, the due diligence starts by the bidders. So it remains to be seen how much time that really takes, the queries and all of that. So this is it. Basically, the RBI is not for the fit and proper, had been hanging for quite some time. That was widely anticipated, expected. Everybody was waiting for that. That's come through now. So I think the road ahead has become that much easier and closer in terms of the transaction of IDBI Bank privatization going forward. Prashant?
Okay, all right, Sapna, thanks very much. we'll look out for that. This has been in the making for a long, long time. One more step forward on the divestment. With that, we'll take a very quick break, come back on the other side, and we'll also have our Alpha Manager of the day with us, Varun Goyal of Mirae Asset Investment Managers, joining in.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have a
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Welcome back. Well, a couple of banking names have moved higher. Kotak Mahindra Bank, that's moved into the green. Remember, we have the monthly expiry that's playing out. So that's one stock. And the other one that's cutting its losses is Indus Bank. It was down close to around 0.5% at the start of the show. It's on the verge of moving to the green. So keep an eye out on a couple of those names. Good time to go to D Street Chatter, though. Nimesh joins us to fill us in with what he's picking up. Nimesh, how are things today?
Well, the momentum continues, right? Again, we are closer to that 25,000 level of key resistance. So need to see whether we again pull back from those levels. But again, I've been saying this for a while now, that this rally is largely backed by FI buying, the domestic buying. Looks like the mutual funds are redeploying the cash that they're sitting on. And that's the reason we're seeing that outperformance. Today, today the broader market stands out. And I'm saying this because there are at least multiple, FI desks where there is basket selling in the broader market stock, especially the cash names. And even then, the mid-cap index is up more than 0.5%. A lot of stocks are buzzing into it. So, that shows that the supply is getting absorbed by domestic mutual funds and the supply from the retail side. So that's been the key trend on why we've been, rallying higher. And, again, from a positioning point of view, I guess the consensus is on the other side. Everybody's waiting for a correction. And maybe that's why the market is not obliging with a sharper cut. But from a flow perspective, it's the domestic mutual funds who are observing all the liquidity on the sell side.
Well, and what's good to see, Nimesh, is that, 1 week post the budget, actually the mid and the small caps is a lot more interest. So
and they've actually outperformed.
That's good to see. But tell us, what are you picking up in individual news flow?
Okay, so in terms of individual names, the first stock is Polycab. That stock is buzzing into it on large volumes as well. Some bit of FI interest is back as well. And the city is now anticipating some corporate development, including a large order win for the company very soon. So that's Polycab. The second name is Hindalco. Within the metal names today, that stands out purely on back of buying interest. So there are buy flows. Additionally, DAM Capital today put out an initiating report on the stock with a buy rating and a potential 37% upside even from current levels. So I guess they're the most aggressive on the street now. The third stock is Jupiter Wagons. While the stock has been consolidating, there is an indication that there will be a large block in Jupiter Wagons very soon. Remember, the company really recently had raised money via QIP as well. And the last is Zydus Life. Even that stock is buzzing largely on the back of buy flows. But again, Zydus, for a reason, is also buzzing because it's a potential candidate for MSCI inclusion, which will come in August. So maybe that explains a bit of outperformance in this month itself in Zydus Life.
Okay, well, lots happening there and lots of stocks as well. Nimesh, another stock which is buzzing is Trent. I think it's been buzzing for the last 3-4 days now. Anything you're picking up?
Well, Prashant, it was part of my charter list a few days back. The reason why Trent is buzzing into today is because today is the cutoff date for a possible inclusion into Nifty. So there were some, alternative research who have done some calculations, and they were expecting Trent to be part of Nifty now. And in terms of exit, maybe Divis can move out, or maybe L&T Mindtree can move out. So I guess that explains a reason why Trent has been outperforming in the last few days.
Okay, all right, Nimesh, thanks very much for that. We'll keep an eye. Well, Mitesh is now joining us with quick trading ideas. Mitesh, what do you have?
So, Piramal Enterprises, I think, is one on the list, making a fresh high. PL is a buy with a stop below levels of 1,020 and a target of 1,080 can be looked at. So, it's not a BTS, it's more of a positional kind of a buy. And STBT on HAL, it's still looking weak. I think, extremely overbought, trying to come out of that. So take a stop at about 49.60 here. Look for targets of 48.70.
Okay, STBT, sell to buy back tomorrow. Thanks very much, Mitesh, for that. Well, tomorrow we get into August, which means that, we'll get the sales numbers from the auto sector for the month of July. Sonia is here with what expectations are looking like. Sonia.
Well, thanks a lot for that. It's a mixed bag expected this time around in the month of July. So the passenger vehicle sales continue to see slower growth this time. The PV demand trends remain weak. The inventory levels are quite high at the moment at about 40 days. Two-wheeler sales, though, have seen a pickup in the month of July. The two-wheeler industry wholesales are up by about 12% year-on-year. That's driven by strong growth coming in from both Honda and Bajaj Auto. While we are expecting a gradual recovery in the medium and heavy commercial vehicle segment due to higher spending from the government. If you look at what Nomura's expectations are for Ashok Leyland, let's start with that. Flat move expected on a year-on-year basis. Bajaj Auto expected to see about a 9% year-on-year growth. Eicher Motors Royal Enfield sales are expected to fall by about 2%, while Hero MotoCorp total sales are expected to grow by just about 2%. Finally, Maruti Suzuki total sales expected to fall by about 2%. So all in all, expected to be a mixed bag this time around. Back to you.
Okay, all right, Sonia, thanks very much. So we'll watch out for those numbers. Let's see how they look. Speaking of numbers, it's going to be all about the big giant from the ferrous space. Tata Steel will be reporting earnings today. Nigel, what are we going with? What's the expectation?
Well, in terms of Tata Steel, you just keep an eye on the operational performance because the bottom line, normally it's all over the place because of Forex, exceptional items. So in terms of the consolidated numbers, top line, there'll be a bit of degrowth because steel prices have been a little bit under pressure. The EBITDA number, though, will grow by close to around 22%, which is telling you that the consolidated margins will improve. But as I said, it's all about the geographic breakup. And in terms of volumes, yes, we already have the volumes with us. So in quarter one, we have a mild growth if you compare it on a year-on-year basis. Sequential basis is a bit of a degrowth, but that's because of a seasonal factor. Looking at the European business, the Netherlands business has been a good recovery. They had, a couple of months where there was work going on at those furnaces, and that's come back on stream. So Netherlands will recover. Remember, Netherlands is the profitable part of the business. The UK business volumes will be more or less flattish as they're phasing out the business out there. The two key numbers that you'll be tracking. The Tata Steel standalone EBITDA number should be around 13,450. Very, very important, the key number to track out there. Realizations have been tepid, but they'll get some benefit because coking coal cost will be down roughly around $20 on a per ton basis. Tata Steel's Europe business, that's going to be important because the losses have been going on for the last few quarters. But the hope is that, there'll be a sharp reduction in terms of an EBITDA per ton loss. And the number that we have come up with is around $36 per ton. How is that possible? The Netherlands business has moved, will move into the green because operating leverage has played out, while the UK business will continue to struggle. So the reason that Europe reports a loss is because of the UK business. As always, commentary on pricing, demand, the debt reduction plans as well as expansion. That's something we'll wait to hear from the management. Going to keep me late this evening, but I expect the numbers by around 6 to around 7 p.m. today. Back to you.
Okay, enjoy your evening with your eyes on BSE waiting for Tata Steel numbers. But let's talk about Z that's surging in trade after the Q1 numbers. Vamakshi joins in with the first cut. Vamakshi.
Well, absolutely. It's a very strong set for Z. The revenue has seen a modest beat, but it's the operational performance for the company that is actually driving the beat. When I look at the domestic advertising revenue, it is down nearly 3.1%. It has come in nearly 5% lower as compared to estimates. And this quarter saw an impact from cricket as well as the general election. But the subscription revenue growth is largely being driven by a pickup in linear subscription revenue post NTO 3.0 and Z5. The subscription revenue on a YOY basis is up nearly 8.8% and has come in nearly 2% higher as compared to estimates. But it is the other services, other as well as services segment that is actually seeing a sharp jump. Keep in mind that this is largely their movie division, and the base quarter had no movies, and therefore we're seeing a nearly 70.4% surge in that particular segment. EBITDA has come in at 270.56 crores. This is 22% higher as compared to the street expectations. EBITDA margin at 12.7% is also at a multi-quarter high. It has come in nearly 220 basis points higher than estimates, and the net profit at 118.1 crores is nearly 22% higher as compared to estimates. The management has also shared an outlook in the presentation. They expect gradual margin improvement that we are seeing to continue through the rest of the year. The magnitude of the margin improvement will, however, be dependent on how the ad revenue picks up in the second half of the year. But overall, they expect FY25 margins to be better as compared to FY24, and in FY26, in fact, they're expecting to deliver industry-leading 18 to 20% EBITDA margin. So overall, they've shared a good outlook as far as the margin is concerned. They've reported a good set of numbers in the first quarter. We will be waiting by for the management commentary that comes through in the con call today.
Absolutely. It's not bad at all, considering all the twists and turns in the Z story. And as Vamakshi is pointing out, and by the way, it's quite telling. The advertising revenue at 911 crores and subscription revenue is now almost touching 1,000 crores. It's telling you how the business itself has perhaps come of age over the last many months and quarters, with the subscription numbers actually looking better than advertising. That used to be the bread and butter for any media company. So changing times. Anyway, let's take a quick break on that note. Come back with more on the markets in just a bit.
I would like to humbly state this. I'm sure all the members know that in a budget speech, if a state is not named, it doesn't mean that no money goes to them. And therefore, that was a misleading campaign, which, being in the opposition, unfortunately, a lot of members did speak about. It pains me to know. It pains me to know that they could say that if you're not mentioned in the budget speech, your state gets nothing at all. I'm picking up on the budget speeches since 2004, 5, 6, 7. 2007-8, and so on, sir. 2004-5 budget did not take the name of 17 states. I like to ask the UPA government members at that time.
Welcome back. Well, let's focus on Godrej Phillips. Now, that's the stock in focus. A Delhi court has lifted injunction on the company to maintain status quo with regard to its retail business. Ashmit joins us to fill us in with what the court had to say, and then we go across to Mangalam for a quick analysis. Ashmit, you first.
Well, there's clearly a boardroom battle that's currently underway at Godrej Phillips, and that's between Beena Modi and Sameer Modi. Beena Modi being the managing director, Sameer Modi being a director on the board of Godrej Phillips. Now, let's bear in mind that in the month of June, a Delhi court had granted an ex parte injunction whereby direction had been issued to Godrej Phillips twofold. Number one, that status quo had to be maintained with respect to Sameer Modi's position as a director, and number two, status quo having to be maintained with respect to the retail business under the umbrella of 24/7. Now, what's important is that the Delhi High Court has vacated that interim stay. There are two aspects to bear in mind. Number one, first, with respect to Sameer Modi's position as a director. Here, the Delhi court has held that he is not entitled to continue on the board of Godrej Phillips. However, at the same time, the Delhi court saying that as per the succession trust deed between the various stakeholders, Beena Modi is required to recommend Sameer Modi as a director, and then subsequently, as per the provisions of Companies Act, he can be considered, and Godrej Phillips can take an independent call. That's the first part of the stay that has been vacated. As far as the retail business is concerned, again, the Delhi High Court has very explicitly held that as far as Godrej Phillips is concerned, it is an independent entity, it is a listed company, and no such compulsion can be put on the company for continuing with the retail business. That is a decision that the company will have to take on its own merit, that whether or not it chooses to continue with the retail business is an independent call that the listed company is required to take. There can be no court injunction with that respect. So with that respect, Delhi court vacating the interim stay, the interim injunction on two counts, one on Sameer Modi's position as a director, two on continuing with the retail business. That's a decision that the company will now have to take.
Okay, thank you very much for that. Mangalam is also joining in with some more information on this. Mangalam.
Well, as Ashmit pointed out, it's the retail business which the company has decided to exit now. The retail business was that of 24/7. In fact, in last year itself, the retail business did revenues of close to around 403 crores. Remember, it was more of a capital guzzling business, did not make much contributions to the EBITDA of the company, and it's about 7.5% of their overall revenue. So basis stakeholders' feedback and long-term performance of the division since inception, along with prevailing market conditions of the retail sector, they've decided to exit this as it's the long-term business strategy of the company to stay within the core, and that explains why the stock too has recovered from the lows and ended marginally in the green.
Okay, got that. So that's Godrej Phillips in the news. Thanks very much, Mangalam, for explaining that to us. By the way, those are important flashes on the screen as well. Now, we know the hue and cry that's been doing the rounds ever since the budget took away indexation when it comes to calculation of capital gains tax on property. Remember, the tax itself has now come down from 20% to 12.5%, but the new regime doesn't give the benefit of indexation to properties after 2001. Timsy is picking up the latest on this. A lot of buzz around it, Timsy. So it seems representations are being made as well. What is the latest?
Well, yes, as you said, a lot of buzz around it and a lot of representations have come into North Block to the top government. And what we are given to understand from sources is that the government is currently mulling over these representations that it has received on the budget proposal, as you rightly mentioned, to do away with the indexation benefit with a lowered tax, that is the long-term capital gains of 12.5% instead of earlier's 20% with indexation. Now, some of the representations that are being sent include to have a dual regime, let people decide the way we decide in our personal income tax. Similarly, representations suggest that let people decide whether they want to take the indexation benefit with a 20% LTCG or they want to do away with the indexation benefit with a 12.5% LTCG. Another representation is to see whether that this indexation benefit can be extended to the properties that have been bought till July 2020. 2024, and after that this benefit should go away. Now these are some of the representations, and as we speak, no clarity is there as of now whether changes will be made. These representations, remember, are being studied just to see to how the best the impact can be allied for this particular proposal that has been announced in the budget, but no decision has been taken as yet. And we've also sent formal queries to Finance Ministry, and we are waiting for responses. Till now they remain unanswered. But yes, representations flowing into North Block, and North Block is trying to see how best these representations should be taken forward. Whether they need to be taken forward or not, even that is not decided as yet.
Okay, thank you very much for that. That's the last word on this perhaps has not been said as of now, and the uncertainty may just prevail on real estate taxation. Maruti looks like a very strong set of Q1 numbers. Beat in revenue, beat in margins, and a beat in profitability. So it's a top-down beat. The company's top line has gone up by nearly 10% on a year-on-year basis, ahead of street expectations of 7%. On the margin, there is a near 350 basis points margin expansion. Margins at 12.7% compared with 9.2% year-on-year, and much higher than the street poll. Look at the bottom line. Given there is a 10% increase in the revenues, about a 350 basis points margin expansion, the profits for the company have gone up by 45-50%. So very strong set of numbers. The stock is shot up 2.5% like a rocket. It's anyway up 25% since the beginning of this calendar year, and now it's added on some more heft. Sudeep Bandyopadhyay is also with us now. Sudeep, come in on Maruti and the early numbers.
Well, I think it's a fantastic set of numbers. We didn't expect this kind of a show from Maruti in this quarter. I think it shows the resilience of the company. And also, we'll have to keep watching the space. I need to see the details of their export numbers and things like that. Of course, the monthly numbers will come tomorrow, and we'll wait for that. But by and large, I think it shows that probably at some level, I think the efficiencies are improving, enabling the company to post better than expected margins.
Okay, well, we just have very little time before the day starts going out. So very quickly, I'll give you an open field. We've had some very strong result reactions today on the upside. There is Torrent Power. Then we had Rights with a disappointment. There's Johnson Hitachi, which has reacted sharply lower. Many mid caps. Give us one or two names that stand out. Any thoughts? Any new ideas?
Well, I think, there's one idea which I've been telling again and again is that, one needs to be a little careful about the PSU's operational performance. And that's pretty much getting reflected in the results of Rights, BHEL, and the likes. Order book and building a long order pipeline is one thing. Executing and delivering performance is something else. And some of these PSUs, unfortunately, have have a very patchy track record. And BHEL is definitely one of them. So, time and again, I have been advising investors to be really careful and not to get swayed by just the order wins. We'll have to wait and watch. I think the valuations are at a level where the margin of error is very, very limited. So that's pretty much what it is. I think, on the positive side, there are lots of things, but the time is short. We can discuss that in the other segment.
Okay, well, let's do that. Stay with us, Sudeep. Thank you for joining us for now. Appreciate you sort of taking out the time as always. We're up 100 points, so very, very close now once again to 25,000 as we wrap up today's session. So just what 20 points away, 24,980. I mean, this if you can have the small cap intraday, there was a sell-off. There was a sharp sell-off from the high point of the day today, from about 2 o'clock basically. But then towards the end, there was a bit of a recovery there as well. But the small cap index ends about 0.33% lower. And I think that is the reason why a market breadth was positive but close. Mid-cap index ends about 0.5% higher. And I think the Nifty Bank ends about 0.25% up as well. So Nifty Bank was in the red when we started, a closing bell at 2:30. But there was a recovery there. And of course, Nifty moved on as well along because of the help from banks mainly. So that's the day. Not a bad session at all. Lots of movers, lots of shakers, lots of results. And of course, the market inching once again very, very close to 25,000. So, Fed later today, global markets, all of that. And tomorrow morning, maybe we start at that 25,000 level. And we sort of are we'll see if that does indeed happen. So 3 days now, market's been kind of treading water around those levels. It's a wrap on the session, a closing bell from all of us here. It's goodbye, but markets forward will pick up on all the action in just a bit.
Did they not go to those 17 states? Did they stop it? Then if they stopped it, they have every business to ask this question. I presume they didn't stop money going to those 17 states because they didn't name it. So when it is one thing for them, it's all right. When the same thing happens somewhere else, no, it's not all right, you've deceived. 17 states were not named in 2004-5. 18 states were not named in 2005-6. 13 states were not named in 2006-7. 16 states were not named in 2007-8. Money didn't go to them. 2008-9, 13 states were not named. 2009-10, 26 states were not named. 26, which means only 2. Sir, oh yes, sir, if we are being blamed that only 2 states were named and the other states are not getting anything, 2009-10 budget had only 2 states, Bihar and Uttar Pradesh, and no other state. What does that mean then? It's all right when you do it. You didn't give money to those states which you didn't name. So, sir, you can't have it both the ways. You do one thing and then you blame the same thing on somebody else. What happens to the states which were not named? I'm asking now, 2009-10, 26 states of India did not have a mention. 2009-10, the full budget, 20 states. Interim budget did not have 26. The full regular budget, 20 states did not have it. So what does that mean, sir? They continue to ignore states. 2010-11, 19 states were ignored. 2011-12, 15 states were ignored, they didn't mention. 12-13, 16 states were ignored. 13-14, 10 states were ignored. So, sir, for that matter, the interim budget of 2014-15 ignored 26 states. Was there a noise? Did people say you ignored those states, you didn't give money?
Early this morning, Wayanad was hit by several devastating landslides. More than 70 people have been killed. Mundakai village has been cut off, and the devastating loss of lives and extensive damage is yet to be assessed due to the scale of the tragedy. I have spoken to the Honourable Defence Minister and the Chief Minister of Kerala. I request the Union Government to extend all possible support for rescue and medical care, immediate release of the compensation to deceased people, if that compensation can be increased as well, restore vital transport and communication lines, set up relief at the earliest, and prepare a roadmap for the rehabilitation of the affected families.
Okay.
Even as I speak, the threat of landslides looms over many areas in Wayanad and the Western Ghats.
Dalal Street posts a record close for the 4th straight day. The Nifty ends above the 24,900 mark for the first time. Mid-caps outperform the blue chips.
Maruti reports a solid set of first quarter earnings with an all-round beat. Mahindra & Mahindra reports strong operational performance. Margin improves for both the auto and the tractor segment. The company has also seen an improvement in tractor and SUV market share. For Torrent Power, revenue climbs 23% and net profits jump 87% on a yearly basis.
Indus Towers slips despite the 2,640 crore buyback announcement and a sharp 460 basis points margin improvement. Birlasoft also declines after the constant currency revenue drops 2.7% and deal wins witness a sharp fall, while weak subscriber growth and lower traffic hurts India Mart. Hello and welcome to Markets Forward, your go-to show where we tell you what transpired during today's trading session. We also gear you up for tomorrow's trade. I'm Nigel D'Souza, and joining me, Surbhi Upadhyay. Hey, Surbhi.
Hi, Nigel. Earnings, and more earnings, and bulls having to wait one more day for Mount 25,000.
Well, that's right. And we've got 2 more days in the week. It's been quite a long one. And as you said, earnings just flowing in. But for today's trading session, yes, the Nifty ended in the green. The problem pocket today was the Nifty Bank. That did perform in today's trading session. In fact, it was a relative underperformer. And the Nifty Bank played out the monthly expiry. So that's why it was fairly volatile. And towards the end of trade, well, it gave up its underperformance, managed to move into the green, but still, it didn't do as well as what the Nifty did. But you'll say the broader markets did well because there were more stocks that were winning than losing. Even the mid-cap index actually was higher in comparison to what the Nifty did. But a closer look will tell you that by the end of it, at the start of trade, you had close to around 4 stocks that were advancing for 1 stock that was declining. Towards the end of it, both those 2 lines got a little bit closer to each other. In fact, by the end of it, they almost kissed each other. But should be what else?
Well, actually, the market underperformed. I mean, India underperformed a lot of the global markets today. Asia was better off. By the time we closed out, Europe was actually trading very positive with all eyes on the US Federal Reserve announcement, which comes out later tonight. So by that stretch, we've been kind of underperforming. But then, the markets had so much of momentum earlier, right? I was talking about earnings and just an illustration of how numbers are driving stock prices. Maruti came out with numbers in the last 5 minutes of today's trading action, and the stock zoomed up like a rocket. That's a big stock for it to move up so much. That's because of the numbers, and we'll tell you why those numbers are looking so solid in just a bit. But just an example, we had a lot of PSU stocks that have reported in the last 24 hours as well. And of course, there's a lot of scrutiny on PSUs, right? Because the stock prices have moved up so much. So GAIL hit the mark. But the other 2, RITES, very sluggish performance, top down, missing estimates. BHEL, losses still continuing at the net profit level and at the EBITDA level. So that was not a great show. So some of those PSUs were out of favor. But overall, the mid-cap market did well. As Nigel said, the advanced decline ratio was trying to hold up. At the index level, the mid-cap index did outperform the Nifty with a gain of about 0.6%. So we have lots lined up for you. We have a lot to go over. We will, of course, start up with all the key movers and shakers. We'll have Vivek joining in with what was up, what was down. In terms of the buzzers today, a lot of stocks moving on earnings. Torrent Power, BSE not on earnings, on, of course, the latest SEBI rules or announcements on F&O. Z also in focus. We'll have Vamakshi join in along with Vivek with more reasons why these stocks were in focus today. Then, of course, a lot of market events to watch out for tomorrow. The Fed meet, more earnings. So we're getting you prepared for all of that. But first up, let's understand really what worked and what didn't in today's market action. Vivek, over to you.
Well, thank you so much for that. Another day, especially towards the later half, where the volatility actually did get heightened. The first stock on our list today in the list of top movers is HDFC Life. The life insurance pack, even SBI Life today did quite well. HDFC Life, the top Nifty gainer, continues to move higher. The second stock on the radar, one that we'll be speaking about in depth a little later, is Torrent Power. Good set of results. The company operated under Section 11, very strong merchant sales. On the back of that, stock ended higher on very, very good volumes as well. Torrent Power is the one that we're talking about. The third stock on our radar is, in fact, quite a lot of pharma stocks. Granules is one of them. Granules, came out of its results yesterday. Yesterday moved much higher in the session, and today did see some follow-on buying. You also saw some of the other pharma companies. Have a look at names like Suven Pharma, Ajanta Pharma, Granules, of course, Jubilant Pharma, and Syngene. The entire mid-cap pharma pack today did quite well in the session, and Jubilant Pharma were up almost 5%. The next stock in the list of gainers is BSE. Now, despite a lot of worries overnight in terms of tightened norms for F&O trading, BSE today ended almost 6% higher, quite surprising over there. On the other hand, on the list of laggards, Birlasoft, missed, top-down miss, a very weak performance, especially in terms of CC growth. That is something that saw the stock sell off almost 5%. Deepak Fertilizers, good set of numbers, but despite that, you actually saw quite a bit of profit booking emerge. In fact, the stock cooled off almost 8% from the day's high. India Mart, another stock that came out with its results yesterday, expected subscriber additions were quite weak, on the back of that 6.5% lower. And Aegis Logistics, again, muted set of numbers from the company in Q1, and that was another stock, Aegis Logistics, that cooled off quite significantly today.
Thanks a lot for that, Vivek. Well, let's get in our experts. We have Sudeep Bandyopadhyay of IndiTrade Capital, as well as Shrikant Chauhan of Kotak Securities, who joins us. Hi, gentlemen, and appreciate you joining in on the show. Well, Shrikant, you go first. Tell us, how do you reading the index moves? The Nifty Bank in particular, today it managed to end in the green. It had the element of around, that monthly expiry that plays out. But how is that looking on the charts? Pat in the middle of the 20 and 50 DMA.
Yeah, good evening, everyone.
I think, see, Nigel, both these indices are consolidating, and they are consolidating in a, like, let's say, we can say Bank Nifty is consolidating in a very broader range. I mean to say 51,000 and 52,000 is the range, which is huge. And whenever there is a huge range consolidation, most of the time we see trending and volatile activity in the near term. Based on the numbers of all these banks, I am of the view that downside is protected. So I'm going to say 51,000 is certainly going to act as major support for the market. And from there always, we are going to see some buying interest for the index. But at the same time, on the dismissal of 52,000, I am expecting Bank Nifty to move towards 53,500. So almost all these banks are very close to their important supports, and most of the stocks are attractive. For Nifty also, 25,200, 250 is the next target to watch out for. And today, the way it closed at the highest point of the day, I think it is heading for the levels of this 25,000 plus in the near term.
Okay, so 25,000 is coming soon. Shrikant is still quite confident of that, of course. Gentlemen, stay on. We have more questions, a lot of earnings to go over as well. So let's start with the auto big boys, because we heard from Maruti in the dying moments of trade, and of course M&M earlier. Sonia is here with the fine print. Sonia, the way that Maruti stock was shooting higher was quite something. How do the numbers look?
Well, the numbers are actually looking very good, much higher than what the street was estimating. And it's an all-round beat on Maruti's performance this time around. So just taking you through the earnings, right? The profits for Maruti have gone up almost 12%, coming in at 3,650 crores. The revenues are up almost about 3% as well. The EBITDA has gone up 13% at 4,500 crores, while the margins for Maruti have gone up 130 basis points. If you look at it at 12.7%, this is much higher than what CNBCTV18's poll was. Even if you look at the profits, right, 3,650 crores is what the company has reported. This compares to a CNBCTV18 poll of 3,272 odd crores. Now, for Maruti, the net profits have gone up about 46%. And if you look at it, it's the margin expansion is largely because of better operating leverage as well as a better product mix that the company has delivered.
Okay, that's Maruti. What about the other biggie, Sonia? Mahindra and Mahindra, did it hit the mark?
Yes, Mahindra and Mahindra's numbers were also quite good. In fact, it was an operational beat that the company saw, both in the tractor as well as in the auto segment. The margins have gone up. The auto sector margins have gone up 130 basis points, tractor sector margins up 100 basis points. In fact, the company has also improved its market share across both the auto as well as the tractor segment, and that has led to an overall improvement in the numbers for Mahindra and Mahindra.
Okay, all right, Sonia, thank you very much for that. Let's go across to our guests and get a word in. Sudeep, what do you think? The numbers look good, as Sonia is telling us. Now, what about the prices? Do they still offer more on the table? Would you be a buyer, either M&M or Maruti right now?
As far as M&M is concerned, Sudeep, I think I'll be a little careful. They have shown, given a good set of performance, but the tractor volumes haven't really shown much of excitement yet. It's went up by about 6%, and I think there is a lot of scope, but unless and until that happens, I don't think I will jump to or recommend a buy in M&M at current levels. The margin of error at these valuations is very limited. It has moved up quite a bit, and all the positives are already factored in. So M&M definitely not being recommended for a buy. As far as Maruti is concerned, I think we need a little more time, honestly, to digest the numbers. I think it's a beat by a yard, and we'll have to understand what really changed the dynamics as far as their internals are concerned. We'll have to study the numbers and then come back. But in any case, our view was Maruti is a good long-term buy. So if somebody is looking at like 2 to 3 year kind of a time horizon, even at current level, Maruti can be bought.
Okay, all right. Got that view. Thanks, Sudeep, for that. Both those two auto majors, that's the view coming in from Sudeep. But let's focus on the stock of the day, Torrent Power. Well, it was bursting away, electrifying performance in the first quarter. Vivek joins us to break down those numbers for us. Vivek.
Well, a very good set of numbers. In fact, what's actually happened as far as Torrent Power is concerned is that, remember, the company has a couple of gas power plants, which earlier was stranded in terms of not having long-term PPA signed up. However, due to the strong demand as far as power was concerned, the government mandated these companies to go ahead and run the power plants under Section 11, which is the emergency section, where there is a cost plus recovery allowed. On the back of that, companies are allowed to go ahead and sell these in the merchant market, and this has gone ahead and aided the earnings, leading to a very strong growth as far as top line is concerned this particular quarter. So strong merchant sales aided by Section 11 and very strong power demand has led to almost 23% uptick As far as revenues are concerned, EBITDA higher by 57%, margins, went up over 400 basis points, and profitability, higher by 87%. Just have a look at the thermal PLF figure coming in at 60.4% versus 39.6%. So significant expansion as far as PLF is concerned. Generation revenues up 65%, coming in at 3,677. So overall, very strong set of numbers coming in. Now, when it comes to the con call, what is it that the company gave in terms of capex? License distribution capex coming in at 1,750 crore. Franchise distribution too very strong, and two transmission assets. The company is looking to do a capex of close to 1,270 crore. Company has also hinted at going ahead and acquiring or doing some inorganic acquisitions. Morgan Stanley says, the AT&C losses that we saw in this quarter will reverse from Q2 onwards, and the beat was largely led by higher merchant profits.
Okay, all right. Thanks a lot for that, Vivek. Well, Shrikant, let's get your view in. Today, it appeared it had a bit of a breakout moment because the stock actually till the first half was up 5-7%, and then it just took off to around that, 15-16%. Your view?
Yeah, Nigel, I think this stock was like showing some consolidation sort of formation, and it was consolidating for almost 4 months. And after consolidating for 4 months, whenever there is a breakout, we see massive breakout or massive price action. So similar sort of trend we witnessed today, and the stock now it is somewhere around 1900 levels. But based on its consolidation formation, I think it is heading for at least 2050 first and maybe 20-50 next few weeks or months. So it will take some time, but it is into continuation formation. It is following to the uptrend, and I think the next level to watch out for will be 2050.
Okay, all right, got that. Well, let's look at some more earnings. Z came out with what looked like a fairly pleasant surprise. The stock was up almost 4% after the Q1 numbers came in. We have Vamakshi joining in with more details. Vamakshi, so not a bad show from Z, right?
Well, absolutely not a bad show at all. In fact, the company reported a very strong set of numbers. It was a modest beat as far as the revenues are concerned. Revenue came in 1% higher as compared to street expectations. Largely, it is the subscription revenue as well as the other and services segment, which mainly comprises of the movie division, that is driving the growth as far as revenue is concerned for Z. Domestic advertising revenue, however, was impacted mainly on account of cricket as well as the elections gone by. The EBITDA came in nearly 22% higher. Net profit also was 22% higher as compared to estimates. EBITDA margin came in at almost 12.7%, which is at a multi-quarter high. This has come in nearly 220 basis points above the street's expectations. The company has also shared its outlook for FY25. They believe that gradual margin improvement is expected to continue, and they in fact expect to hit the 18 to 20% mark by FY26. So overall, it looks like a strong set for Z. We will be waiting by for the management commentary that comes through.
Well, thanks a lot for that, Vamakshi. Well, on that note, though, we'll have to slip into a short break. When we return, we'll get to our popular segment, D-Street Chatter, along with all the top market events you need to track. Stay with us.
Witnessed an alarming rise in the landslides in the last few years. There's an urgent need for mapping of landslide-prone areas and to take up mitigation measures and an action plan to address the growing frequency of natural calamities in the ecologically fragile region. Thank you, sir.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not
there are many areas where a commercial consideration could lead to privatization or disinvestment, and I'm as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening is our both expectation and policy.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be, government endeavor would be, keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are two other imperatives come in. The other priority needs and fiscal consolidations. It has to be done. There are the trinity which has to be taken care. The other two pieces.
Welcome back. Here with us on Markets Forward. Now, lots of stocks in focus today, even beyond earnings, and BSE was one of them. This stock was surging after SEBI's F&O proposal came in to curb speculation. Now, it looks like BSE could be better placed than the other exchange, NSE, given the kind of curbs that SEBI is speaking about. Vamakshi is back with more details. Vamakshi, here it seems like someone's loss could be someone's gain. Maybe that was the thought process in the market today?
Well, absolutely, that's right. And that is because, the first reason being that one of the proposals that SEBI has suggested is to allow weekly options only on one benchmark index of the exchange. And this is expected to significantly impact NSE's option volumes as it has 4 weekly index expiries. While the impact on BSE is expected to be limited given that it has only 2 contracts. So the volume impact for NSE is expected at 30 to 35%, while for BSE it's expected at almost 20% as per IIFL Securities estimates. Earnings impact, however, is expected to be higher for NSE because it has a higher share of revenue coming in from options, and the impact on FY26 earnings as well for NSE is expected to be between 25 to 30%, while for BSE it is expected to be much lower at 15 to 18%. Jefferies also believes that for BSE, the removal of BankX weekly contract can impact the EPS by 7 to 9% over FY25 to 27, but the gains from the spillover trading activity from discontinued products could actually offset the EPS impact. And in fact, in the event of moderate industry-wide impact of the SEBI measures, this can in fact drive an EPS upgrade for BSE. So that again bodes well for the company. So given all of these factors, the stock was surging in trade today.
Neatly explained, Vamakshi. Thanks a lot for that. Well, let's move on then. Nitin Gadkari, the Minister of Road Transport and Highways, has written to the Finance Minister and asked her to consider the removal of GST on life and medical insurance. He said that levying 18% GST on life insurance means levying tax on uncertainties of life. He added that levying tax on medical insurance is a deterrent for the growth of a socially necessary business. Okay, all right. That's what Mr. Gadkari had to say. But let's also get straight to our top corporate voices that we had on the show today. First up, Dixon Technologies. The management expects margins to improve towards that 4% odd mark. They have guided for mobile volumes to be around 28 to around 30 million units in FY25 and the IT hardware revenue to be in that vicinity of around 3 to around 4,000 crore rupees in FY26. The management believes the worst is behind for the lighting business, and they clarified they have no plan to exit it. Next up on the radar is Zaggle Prepaid. The company has maintained revenue guidance of 45 to 55% for FY25. The management tells CNBCTV18 that they are tempted to raise the guidance, but will wait until the end of Q2. They also guided for margins to be in the vicinity of around 10 to around 11%. The company is also likely to announce an acquisition news in the next 30 days. They're working on a large deal.
All right, let's move on and look at some more corporate voices. The one that I'm looking at is Castrol India. The company says volumes are expected to grow around 5 to 6%, with margins around 22 to 25% in the current fiscal year. The management adds that they are optimistic on data center opportunities in the market, for which is expected to grow in India and globally. That's not all. The management of Jindal Stainless has guided for volume growth of around 20%, adding that exports are under pressure on softer demand and higher freight costs. Also, the company is open for any inorganic opportunity that may come up. All right, so lots of earnings conversations today, and we got you some of the highlights over there. Before we wrap out, let's take stock of what are the major events lined up tomorrow. Sonal is here with the details. Sonal.
Well, yes, the big event will be how our markets react tomorrow to Fed's meet outcome. So that is something we'll be tracking very closely. Earnings as usual, we have a long list here, but just talking about the major ones. We have ITC, Tata Motors, Sun Pharma from the Nifty pack. There'll be Zomato, Imami and Thermax, the other important numbers that we'll be tracking very closely. In terms of global events, we do have Bank of England decision plus monetary policy report tomorrow. US will also be increasing tariff on Chinese imports, including EVs. There's batteries, computer chips and medical products which will go into effect. It has created a lot of global conversations and debates. US will also be putting out ISM manufacturing PMI data, and the unemployment rate will be there in Japan as well. So a lot that will happen and something we'll be tracking very closely.
Okay, all right. Sonal, thanks a lot for that. But on that note, though, we'll have to wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.
To do the heavy lifting. Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner, that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year. That's what we expect to do. Next year 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio. If we are talking about 3% plus to go to capital expenditure, we are still, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis that can be maintained, that will be a good achievement.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you have earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your
Well, hello and welcome to Business 360. I am Ashmit Kumar, and here are the headlines that we're tracking this evening. 158 people are dead and 200 people injured after multiple landslides in Kerala's Wayanad district. More than 150 people remain unaccounted for, and the rescue efforts continue. Over 3,000 people have been moved to relief camps.
Sensex and Nifty end at a record close for the fourth straight day. Mid-caps continue to outperform. Maruti Suzuki beats estimates in Q1. Revenue rises 10% and profits surge 47%. M&M reports a strong operational performance even as revenue growth falls short of expectations. Union government is looking at proposals received to allay the impact of removal of indexation on real estate. Sources say no decision has been taken yet. Union Minister Nitin Gadkari writes to Finance Minister Nirmala Sitharaman, calls for removal of 18% GST on health and life insurance products. A CNBCTV18 analysis shows government collected more than 87,000 crore rupees as GST in FY24. The standoff between government and opposition worsens in Parliament. Congress party moves a privilege motion against Prime Minister Modi for sharing BJP MP Anurag Thakur's expunged remarks on Rahul Gandhi's caste. The political leader of Hamas, Ismail Haniyeh, is killed in attacks by Israel. Supreme Court reserves its verdict on the retrospective application of the judgment upholding the rights of state governments to tax mineral output. Union government along with Madhya Pradesh and Rajasthan argue against retrospective application. Jharkhand claims poorer states cannot forego revenue.
It'll be 10 out of 10. They're not all coming to India, but they're interested.
They're interested. You know, and one of the other things that's changed, Vishal, since you were talking about anecdotes, and I was just looking at this, the large private equity firms, we've seen the India heads being elevated to global positions and to lead Asia Pacific for Warburg Pincus, for KKR, and for Blackstone as well. So India, the lucky charm?
I would say so. I would take no credit for it. It's all India. Trust me.
But, you know, let's, before I get to Rajiv, you know, since 1996, which is when Warburg made its first investment into India, what would you classify as the big changes that are really propelling the story forward? And specifically from a startup ecosystem point of view, what have been the big changes that you've noticed and what excites you today?
My gosh, it's just such a massive change. From 30 years ago, you were actually explaining to people what private equity was about. I mean, I remember a conversation that someone at Warburg had with an entrepreneur, where he spent 1 hour talking about the great things private equity can do, the value you can add, and at the end he said, that's great. I'd love to do this, but do I have to give you any shares in my company? And that's just changed. Entrepreneurs are now, there's an entire new generation, and it's why shouldn't we take venture capital or private equity or venture debt, not why should we? And that's a massive change.
It is a massive change. Rajiv Memani, let's build on that change and let's talk about what you believe will be the factors or the triggers to accelerate the kind of change that we are speaking of. You know, the topic that we are discussing now is the global aspiration, and there is potential, there is significant headroom for growth when we talk about that. Because if we were really to talk about the India startup story going global, it really boils down to Indian SaaS going global. But if I were to ask you for your thesis on what next, what would that be?
Yeah. Thanks, Shireen. Thanks, Ishpreet, for inviting. You know, if you actually follow the startup story, a lot of the very prominent startups actually went global pretty early. And most of them have sort of come back.
Yeah.
They have had to, you know, write off or whatever else it is. Some of them are still there because they made acquisitions, and some of them are actually doing quite well. You know, most of the startups which are looking at going global, as you rightly said, Shireen, are either those which are in the services space, because that's India's competitive advantage. Value creation in India through leading edge technology and innovation, the kind that you see in the West Coast, has still not happened. India's startup ecosystem, India's entrepreneurs are right now maximizing the opportunity that is there in India. Scaling up at massive space, leveraging on technology that is there, looking at gaps in the market. So my personal view is, even if I look at corporate India at a larger scale, their right now aspiration is not to go global as much. People are taking early steps because for going global, we under-index on the management bandwidth that's required.
Yeah.
So I think, and also the opportunity that most of the startups who've got their operating model and design right, the opportunity that they're experiencing in India is quite phenomenal. So I think right now I see a lot of them actually capturing the momentum, getting the design right, looking at profitability, trying to maximize the opportunity in India, trying to look at consolidation in India. The next step would be to go to similar markets, is what I'm now seeing, you know, ASEAN, other emerging markets, Middle East, parts of Africa, which have sort of similar dynamics. Services sector tends to go much more on the Western side. Yeah. And the consumer goods, you know, and those sectors are probably going much more sort of global south. So I would say that probably would be the next step. But right now the opportunity in India is also so immense with the way the economy is growing and the way, you know, the startups are now penetrating to tier 2, tier 3 cities. Yeah. I think right now, the way it appears to me, they are maximizing there, and they're also looking for those who are successful. They're looking at lateral opportunities in this space.
Yeah, I think there's a couple of factors playing, as you pointed out, Rajiv, and you were right in talking about the fact that we saw many actually take those first bets of going global. Companies like Zomato, companies like Ola decided to go global and have now decided to exit their global operations and focus on the domestic markets, largely driven by bandwidth issues, driven by the need to be profitable as well. But, you know, I just want you to also put into context for us, and perhaps Vishal, Uday and Ishpreet can comment on that as well. You know, while we're talking about new age entrepreneurs, let's also focus on the story that's playing out from a sourcing point of view, from a Make in India for exports perspective. I mean, I'm just looking at the numbers that Walmart and Amazon have reported. Walmart, with a target of exporting from India $10 billion by 2027. They've crossed the 30 billion mark in the last 2 decades. Amazon has done about 8 billion in exports from India, but this is largely from the MSME sector. So how is that likely to play into some of the factors that we just spoke of? And, you know, what is a new gen entrepreneur anyway? I mean, you know, entrepreneurs are entrepreneurs, aren't they?
Yeah. I think Shireen, you're absolutely right. It's a massive opportunity. But classically, if I looked at what the new age entrepreneur was, I think the leaning was much more towards tech services, technology, consumer, where you could massively leverage technology for getting a competitive advantage. I think that's how we define the startup ecosystem. But I think some of them, Zetwork, Off Business, Moglix, I think some of them are trying to capture this opportunity. Maybe there are others, I don't know all the names. But I think it's a massive opportunity. And what happens is when you have, the biggest is Apple, iPhone. When you have iPhone, when you have the likes of Amazon, I mean, if you look at e-commerce exports from India, they're about $30 billion. China still does $330 billion of e-commerce exports. Likewise, if you look at Walmart, I think they were looking at, they had a conference a few months back, and their numbers are quite aspirational in terms of what they're looking at, you know, in terms of procurement from India. So these are massive opportunities. Lots of entrepreneurs are getting into it. And I think where actually some of these companies are struggling, where Walmart, Amazon and others are struggling, is they're not seeing scale players. So for the startups, I think there's a tremendous, because the competency of the startup is the pace at which they scale up. I mean, that's what amazes everyone. And I think that's a massive opportunity today, because if someone wants to, as simple as this, if I want to manufacture toys from India, which are the 2 large players? If I want to do garment exports, Shahi Exports is the largest one, Gokuldas is there. But after that, if I have to do $1 billion from India, are there 2 vendors that I can look at?
Yeah.
And that's the opportunity. I think it's a tremendous opportunity, and I hope some of these startup
No, you're absolutely right. That is the challenge, but it's also the opportunity. But Uday, let's talk about the opportunities. You know, yesterday the Prime Minister, while addressing the Confederation of Indian Industry, and Rajiv was there with me, you know, spoke about this being the golden opportunity for India and how the private sector really needs to come to the table and look at the many opportunities that we should focus on. As someone who's looking at potentially the ability to scale, the ability to take from India and go global, what excites you? You know, where would you put your money today?
Yeah, no, thanks. Thanks for this opportunity. Look, I think the opportunity is both on the services side and the manufacturing side. So let me touch on the manufacturing side for a minute. Rajiv talked about scale, and that's really important. But government initiatives like the PLI have just been absolutely transformational. So in fact, they have been one of the tenets of the investment thesis that we have followed when we are looking at the lower middle market company space. So one of the key trends has been really the localization of the raw material supply chain, right? And the more we can have a policy framework to go to integrate backwards, that makes us much, much more competitive. So let me give you an example. So we invested in a company which is the original design manufacturer for air conditioners. So for air conditioners, we were significantly dependent on China, 80% dependence on China. And the way things are going now, within 2 or 3 years, I think we will have 100% sort of self-reliance, right? So as an investor, that was hugely attractive. And our role is to not just provide funding, but to be able to kind of act as a facilitator, to be able to help these companies not just become national champions, but regional champions or global champions. So I see manufacturing as a big sort of opportunity. On the services side, again, you know, we've talked about IT services, we've talked about BPOs and so on. But the one industry where I feel that we've been sort of defensive about is on the creative side, right? So people think that, you know, Indians can be the office of the world, we can do mechanical jobs, we can be coders, and we can speak English. But India is much beyond that, right? So again, to give you an example, we've got a company that does visual effects for all the Hollywood studios in the world. And, you know, these guys get $100 million contracts just for visual effects. So you can imagine a movie like Gravity was made, the 2D to 3D conversion was done in Goregaon and in Chandigarh. So that is what the new India is, and that's where the new opportunity is.
Well, you know, yes, you're absolutely right in pointing out that there are some of these sectors that are often under the radar or fly under the radar, where we are seeing immense amount of movement and traction take place. But, you know, since you talked about the new opportunities for new India, and in the context of the PLI scheme, I think the government's decision to look at import substitution across a whole bunch of sectors, 14 sectors in specific that the PLI hopes to address, at some point, though, do you believe that if we want to integrate with the global supply chain and we want to be part of global trade, that, you know, these are things that we will need to dial back down on?
No, absolutely. Look, countries like China had a head start, right? We are late, right? And when people like Rajan talk about the fact that we should be focusing more on innovation and less on manufacturing, I think he has a point. But I think we have to do both.
Yeah, we need to do both.
And there is got to be a gestation period until we become competitive from a cost perspective, from a technology perspective, innovation perspective. There has to be that hand-holding by the government, and the private capital has to play a very important role in that. So I think over the next 5 to 10 years, either we kind of grow up and are ready to compete with the world, or we just rely on other people to be the manufacturing sort of hubs of the world.
You know, that was the message that the Commerce Minister sent out to industry yesterday, a very loud and clear message to industry saying, look, you need to grow up, and you cannot expect the government to continue to provide protectionist measures. Indian industry needs to be competitive. But Ishpreet, let's talk about, you know, venture debt and the opportunities there. The headroom for growth is significant. 2023, finally crossing the $1 billion mark. What does the future hold?
Thank you, Shireen, first of all, for being here. CNBC and we carry a very special relationship. I remember the first fund of ours went on air in 2019, which was a $50 million fund. And we have come a long way. So it's been a special relationships. And Vishal, thanks for doing this. Warburg and we have a lot of portfolio companies in common, and we've worked on a very consolidated manner. And Rajiv has been our partner throughout. Look, before I come to venture debt, I think there's few points were made by Rajiv. He mentioned few companies that work off business, which has been quite early companies of ours. I think overall, the way we started Stride, the whole positioning was about solving for credit gap. We keep on speaking about small business having credit gap, and the figure keeps on getting enormous every year with the GDP expansion. But very few people actually try to customize products in an agile manner to understand what the business wants. So what Zetwork and Off Business did, which was one of our earlier companies, is to customize those product offering, right, in terms of understanding what the small businesses want, what the mid businesses want, and what startups want. So venture debt happened for, we have actually a graph. In 2019, we projected venture debt from 120 billion to cross $1 billion. And we did our first report on that and it crossed $1 billion. So we were very happy that the opportunity is only rising. And the pure fact about that is the credit gap is immense. It is only getting, we have actually done 13,000 crores as Stride Group now in the past 5 years, only enabling credit across Stride Ventures, Stride One, which is the other franchise of ours. And the only aspect that which has helped us penetrate is to understand the businesses. We have not gone with the product of saying, okay, this is our product, which traditionally financial institutions where we come from has. There's a standard product which you go and take it to the market, and that's what you try to give to small businesses. We have tried customizing products in terms of understanding, okay, if you're a consumer company, you have a 90-day working capital cycle. If you're a climate tech company, you have a capital expenditure requirement, which is much different than a consumer company, and then make an offering around that. And that gap, if you try to solve by use cases, is tremendous. And the credit is much more better because you're understanding and deeply involved with the business. So opportunity-wise, venture debt is definitely getting expansive. We are going global because the expansion we see on cards for venture debt being very, very important. But overall credit gap, I think there's a massive opportunity to solve for.
No, there is a massive opportunity, and it gives me a sense of deja vu because I can't remember how many panels I do every week where we talk about the credit gap and the very different ways that different players are trying to address that. But, what has been the experience for you, Ishpreet? What do you believe is the big pain point? What causes most friction? And do you believe that there is requirement on the regulatory side? I'll give you an example. For instance, the former State Bank of India Chairman Rajneesh Kumar said that we need to have a different rule book. The regulators need to have a different rule book when it comes to fintechs if we really want to bridge this credit gap. Your thoughts on that?
So actually, Jaspan made a very relevant point in the previous session. He said one of the opportunities in fintech is cross-border. Now, if you want to build export, since you mentioned about export of services and goods, we have to again understand, do these small businesses have the capability to even understand the financing of exports? Right? So you can build as many capabilities as a bank, but you have to understand the businesses grounds up. You have to go and meet them, understand, as I said, their value chains, what is the inherent business values like, where you want to solve for. Cross-border is huge, right? And if you want to really propel the exports, those kind of fitments has to be provided across levels. Manufacturing can only get picked up if at domestic level you understand what is the raw material, where it's coming from, what is the value addition which factories do, and then enabling export credit. You would not believe, Shireen, we at Stride One did a survey. We went to 1,000 small businesses and asked them what is packing credit. Almost 95% of the business do not know what is packing credit. How would you export? If you do not know that there's a packing credit limit available by banks, by financial institutions, the export would not get propelled. They go to their domestic banks for regular credit lines against mortgage of houses. This is not business finance. This is secured financing, right? So you have to understand, as I said, I'll go back to the rule book of ensuring that you understand business grounds up, create product, and then the value disruption happens.
I want to pick up on one of the themes that emerged from this panel, and that is the manufacturing opportunity. And Vishal, I'll talk to you in the context of what we are seeing happen in the region, not just in India specifically. This supply chain diversification that's taking place, this anywhere but China theory has been put aside very clearly at this point in time. It is now anyone and China, which is being talked about, and India, of course, figures in that list. As we look at this China Plus One strategy, I think it would be complacent to assume that we're the only game in town, because if we take a look at the numbers for Vietnam, for Thailand, I was just taking a look at the latest numbers. Thailand has seen FDI up 43% year on year, Vietnam up 32% year on year. So we are seeing other regions also emerge in the quest to try and drive in the benefits of this supply chain de-risking. Where do you believe India stands in this place? And if I were to ask you about your programmatic thesis on India today, what would it be?
So, look, I think you said it better than I could. There's options for investors. There's options for customers all over the world. As Uday said, we're late to the party. China's built its capability over decades. Manufacturing know-how, process know-how, cost benefits. We have to catch up. We can catch up. But there are options. It's not just other countries, by the way. The most crowded port in the world today, one of the most crowded ports is Mexico, Gulf of Mexico. All the Chinese companies are shifting equipment and building plants in Mexico. They've clogged up the port with the ships. So China may not be selling out of China, but they'll be manufacturing somewhere else and supplying the world. So we need to be ahead of the game, and we need to keep doing that. Programmatically, there are two things we're looking at. One is manufacture in India for India to start with. Again, I think the point was made, lots of examples I can give you. And going from there, pick the products, pick the spots where you don't need government support, where you can on your own go out there and win, and where there's high amount of engineering required, short-run manufacturing, skilled labor. India actually does really well in those. So let's pick those, build those out, and win.
You know, I want to pick up on both those, and let's talk about the India for India theme, and I want to get the panel to comment on that. And I think, you know, while we have seen a significant growth, especially on the upper end of the market, in the luxury goods market specifically, as far as Indian consumers are concerned, the growth and the strength of the Indian consumption story is still driven largely by about 300 million people. And the expectation is that that number will change significantly once we go from this 2,500 per capita to 5,000 per capita. What's your bet?
So, look, I think one, that's the bet. But again, I like to just give an example, bring it a little bit more to light. Many of you in the audience have hopefully heard of a company called Boat. Okay?
Yes.
New age entrepreneur, but they've been around for a while. 3 years ago when we invested in Boat, 100% of the product was imported from China. Today, close to 90% of it will be made in India. So what you're buying, what you're using out here is made in India. Next step, international expansion. Rajiv talked about it. This doesn't mean go conquer the US. Start with ASEAN, start with the Middle East. We've got Indian consumers all over. The brand is known. It's just an example of investing, and slowly, it will take time, but build it out in India and win.
That's the India for India theme to start with, and I'll get Rajiv to comment on that as well. But I also want to talk about the India for the world. Outside of the SaaS story, outside of the IT services story, the GCC story, what is the India for the world thesis that you're betting on?
Here's another company, local, Faridabad based, called Imperial Auto. They make fluid transmission products for auto. Leading market position in India, started as India for India. We invested in this company a few years ago with Rajiv's help. And today they're selling all over the world. Highly engineered products, lots of part numbers, complicated, high labor content, skilled labor. They're going to win. And this is the type of company when they can actually go out there, build a sales force, figure out a go-to-market, because it is different in different markets. And that's where someone like a Warburg or other private equity, venture capital should be able to help. It's not just capital. Help them get those markets. So I think Imperial Auto is a perfect example of India for the world.
You know, since we're talking about capital, and I know that private equity is sitting on a fair amount of dry powder at this point in time, given the many opportunities that you just spoke of, Vishal, what's the appetite for putting that money to work here? I mean, how much are we going to see you put into India?
So my biggest trouble has always been my partners in the US say, why aren't we investing more in India? And I'm like, I'm trying. We need more opportunities, more entrepreneurs, more help, all that stuff to do. But I think you're going to find an appetite for a lot more capital to continue coming into India. The appetite's there. It's the ground up opportunity that we need to go out and find.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI/ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become
much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
And Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and cnbctv18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18, weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Let's talk money.
Hello and welcome to Let's Talk Money. I'm your host, Surabhi Upadhyay. Well, it has finally happened. Yes, the budget has heralded the onset of a brand new capital gains tax era, one that promises to be simpler and clearer. But like most transitions in life, this change from old to new has also caused a fair bit of confusion. So today on the show, we are aiming to demystify what the new normal means across your investments, whether it's shares, equity mutual funds, gold, hybrid funds, and of course, real estate. We'll get to the long and short of it all. Joining me to help us with this task are Mohit Gang, CEO of Moneyfront, as well as Srivatsan Chari, co-founder of ClearTax. Thank you, gentlemen. It's great to have you, Mohit, here in the studio because I've, as you can see, old school style. I've got my paper and pen out because it's so complex, right? Absolutely. And Srivatsan joins us all the way from Bangalore, so welcome on the show. Before we get started, I want to take sort of broad thoughts from both of you gentlemen, because we have this new regime where a lot of asset classes are getting clubbed. There's one big rate of 12.5%, the long-term rate. What did you make of the announcements, Mohit?
Look, as you rightly said, Surbhi, no change is ever easy to accept and take. My sense is this is a change which is a little painful in the transition era. But once you complete this financial year, I think it will be a smooth sailing. They've made it very, very simple, honestly. There are only two tax slabs. There are only two tenors. It's only 12 months or 24 months. There is no 36-month kind of a tenor. And then there are only two rates, which is 12.5 for long term and 20% for short term in case of equity or otherwise slab rates, right? So there is, it's become absolutely simple if you were to look at from that lens, that going forward from next financial onwards, simplicity is the mantra. However, if you are holding existing things, existing funds, then yes, there is a lot to study.
Which is why you need to be patient, get your own paper and pen or iPad or whatever it is you use out and take notes, because it is that kind of a show. Srivatsan, what's your sense? I mean, what do you think? I think the industry, investors, everybody was asking for an overhaul, right? We've got one. Is it good?
I think, like Mohit said, it's simplified, but the rates have gone up in terms of reality. And I think that the government's really pushing for more liquidity in the markets. So, taking money from equity markets, putting it into more fixed assets in banks. And if you're a long-term investor, I think things are looking better. If you're a short-term investor, you'll really have to measure what you're doing. That's what
Okay. Well, for everybody's reference, let's just get the tables going. And we have, as I said, paper, pen ready. There are lots of tables on the show today. So first, let's just look at how the rates have moved, because you have this whole class of listed securities, listed shares, whether it is listed REITs. So whatever is listed. In fact, even if you look at it, I mean, you'll have listed bonds and debentures. For all of these, class of instruments, the holding period is now 1 year, and the long-term tax is 12.5%. The short-term tax is 20%, or in the case of listed bonds, it's your slab rate. So it becomes fairly simple. Let's look at the other aspect. What happens when you get into the unlisted arena, or when you look at non-financial assets like property or gold? At a glance, just telling you this, we'll get into details in just a bit, but at a glance, for anything that is non-listed, financial or non-financial, the holding period is now 2 years, 24 months or 2 years. And if you hold it for 2 years or more, then you get the benefit of the long-term capital gains tax regime. And that tax rate is 12.5% without indexation. And that's where the debates really begin. All right, we've got lots of questions coming in actually on capital gains, as you can imagine. We have a viewer joining in. Ayush is with us now. Ayush Ray. I believe, Ayush, your question is on listed equity shares or listed equity mutual funds. Tell us.
Hi, my question is related to, has the non-taxable limit for profit booking has increased from 1 lakh to 1.25 lakh under mutual fund and SIPs? And if yes, does it negate the increase in the LTCG rates, or it has got no impact on the same?
Okay, well, we really hope, all of us hope, right, that that little buffer and cushion can make up for the higher tax. But let me ask the expert. Mohit, what do you think? How much will it help?
It helps to a very little extent, Surbhi. It increases the ammunition for people who believe in tax harvesting. But honestly, I don't think so. It's a big game changer. For people who run huge amounts of profits, I think their rate has gone up from 10 to 12.5. Just the marginal increase from 1 lakh to 1.25 will assuage the matters a little, but it won't really give you a huge buffer to cool down the tax impact.
Maybe for smaller investors, it's a bit of a helping hand.
Yes, for smaller retail investors, this is definitely a good step.
But Srivatsan, I mean, I guess the market has digested that, right? The point of debate is actually not on listed equities, surprisingly so. What's your sense for listed equity shares or equity mutual funds? Anything you'd like to add here, or any advice to viewers?
See, I think on the question that the viewer just asked, right? It translates to about a net tax benefit of about 5K. And this is also assuming that you have enough investments to book a 1.25 lakh kind of profit. This requires active, portfolio management and active booking of profits and turnovers. The common man may not have enough corpus to actually take the benefit here. Whereas, like you said, the big bulls, it may not be too much to bother with.
Okay, so this is the least of our troubles actually. 10% going to 12.5% because that's not where the confusion is. Let's get to the heart of the debate, and that is property, right? So much has already been spoken about it. In fact, we've got a viewer query coming in on this as well. This is a question from Janali. She's saying, as indexation benefit has been lost now, after the budget, and the LTCG tax rate has been cut to about 12.5%. How much should the average gain be in the price of a property so that the new regime is actually beneficial? She's saying, share some examples. Janali, worry not. I've already put our experts to the job, and they've actually worked out some numbers which can be very, very helpful. But before we get to the numbers, the debate itself, Mohit, good or bad, this new regime in terms of capital gains for property?
Look, Surbhi, there can be multiple takes on it. My personal take is simplification is always better in the long run. Indexation was kind of a rebate which the government was giving to preserve your real value of money, right? It was a compensation against the price rise in the economy. No other asset class was enjoying it. Debt was enjoying it till last financial year. It got taken off. Property and gold were the only two asset classes which were enjoying this intrinsic advantage over equities or over debt or over anything else. And I think government has done a great job in terms of getting everything at par. Will it harm someone? Will it benefit someone? It will all depend on when have you purchased your property and when have you sold it? What has been the appreciation in your property? Also, one caveat out here. Gains till 2001, as in the value till 2001 has been preserved, which means your indexation or your fair value of property, whatever it was in 2001, the computation starts from there. Till 2000, if you hold an ancestral property, then obviously you need not be worried because till 2001, your property
price has been sort of preserved.
And indexation was kicking off from there.
Okay. We want to take the examples in, and then I want to ask you really how this is working out. So let's get down to the math and take an example of, a property, let's say a property for 30 lakh rupees that was purchased back in 2009. So let's get the table up on the screen, and then we'll work through the numbers to see what happens in the old regime as well as in the new regime. Remember, the example that we're taking here is a property bought in 2009 at a price of 30 lakh rupees. We're assuming that it was sold this year at a price of 1.5 crore rupees. So you're assuming that the real estate market was really good and you got a great deal when you sold that property. So now let's see how this works out. Now, in the old regime, you have indexation. So therefore, you have an index cost. Basically, the 30 lakh rupees has been bumped up to bring it up to speed with inflation. And the index cost, going by the indices of, the inflation indices which are there, comes to about 73.5 lakh rupees. This is the index cost. How much have we made by selling the property? 1.5 crores. What is the index cost? 73.5. So you just subtract and you come to the gain. The net gain is about 76 lakhs 42,000. The old regime was taxing this gain at 20% with indexation. So at 20%, the tax liability is about 15 lakhs 30,000, give and take. Now let's come to the new regime where there is no indexation. So this is not applicable. There's no index cost here. The sale value is 1.5 crore. Originally, we bought this house at 30 lakh rupees. So the net gain is 1.2 crore rupees. That's a huge amount. But the rate of tax is less. It's 12.5%. So the actual tax liability is about 15 lakh. Now, in this example, you'll see 15 lakh, 30,000, 15 lakhs. So it's not too bad, Mohit. I mean, just going by this example, it seems that why the hue and cry? Why is there so much heartburn? Because it doesn't seem to be making much of a difference. What am I missing here?
So the magic and the trick lies in your sale value, right? Out here, you have assumed the sale value is 1.5. For someone, it might be 3, it might be 4. For someone, it might be lesser.
True.
And whether you are benefiting from this regime or the regime is harmful to you will totally depend on your sale value. And perhaps we can take that.
So let's take some more scenarios. Yeah. So we'll do that. Let's take the example of someone making outsized returns. You know, maybe we'll just put those numbers up here where the gain is like, 3 times, 4 times, 5 times. So this is the second example.
Perfect.
Which we are saying, again, same thing, 30 lakh rupees property in 2009, sold it this year, but at 3 different price points. 3 times gain at 90 lakhs, almost a 5-time gains at nearly 1.5 crores and a 7 times gain at 2 CR. So now we've got 3 different variations. So now how does it work?
And the scenario is totally different for all these 3 buyers, right? So if you have sold it at 90 odd lakhs and just made 3 times your original cost, you are actually benefiting, in the old regime. In the new regime, you are paying higher taxes.
7.5 lakhs.
That will hurt. That will hurt a lot of investors.
Compared to about